Let's pull up maybe this one, which is Orient Cement, because that's the big recent news maker, and just see what that one is doing before we get to the heat map. Ambuja should also be interesting. Orient is up 6-7%. So Samina was right. This one is reacting positively. Ambuja Cement 1.75% higher. The valuation is interesting. We'll get to the valuation check in just a bit. Bring up the heat map and show you what's moving and what's not before I hand it over to Samina for what's happening at the broader end of the spectrum. Not too much happening. I think Samina will have to come in sooner, because on the gainers list, it's Maruti, Tech Mahindra, Wipro, so some bit of IT. But on the losing side, life insurance companies certainly correcting in the session today. So therein lies the problem. So not too much to write home from Samina on the large cap end. What about the broader end of the spectrum?
We've got Rakesh Arora, fortunately, so we'll quickly go across to him. But a quick mention, Orient Cement has already been talked about. Neeraj highlighted how the counter has reacted well. 6% higher, no surprises there. This will, of course, trigger an open offer. It's been in the market for quite some time now, the news, and hence the reaction being positive. You will have the counters such as a Sign, DLM responding to earnings, MCX, that brokerage note, Bajaj Housing Finance to its earnings, as some of the other counters you will be tracking closely in today's trade. Rakesh Arora of Go Advisors joins in. Rakesh, good morning. This has been in the market, the news, of course, for quite some time now, but confirm now, Ambuja Cement is acquiring a significant stake in Orient Cement. What does this mean for Ambuja? What does it mean for shareholders of Orient Cement? And will this trigger an open offer?
Okay, so it's an excellent deal for Ambuja Cement because market was widely expecting Ultratech to take this asset. So Ambuja is a little bit of surprise package here. Orient is a very good asset. They have, decent plants and a lot of limestone availability. So overall around 16 million ton they can reach based on the current capacity and the plans that they have. Valuation, this was kind of expected between 375 to 400 rupees. So it come at around 395. So I would say in the range of valuation where people are expecting. Obviously there will be an open offer for 26%. So Adani or Ambuja is buying around 46% directly, plus they'll have to buy 26% from the open market. So acceptance ratio would be around 50% or so. As the open offer price is, 395. You can expect that the stock should stabilize somewhere between 370, 380.
Okay, interesting. Rakesh, yeah, so 361 currently. So people who are quick traders as well, watch out for that. Rakesh, what does this mean for Ambuja now? And the two large players solidifying their capacity addition plan. So what does it mean for Ambuja? One, because I heard you say it's a surprise package but a positive deal. But two, more importantly, for the other other large cement companies as well, Shri, Dalmia Bharat, for example.
So, meaning Ultratech and Ambuja are taking a strong lead over the third and fourth player, and they will continue to grow much faster than the remaining tail that we are seeing. Currently, I would say Ambuja is doing better acquisitions. Sanghi was a great acquisition they did, and even Penna Cement that they did was a really good acquisition. So I'm finding their acquisition strategy to be slightly better, and they are adding good assets. So I think Ambuja could be one of the stocks for investors to consider from a longer term perspective. They will grow much faster than industry. They have shown cost control. So Ambuja is doing all the right stuff.
Rakesh, so I'm assuming this is a very clear thumbs up for Ambuja Cement. Do you have a target price on the counter? It's, of course, doing a little bit of a runaway as we speak at 581, 582. Where from here in the near term, like you said, three big and very solid strategic acquisitions. They gained control of the South market, which is what they were seeking. And I guess it's a perfect fit.
So, I won't really put any price targets. I don't cover the stock. But long term, obviously Ambuja is doing all the right stuff, so the stock should continue to do well. Having said that, one should remember that, earnings are weak. We had a disaster of results coming out from UltraTech yesterday. And Ambuja would also, have to face that weak earnings. So from a longer term perspective only, I think investors should look to accumulate.
Just before we talk to you about UltraTech, because we're, I think, fortunate to have you on the phone this morning. But just before that, what is the advice to Orient Cement investors? Would you advise them to tender in to the open offer?
I think it is better to tender in at the open offer because having looked at, the previous acquisitions of Jana and Sanghi, they were in no real hurry to merge and they did, agreements to do kind of tolling at Sanghi and even now at Penna. So I'm not 100% sure that, Orient shareholders should stick around beyond the open offer. They are better off switching to Ambuja once the open offer is done.
Interesting is Orient Cement opened 7% higher. The stock has already eased off and given up all its day's gains at the day's low point, 357 on Orient Cement. Also because we are lucky to have you on the phone, what's the word on UltraTech? The numbers were a huge disappointment. Where from here? I mean, such a big cut in terms of all parameters of the quarter. Where and what is the view? Do you think next quarter onwards there could be a little bit of a turnaround or it still looks far-fetched?
So cement prices have moved up a little bit, post the Q2, and we are also seeing a little bit of pickup in demand. So there is recovery going to be there in second half, which normally happens seasonally. But Q2 we had a lot of extended rains and demand growth was only 2-3% for UltraTech. So the fixed cost actually jumps up quite a bit, and it's difficult to model in. So that's why there is disappointment in earnings. But I think long-term investors will overlook these, small weaknesses, for a quarter-on-quarter basis. I think longer-term story remains intact.
Rakesh, great talking to you. That's the view. Cement prices are moving up. While it's been a tough quarter, markets are not being as harsh to cement counters this morning as we've seen them be to other stocks over the last few days. As expected, UltraTech is getting a gap up, 1.5% higher is what we have. Orient Cement is off the day's high point. Ambuja is also getting some sort of a gain kicking in. Investors should be excited because Ambuja has been on an acquisition spree and the acquisitions they are making seem to be better than its competitor UltraTech, and more importantly they seem to be fitting just like a glove with strategic acquisitions in geographies such as the south, which was with Orient Cement. So all in all, thumbs up, Neeraj. I think cement is looking good this morning, and this acquisition news may be a positive for the whole sector in some way.
Yeah, I mean, but interesting dichotomy between, or views between what some of the individual cement counters are doing as well. But let's quickly figure out from our experts, and while we mark other stocks, as to what their opening views are. Rajat, quick opening thoughts on anything that has stood out for you in the first 8 minutes of trade.
Yeah, I would say that if you have to buy any cement stock at the current moment, it would be Ambuja Cement because that has corrected quite a bit. UltraTech also you may look at, but from a trading point of view, I don't think Orient is going to give you anything great. Other than that, I would say that, say a hospital stock like Apollo is doing fine. So Apollo, unless it falls below, say 69.70, it is likely to move up. Caveat has it that I personally hold some shares of Apollo in my investment portfolio. Tech stocks are, I really don't find that much of things, any good thing is happening out there. One stock that looks good is Reliance. It is, once it crosses 2750, there could be some move there. So you can get into that. Say Reliance 2760 will be a resistance, and after that 2772. TCS is one tech stock. There will be some movement that can happen. 4105 to about 4110 could be possible in today's sessions. And overall, as I said, that it would be more of a range-bound scenario. Initially, maybe you will see some traction on the upside, but later on, as we have seen a number of times, there could be some selling as well.
The market's as flat can get. We are pretty much just holding on by a close, I think, at 24,800. Still not looking sustainable. The broader markets are seeing weakness, and I think that's what remains a concern for the street. Bank Nifty as well, which we were hoping will lend itself to the Nifty, is failing as well this morning. So underperformance on Bank Nifty is what we have. Lots and lots of losers. Metals as a pack is looking weak. A quick check on how some of those earnings reaction are. We highlighted a few earnings for you this morning. Balu, Forge, was it? If I can pull that one up, the numbers were phenomenal. It's a relatively small company, but even despite such a good showing, the stock sees only a 0.5% gain. Take a look at Cyient. They reported numbers that were not too bad. Autumn Investments reported numbers that were not too great. Cyient is down 4%. Like I said, the revenues were good, but every other parameter of the reporting hasn't stood out. Their order book as well has been shrinking. Their finance cost has seen a big jump. All that put together means bad news for the company. Autumn Investments, huge disappointment of earnings. The stock, for good reason, is down 8%. City Union Bank has impressed the street in every way. The counter sees a 10% up move. 361 WAM has also reported numbers that, in my opinion, were a beat. The counter, despite that, is seeing a cut of 2.5%. So 33% growth, but I don't know what the market expects out of them. But they've managed to do well. The stock still, though, a lower downtake. Lemon Tree has made an acquisition. Markets ignore it. The counter continues to sell off and sees a cut of nearly 1%. Bajaj Housing Finance earnings reportage was good. Management has said that the competition is stiff going ahead, but they do believe the kind of guidance they've given is largely doable. The counter seeing a flat sort of start in early trade. Neeraj, anything else from the broader market that stands out? I'm just surprised with what the market is doing to even half decent earnings.
Yeah, but City Union Bank, a case in point, just quickly pull up the Macquarie note and we put out what Macquarie had to say when it comes to City Union Bank. I think the view was unequivocal, if you will, and they are saying that this is a corner. They are turning a corner, if you will, or something like that, and that I've given the graphics for my trade setup. That they have, it's the first of the many good of the good quarters. They have an outperform rating. A target price is 185. Growth engine finally turns on is the point that they were trying to make. So watch out, and they're saying that the risk reward looks favorable. So watch out for that. PNC Infra is the other one. Just very quickly mark that, because MORT, which is the Ministry of Road and Transport Highways, has disqualified the company from participating in any tender process yesterday. The stock was down 20%, down about 6% in the session today as well. So watch out for these. Okay, Sunny, before we let you go, anything in the mid-cap space? I heard you mention the EMS plays. Is that the top draw, or is there something else? I mean, would you buy an Epack Durables at 5% higher today, or are there better stocks to invest in?
Yes, definitely, Neeraj. Epack is a good buy at a current level, but I would like to add one more pick based on the recent result release. So, Newgen Software Technology has reported a very strong set of numbers. So basically, a product, IT product company, which caters to predominantly banking and financial services industry, draws revenue both from annuity as well as service pack. And I feel the kind of patent and the product which the company is sitting on, I feel the fair value of the business is close to 1,500 rupees with investment horizon of 6 to 12.
Seem to have got a thumbs up on the Ambuja Orient acquisition. The stock is now turned flat on both Orient and also on the way Ambuja is doing. Another one I want to pull up is Jana Bank, Small Finance Bank. If you can pull that one up. They reported earnings yesterday. Numbers were nothing great to write home about. Let's see what the markets are doing. They are hammering it down. 7% lower on the counter is what we have. So it looks rough. It looks rough for a lot of the stocks out there this morning. MCX as a brokerage upgrade. The commentary is exceptionally positive about the outlook going ahead, and the counter trades flat. The good news is that Bank Nifty, which started the day off soft, has now turned positive with a little bit of a gain of about 0.2%. So as I was hoping, maybe there'll be a little bit of support that Bank Nifty will lend to itself. But the only sectoral green that we are seeing this morning, Neeraj, remains to be cement. Rajat, any of those cement names? I mean, we talked about Ambuja and Orient, but anything else in the cement pack that looks like a good long trade? And would you buy any banking name intraday on betting on a bounce back on Bank Nifty, because it is now gone back into positive territory?
Ultratech can be bought. Ultratech in the cement space, at least you can see a movement towards 11,500. 11,450 to about 11,500 would be a resistance zone. Only if it manages to get past that, then further upswing can be expected. And regarding banking stocks, I would say, again, City Union is the best play, because it is a very strange phenomenon. Yesterday, there was a bearish engulfing pattern that was a big one. And then today, it's a sharp jump up. So if it sustains here, put a stop loss below the today's low, that is the 50-day moving average. And your target would be somewhere between, say, 173 to about 175 on the upside. But don't forget to book profits around those levels, whatever colorful commentary that there is.
Yep, certainly an interesting one. Okay. Thanks so much, both of you. Some news flashes on your screen, just want to mark that. But okay, this is Autumn investment to acquire certain real estate businesses of NITCO assets from promoters for 300 crores in agreement to issuance of fresh warrants by NITCO for up to 225. But Autumn, of course, down 8% on the results. Keep that in mind. Small acquisition, really, nothing too large. Okay. Jana Small Finance Bank, shifting focus to that one. The Q2 net profit slumped 21% while NI saw a jump of 13%. We're joined by Ajay Kanwal, MD and CEO of Jana Small Finance Bank. Welcome to the show, Mr. Kanwal. Let's start off by the challenges in the asset quality. Talk to us about what's happening there.
So let me tell you briefly about the bank. Started 6.5 years back from a microfinance institution, which was our origin. We were an MFI since 2008. And one of the primary strategies we adopted was to convert to a secured bank. By secured, I mean assets like mortgages, LAP, gold loans, etc. And over the last 6.5 years, 65% of our asset book is now secured assets. So that's a very important thing to remember. Now, the balance 35% is microfinance, which is as of September. And clearly, as you may have heard in the industry, there is stress in the microfinance sector. Even though it's a small book for us now, we are not outside the industry. So we have seen some of that impact come to us. That has caused an elevated credit cost. And I must say, most of it was unanticipated. We could not see this coming in such a strong manner across the industry. And so obviously that has caused a rise in gross NPA. Given prudence and being conservative, we have provided, which is why net NPA is at 0.98 and PCR is at 67.5 or 67.6%. So we are well provided, we are well provisioned. And I must tell you that the way we see it, the peak of the credit cost is already past in Q2. It will get better in Q3 and further better in Q4.
So then let's try and understand this better. Is it a fair assumption or understanding for us that for now you do believe that the bottom is behind the bank and the second half of the financial year will only get better?
It is my belief that the stress in the MFI industry is man-made and not externally induced. So in the past, if you see, stress used to come from things like COVID, right, where we have no control, or it will come through some social event. There is no such reason in the last 6 months to say that is because of that. So the only thing I can think of is it is a case of over leverage of customers through variety of institutions. And I can see that if you look at all of the industry, we will see, of course, muted growth, which means people have become very careful. People have realized there's this path of growth where one doesn't follow disciplines the way they need to be followed, can lead to a problem for all. I think is obvious to everyone, which is why I feel Q3 will be better. I mean, you take our simplest example, our growth for unsecured book in the first half is -7%. So obviously, if I have degrown the book, I will have less problems anyway. Forget that the worst is already flown, because in unsecured, people, if you are defaulting, you kind of default and you actually go to NPA pretty quickly. It doesn't take long. In secured, the chance of you holding in bucket 1, 2, 3 or SMA 0, 1, 2 is higher. In unsecured, it becomes, if you're a low leverage customer, you can't pay, it goes on very fast. So I think the worst has flown in. I think the bigger question that all of us should ask is, how will the industry dynamics shape profitability, ROAs look in the future? Because growing too fast is not correct. Giving too much leverage is not correct. So which means all of us have to work backwards and rework our models, at least if you are a large unsecured player. For us, long time back, we took the bitter pill and said, listen, the best way to build a good, resilient bank is to go towards secured assets. So we built it over the last 6.5 years.
Okay, so what does this do to loan growth for you?
Let's look at the basics, which means long term is intact. So asset of 20%, yes, it will happen. Growth of secured remaining at 67, 68%, that will happen. Growth of deposit business at 20%, that will happen. So three things will certainly happen, which means there is enough and more tailwind for the bank. Now what will happen is, yes, elevated credit costs will mean lower profitability for this year. How much lower? I think we'll have a good estimate in the third quarter. So yes, remaining at, we had given a PAT guidance of 30 to 40. I think now fighting for 30 is what we are doing. I think 40 may be a bit more challenging given the elevated credit cost. But having said that, like I said, for us, could we have hit our numbers of estimated PAT by growing unsecured book in the first half? Yes. But I think that would have been a very short-term decision. We decided not to grow because we wanted the environment to settle down, to clear up. If it does mean a quarter or two of lower profits, I still think so that is a better decision for the bank, which we have taken.
So there's some bit of margin pressure, right? Is that deposit driven? Where is that really coming from, and what do we expect, or what should we expect going ahead?
The reason for the margin compression is a drop in unsecured book. It's a high yield business. High yield business has gone negative. Instead of growing 2%, it's gone -7. So obviously, and with some increase in delinquency, so interest in suspense also has caused the challenge. Yet we are at 7.7%. We were at 8% in March. So it's not a huge drop. But yes, I think from 7.7, it should get better. Because as we keep stabilize unsecured, which means the growth rate will turn slightly positive, let's say in the second half. So obviously, things will get better. Cost of deposit, I must tell you that we don't see it causing a challenge to us. And we don't see it growing from here. We actually see it slightly moderating downwards. And this is irrespective of any MPC decision, because we have actually cut our deposit rates from 1st of July. As you would read in the numbers, our deposit growth first half has grown 12%, 10%. Time deposit at 9%, CASA at 12%, total deposit at 10%. So which is a very healthy clip. We are not very, we are working hard at it, but we certainly would add another 10% is the way we look at it. And we are not increasing the cost as we go into second half. So I think NIM will get slightly better. I'm very quiet about whether 7.7 will go back to 8 or not. Because see, like I said, one quarter safety will give us longer term safety. I rather go with that attitude. If I find the answer, I will go for it. But if I think that unsecured has to remain slow or just stable and not grow at all, and that is the right answer for the bank, then we would even do that.
Guidance metrics spelled out do you believe that's how it will shape up?
Yes, I think very close in every aspect, Parsh, and rightly calculated also. And I must tell you that if you pass with that result, then I would think that, We are in the business where you will have ups and downs, but I would take that as a good result for us if we do end up achieving that.
All right. Mr. Kamal, thank you so much for taking the time out and all the best for the quarters ahead. The stock, unfortunately, down about 7% on that miss. But a stock which is doing very well is Epack Durables. Now, of course, the announcement warrants this kind of a performance. They've entered into an agreement with a global leader in consumer electronics, Hisense, to manufacture air conditioners and home appliances in India for the world. Mr. Ajay Singhania, Managing Director and CEO of Epack Durable, joins us right now on the show. Mr. Singhania, congratulations on this and thanks so much for joining in. Let me first get this. Okay, actually, tell us a bit about this agreement that you signed. Let's start off with that.
Okay. So good morning, first of all. Thank you for letting me in. So this agreement, what we signed with Hisense Global, is around creating a manufacturing facility in India, a dedicated facility for Hisense, wherein we manufacture their air conditioners and other appliances like washing machines, going for refrigerators and the small domestic appliances, to be marketed within India as well as outside of India. So we are looking at both domestic and export opportunities herein for Hisense and their associated other brands. So the whole idea is that once we create the manufacturing dedicated facility for Hisense, which would be set up in Sri City, the technology, the tools, the designs, and the latest manufacturing capabilities will all be transferred to us by Hisense. So there will be a lot of strategic alignment in both setting up the facility, running the facility, and then manufacturing goods as per their design.
Mm-hmm. So Mr. Singhania, just spell it out for us. I heard you say that it's air conditioners, refrigerators, and other washing machines and other durables. So what is the nature of the deal? What is the size of the deal? And do you also manufacture for India, or it is only for the rest of the world?
So first of all, in terms of the size, in terms of investment, we're looking at investing close to 250 crores. So that's $30 million in phase one, setting up a facility for a capacity of 1 million air conditioners and almost 500,000 of washing machines. And this quantities we plan to achieve, Hisense plans to achieve by FY 27-28. So that's 3 years. The first set of production will be rolled out from June of next year. So that's in terms of the capacity and the investment. And in terms of top line, we're contemplating a top line of reaching at least $1 billion in the next 3 to 4 years. So the products manufactured would be sold both within India as well as outside India. Hisense is planning to launch their products in the India market in a big way. They already entered the India market 3 years ago, have been testing the waters, understanding the market, and now they feel they're very confident that they can actually capitalize on the growing economy and the growth in the market which we see for air conditioners and other products. So they look at India market in a big way, and then definitely the supply chain opportunities outside India are humongous. So it is for us the opportunities in both the directions.
No, sorry, I'm just trying to get this straight. I heard you say that you would invest 250 crore rupees. Is that right?
Correct.
And did I hear you say that you expect $1 billion of revenue from these capacities in FY 27-28?
No, not a single year. So we mean within 3 to 4 years, accumulated top line of $1 billion. So
what's the annual ROI for the full capacity? So let's assume in FY 27-28, if you're operating at full capacity, what is the revenue then you get from that? Any estimates?
See, the estimates in that sense would be quite difficult to do right now, but what we are seeing is 1 million sets of air conditioners and 500,000 of washing machines. So that probably gives the picture in a more correct way.
Yeah,
At the same.
No, but I'm saying that has a value as well, right? So is there a rough value of what 1 million pieces of air conditioners and 500,000 of washing machines add up to in terms of revenues, maybe roughly?
Roughly, that would be like, say, close to 2,500 odd crores. 2,500
odd crores. So, wow, okay. And this is the only, Mr. Singhania, just getting the numbers out of the way, is this the only investment that you need to do for the capacity, or do you need to incrementally add some more capex over the course of the next 2-3 years till the time the capacity comes up?
Yeah. So the beauty of the alignment is that this new facility would be manufacturing the finished products for them, whereas our current facilities would be utilized to supply a lot of components required for this manufacturing. So at the same time, our current facilities will be utilized to supply the moldings, the other parts which we already do. So it's like a two-way benefit for Epack, wherein our current facilities get utilized and the new facility definitely also the finished product as per their design.
Yeah. Okay, I'm coming to that part, but just before that, Mr. Singhania, do you need to add any other capex aside of the 250 crores for the new facilities, or is 250 crores the only capex?
So that's the phase one of the capex. Going forward, as we ramp up more capacities, looking at the global pull, more investments will definitely be required. But this is not, I mean, this is just the starting point. We believe that there's a lot of potential to grow this beyond the capacities we are contemplating right now. So more lines would be definitely be added.
Okay, more lines will be added as well. Okay, and just last couple of questions, Mr. Singhania. One, is this deal that has been struck at similar margins and similar ratios that your other, the regular businesses, or is it higher or is it lower?
See, currently we estimate to achieve similar kind of margins, but on top of it, we look at gaining more from the deal in terms of the designs, the sourcing capabilities. So the supply chain benefits of Hisense being a global leader, their sourcing benefits will definitely translate to our current facilities as well. So I think that is something more important for us because it will help us rationalize our current investments also.
Got it. So Mr. Singhania, you ended March 2024 or FY24 with a top line of about 1420 crores, if I'm not wrong, right? That was the consolidated top line. With the growth that you envisage from this deal in your current capacities, plus the other work that you're doing, plus the new capacity coming on stream, as a result of this deal, are the targets for, let's say, what you do in FY27 or 28, are you reviewing them? What is the new realistic or aspirational revenue target that you're setting for yourself?
See, two things here. One, a couple of weeks ago or a couple of months ago, I already made an announcement that Epack is looking to grow beyond 5,000 odd crores by FY27-28. So that's the kind of target we have in mind. And with this kind of a deal, we definitely are looking to surpass those numbers. So we definitely are on the right track. And such associations not only help us put India on the global roadmap, but also bring those technologies which will help us scale the production capabilities and manufacturing capabilities required currently, more urgently, the way the market is ramping up.
Mr. Singhania, I'm very happy for you, but I'm saying this 5,000 crores target was done or given keeping in mind the Hisense deal, because you would have some sense of that. And I heard you mention that you will surpass those targets. Will you just barely surpass those targets in FY27-28? Or do you reckon that there is a chance of a substantial improvement on that because of the Hisense deal?
I'll keep that open, but definitely we are looking at surpassing those numbers.
No, but even 5,100 is surpassing, even 6,000 is surpassing. I'm just trying to understand, is it barely surpassing or is it slightly better?
Surpassing substantially, definitely.
Substantially better.
Okay. The market definitely seems to be in the right track.
You don't need any capital raise for the same, right? You are adequately funded, or do you need to raise some equity capital?
Currently, we're adequately funded.
Adequately funded. Okay. Well, very good deal. Remarkable. Congratulations, Mr. Singhania. Wishing you all the best for this.
Thank you so much. Thanks.
I don't know whether you were trying to corner him or he was.
No cornering. It's just, see, it's a great deal for him.
Yeah.
Because at 1420 crores, Samina, March 24, they're talking of 5,000 crores. That's trebling revenues in 4 years, let's say, right? Trebling revenues in 4 years. And this deal helps them surpass that, and it's done at the same margins. 250 crore of investment, he's saying he'll probably garner a top line of 2,500 crores. It's quite remarkable, this deal. No wonder the stock is locked on an upper circuit.
And I guess production, like he said, starts in Feb or March 2025. So it's a big facility that they're putting up. This is a big, big deal for the company, and of course opens up a whole global market share that they could potentially gain, not just for the next 3 years, but consistently grow as it goes along. But of course, it's getting closer to 10 a.m. and it's all eyes on Hyundai that will list in a few minutes from now. It's a mixed bag. The grey market, which was trading at a discount, has now finally moved to a premium this morning. Puneet is standing by with what should we expect, and then Astha joins in to talk to us about the listing itself. Puneet, first over to you.
Well, thanks for that. So, as you rightly said, the grey market premium has, got into the positive this morning. And the fact remains that it is India's largest IPO. So we have a couple of brokerage notes as well that's come in this morning before even the listing has happened. So we have Nomura. They have initiated coverage on the stock with a target price of roughly about 2,472 rupees per share. And that's almost a 20% upside from the current market levels. And what, the brokerage has been saying is very key, because they have said that, Hyundai has been able to predict the consumer shift that happened towards, SUVs back in 2015 as well. So from just about 13% SUVs, it's moved to roughly 67% of SUVs now for the company. And they expect that the company is also poised for long-term growth with SUV mix of about 67%, with improving average selling prices, every year, as well as the improving market share of the company, currently around 14 to 15%, which is a number 2 player. They've also said that, having an Indian management over the last 2 decades has been one of the key things as well, and a key advantage for the company to adapt to the local market. And they are also best positioned in the passenger vehicle space to handle any kind of tech transition that might happen, which we have seen over the last decade as well. Now, they're estimating the company to deliver about 8% volume growth CAGR over the next couple of years until FY27, and that will be driven by 7 to 8 model launches in this particular time frame as well. They're also expecting that, for overall EBITDA margins will improve to 14% by FY27 versus 13.1 that I reported for FY24. We also had another positive brokerage note coming in from Macquarie this morning. They also have a buy with a target price of 2,235 rupees per share, 14% upside. And they have mentioned that, Hyundai's market share has been, in the compact and mid, SUV market has stabilized and will improve from year on as well, despite significant competition from the likes of Tata Motors as well as Mahindra and Mahindra. They've also mentioned that, they've outperformed its sister company Kia as well in this particular time frame with the models such as Sonet and Seltos for Kia. And they are also, Maruti is also currently facing risk. Lower market share, about 37% for YTD FY25 as well, because of model sharing with Toyota. They are anticipating that, over the last 5 years, it has, higher realizations compared to Maruti as well. And specifically, they mentioned that, over this particular time frame, that they believe Hyundai deserves a higher price to earning multiple when compared to Maruti Suzuki. That's also because of premium pricing and better models compared. So finally, what they expect, they're estimating a 12% PAT CAGR between FY25 and 27 for someone like a Hyundai, and also implying that roughly about 25 times price to earning for Hyundai, which is a 15% premium for Maruti versus compared to Maruti for FY27. So overall, a very largest IPO listing today. It'll be interesting of what it does to the other listed players as well, and how the strategy changes. Back to you.
Right, Puneet. Thank you very much. The world is watching. In fact, I saw a couple of the global headlines across global publications where it said that investors will be closely eyeing Hyundai as it lists on the exchanges today. Asta Jain, Senior Research Analyst of Hem Securities, now joins in. Asta, good morning. Thanks for joining in. Asta, what are we expecting? We've been swinging between losses on the grey market to gains this morning. Where are you anticipating the Hyundai stock to list at this morning?
Hi, good morning to all of you. So talking about this counter, first of all, what we have given as the recommendation was a subscribe from long-term point of view, not from the listing gain point of view. And there were a few factors that were behind those recommendations. First of all, we didn't like the valuation because the valuation at which the company brought the IPO, we think that they have left nothing for the investor on the table. So that was not to our liking, and that's why we were not expecting any sort of a listing gain. Another point is that this is one of the biggest size IPO we have seen, and in the history we have always seen when such kind of biggest size IPO came, except Coal India, I think none of them have been able to garner any kind of listing gain premium. So that was another point which was really not allowing us to give it for the listing gain perspective. Now talking about this counter, what we feel for this listing, what I feel at this juncture of time, this listing may be at the issue price or something below than that, not much, because I've always been saying these to my clients on the various channels, that the kind of subscription which this IPO has garnered, only strong hands have put in their money into it, because they know in case of any fall on the listing, then they will not come for selling. So these are the strong hand, and when some strong hand subscribe to the IPO, then the supply will be very less. This is what we believe. And I had this point in my mind at the time of IPO recommendation also, maybe the supply crunch will be there, and that's why the issue will be able to maintain its IPO price or the issue price, as well as might be some discount can be seen, but not much premium. So now my idea here is the kind of momentum we are seeing in the market. In fact, the markets was also not good. When this IPO came, the market conditions were not good. And even we have seen Maruti has corrected a lot. So keeping all these things in mind, we have given it subscribe for long-term rating. Now, what we are expecting as a listing, we are expecting the listing to be somewhere at the issue price and minor lower than that. But I think in the later course of a business, I'm keeping my fingers crossed while I'm recommending this, but in the later course of the business, it should settle somewhere near the issue price or some more premium like that. So now what should one do who have not, applied in it? They should wait for some correction. Maybe 1840, 1850 is a good level to make an entry into the counter if at all it will come to those levels. And those who have already got the allocation, they should keep it in their long-term portfolio, because after all, Hyundai is a brand. It is a number 3 company at the global level, and all big funds have they put in money into it. One thing which I want to draw your attention towards is that BlackRock and Fidelity, these are 2 funds that they never, and they come very, frequently, not they put their money into any big IPOs in the Indian market. So they come very less, and big funds have their interest into it, because after all, it is a brand, and they have put in into Hyundai India, which is a looking after the Indian growth story. So I think this IPO will not fall much. I mean, the issue price, it will settle somewhere near the issue price, or a minor dip can be there. But we are recommending to buy it at the lower end of around 1800 to 1850 odd levels.
Also, so the 1800 to 1850 levels is looking like a good entry point. The price discovery is underway, and it seems like the listing is going to be at a discount. 1931 is what we're expecting versus the listing, the subscription price band of 1965. While you're at it, Asta, so clearly don't expect listing gains. What you should do is look at the stock from a long-term structural strategic portfolio buy, and if you couldn't subscribe to it during the listing phase, today may be a good time to add to that stock, is what Asta believes. Asta, while we have you, we still have 2 minutes to go before we hit the listing. A quick word on Vari Energies. A phenomenal oversubscription on the very first day, both on Vari and Deepak Builders. Quick view on that.
So we are recommending Vari Energies because the kind of business they are into, it is very hot right now, manufacturing solar PV module cells. And the company is one of the biggest company into this space. In fact, few months back, Premier Energies IPO came. But this company is double the size in case of profitability I'm talking about, in case of the installments and the capacity installed they are having. So I think this is a very good IPO to invest the funds in. We are recommending it to for the listing gain as well as long-term purpose. Talking about Deepak Builder, it is a very small size IPO, and such kind of IPOs may garner some sort of listing gain. So we are recommending both the IPOs for the listing gain as well as long-term perspective. But our major choice, or my first number choice, is with Vari Energies at any point of a time. So we are strongly recommending this counter.
One quick follow-up there, Asta, on Vari. Let's say, what is the 2-year outlook like? I mean, you are sounding very constructive there. People are subscribing to the IPO. What should they watch out for? Listing gains or holding gains?
So, Neeraj, as you know, most of the retail investors, they only look after listing gains.
Which is why I'm asking this, yeah.
Yes. So for those retail investors, if they really can wait for the long term, because some new capacity has been going to come within a year or 2. And I mean, these capacities are on a very good technology base that this company is coming into. So I think if they can wait, then definitely it will be a good long-term portfolio candidate also. So my idea is for the retail investor, book partial of it and keep the partial quantity in the long-term portfolio as well, because I think in the long term, it will yield strong returns.
So one final question, Asta. Circling back to Hyundai, however you want to pronounce it, but I'm calling it Hyundai. So circling back to Hyundai, would you believe that there are other auto companies which are better bets? I don't know if you track autos per se or only IPOs, but let's assume that you're looking at Hyundai versus its peers. Is Hyundai a better bet if it starts off lower today, as it seems to be, or are there other auto companies, four-wheelers, which are better bets?
So if anyone want to bet in only the passenger vehicle market,
exactly,
that is the car market,
exactly.
It's only Maruti. And I tell you one thing, these global funds, they are always looking for such kind of strong growth story which India is giving them. Otherwise, they would have put their money into the Hyundai global company also. But looking after the growth story of India, I think they have come into it. So I think we should give this also a chance. And if someone keep both the counters, that is Maruti as well as Hyundai in their portfolio, so they are almost getting 55% of the market share in the passenger vehicle market, because these two together constituting of around 55% 25% market share. My idea is, so if anyone lose the share, then it will be the gain for others. These are number one and number two. So I think both these counters are looking good to us. And I'm not comparing it with the rest of the peers, because in the car makers, I think these are the two competitors. So I think one can look after Maruti also. So these two are such counter that one can keep both of them in their portfolio. After all, Hyundai is a brand and it is a global level brand. So I think everyone wants to keep such kind of auto company in their portfolio.
Thank you, Asta. Good talking to you. It is still the preferred bet is Maruti, but in a few seconds from now, Hyundai will be listing on the exchanges. The expectation is it should be getting listed at a small discount. But there's a good chance that investors who didn't get their hands on this IPO in the subscription phase may actually look at allocating incremental capital to the counter. So a good possibility that even if it gets a flat start, there could be a good chance that it may end the day on a positive note on back of buying action that could emerge in the day. It is now finally have listed peers to compete with directly, the likes of a Maruti, who do appear cheaper on a valuation front, and M&M, which promises stronger and better growth. But it's taken it 26 years to in India to finally hit the market. They're waiting to ring the bell, but as you can see, it's a good sort of diversified senior management of Hyundai. And as the street would have, okay, so there you go. It did start off negative and it's charting its way into positive territory. Exactly what I thought it would do. This is not too bad. Flat start. The buying could come in over the next few hours. Investors who haven't got their hands on it may look at acquiring it. 1965 was the upper price band of the subscription. The opening is rather flat this morning, but not as bad as the 3, 5, 7% discount that we were or have been seeing in the grey market premium on the counter. Settling around 1940 is what we had. The much talked about 27,000 crore IPO that opened in the markets, the largest of our times, is what we have. Neeraj, I don't actually know how to react to this.
Yeah, now slipping, Samina. Let's cut that audio out, but now slipping. Hyundai, 1.792%.
Let's also see what Maruti is doing while we're at it. Just if we can get also Maruti next to that or somewhere on the side, it'd be good to tell how the company is doing. There are positive brokerage reports and everyone's constructive on the stock from a long-term holding investment, no listing gains. There'll be a little disappointment, no, Neeraj, for the 2.5 times oversubscription. I know that the retail participation was muted, and QIBs who have, of course, oversubscribed can't exit the stock anyway on listing day. So I guess there is no disappointment because retail participation was anyway muted, to say the least.
Yeah, so for retail, maybe not as much. Samina is absolutely right, and we'll get in Ajay Srivastava in moments from now to get his comments as well. But on Hyundai, as Puneet mentioned, like for example, today we've gotten a note from Nomura as well as from, I think, Macquarie, if I'm not wrong, and they have said that they have initiating this with an outperform rating and in the target price of 2235, which implies a 14% upside to the issue price at the upper end. It's not moving thus far, Hyundai, in any fashion whatsoever towards those prices. It's a large IPO. You would argue a successful IPO because it's gotten subscribed all well. Now let's wait and watch over the course of the next 12 months. Does it do better or no, Samina? Any guesses?
I think it'll, a year out, I think the price, actually this is such a tough one because it's not coming at a deep discount, right? It's coming very fairly well priced, but there is a good possibility a year out the stock will be trading higher than its issue price, but only because the growth trajectory looks strong. Electric vehicles is the big play, and in the last couple, and they also have very healthy margins. So industry-wise, their margins are healthier than its peers, even though there has been a slight decline of the auto majors, including Maruti and Hyundai, in terms of market share. But very aggressive expansion plans. They're sitting on 15,000 crores of cash, which will be invested in new sort of innovation in that sense. Ajay Srivastava, do we have him ready to get a quick view on it? Ajay, good morning. I'm going to sort of barge into your talking point conversation with Neeraj and have you a quick question with you on Hyundai's listing. Do you think the price on Hyundai 1 year out will be higher than its listing price today?
I don't think so. And the only reason it might get higher in the middle is because there's no retail participation. So you will find some HNIs, some portfolio balancers coming in to buy it, but I do not believe that this price should be higher 1 year down the line, given what economics are, and given the way it's been a pure just OFS at the end of the day. It's not the money going to the company to set up a new plant, expand anything. So, and number three, that if you look at the philosophy of the investor, they pulled out the dividend right before the IPO. All the cash already, 40% of cash was pulled out at that point of time. But it tells you the continuing philosophy that's going to happen is that this is going to be bleeded out for the parent at the end of the day. That's what's going to be. They just used it to list the company, take the money out at the end of the day because we have a higher premium in the market. It's not that the money was kept here to grow the company, buy ancillaries, build businesses here. It's going to be a continuous process of money out to support the parent company. So I think investors will well want to say, initially there may be some amount of upside because nobody owns it in retail and HNIs and so on. But eventually it'll come back to toil and see what happens with promoters and companies like this who just encash the market and walk away with the money.
Okay. Point well noted. Ajay. Ajay, stay on.
Good morning, Yash.
Yeah, good morning. We need to slip into a break. In fact, wrap up India market open. But talking point today is with Ajay Srivastava. Stay tuned. We'll be right back.
I would like to congratulate NDTV on its World Summit 2024. This morning, the Honorable Prime Minister inaugurated the session, and it was a very inspirational talk by our Prime Minister, talking about not just India's role on the world stage, but also how India can play a role in the entire humanity across the globe. How India's aspirations can be the global or the world's aspiration. I think Indians have taken a lot of pride in seeing how India has been built in the last 10 years. Watching Prime Minister extol the virtues of what has been achieved and what lays ahead for India and the world was truly inspirational.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries, shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Thanks for tuning into Talking Point. I'm your host, Neeraj Shah. The case for a chat today. China wars continue as FPIs keep out, or could that change? Will the pullback move continue, or rather will the pullback, or rather the drops continue amidst a muted Q2? Will cement stocks consolidate further? I think a lot of questions, and the answers to some of these with Ajay Srivastava. He joins in right now on Talking Point this time. Ajay, great having you. Thanks for joining in. Ajay, it's an interesting thing. He was talking about how the outflow from EMs like India and some others have gone to China month to date. It's actually not even the Chinese markets which have gotten flows. It's Japan. So what's happening really in terms of global flows, you reckon?
I think one, I'll tell you a little later in November, because just after Diwali, I'm traveling to Hong Kong and China. So to get a first-hand feel of what's happening in those markets and companies. So I think I'll be in a better position to tell you. But I think what I can tell you is as follows, that everybody is wary of China at this point of time. And everybody is wary of the results which are going to come out of November 5th US elections. If Trump wins, it's going to be war with China on the economic front. And I think all the FIs, by and large, at this point of time, as I talk to them in the US, are going to wait out to see what happens on November 5th. If Trump wins, is China trade is off the table, immediately off the table, and you see a pull out, in fact, of funds coming out of China. If, of course, if Trump loses, you will find that money will start to go back to China. So I think it's going to be wait and watch till the US presidential election. Having said that, it's so difficult to make money in China. You don't know what's happening to the companies, the accounting books. If you read some of the balance sheets of the companies, literally very difficult to understand. And the political, you saw what happened to Jack Ma, the global poster boy. Immediately he's gone back to, I believe, a teacher now. I think that's what I'm told. So I think, given the political imponderable and the US elections, I think one should just wait to see how China plays out, and on the contrary, one should wait and see how India plays out, because particularly the pharma market of India, if Trump wins, is going to fly like a rocket at the end of the day. So China's story, I think, is wait till the US election and then take a call as to what happens. If Trump wins, of course, it's off. China investment is off the table.
Got it. So, okay. Having said that, the essence, Ajay, that I'm trying to get to is that the way FI inflows have a limit after which they stop. What about outflows? It's not that FIs were seriously overweight India, right? I mean, I think 16.2% or thereabouts was not overweight position in any fashion whatsoever. When does this bout of outflows stop? It's a guess. It's a hypothesis. I'm asking you to make one. When does it stop, and why, and what could lead to it stopping?
See, there has to be a meaningful correction in respect of the share prices vis-a-vis their earning potential. And that's what is holding back and continue to see the outflow is that, how do we make returns on a country where our companies are growing less than 5% and but the Ps are at 40s and 50s? Indian companies by and large should be at Ps of 15, 20, 25, most of them, given their growth trajectories. We are at P of 40, 70, 80, and we see listings at 100 Ps and 80 Ps and so on and so forth. It's absolutely ridiculous. So I think if you forget FI, even if you're a domestic investor, a lot of the good investors who are already invested would have not invested too much in the last 6 months in this market. On the other hand, you're finding that the risk issues coming from West Asia are giving gold and silver the boost that they always had. For the first time, I can see the talk chatter when I meet people is no more about equities. Yeah, we missed the gold thing all about. Gold was supposed to be fuddy-duddy. It's what your mother told you. And I'm grateful to my late mother who told me this advice, to saying, whatever you make 10 to 15% put in gold year on year at that point of time. There were no gold bonds, so it's buying physical gold. And I think now a lot of investors realize that their portfolios are unbalanced. They don't have any gold, silver in their portfolios. And so you will see in the next 6-9 months that rebalancing will continue. People are going to get out of equities or not invest surplus in equities and try to build back gold. So even FIs are doing the same thing. They're going into commodity, they're going into gold, they're going into silver futures at this point of time. And therefore, this rebalancing has to continue till our share prices become more realistic and realizable in context of our economy and growth. So I don't know when it will stop, how much it will stop, but I certainly believe both domestically and internationally, the big rebalancing into gold and silver is now on its, I think it's on the first big leg of happening. People are now committing larger and larger capital to gold and silver, and including debt securities compared to equity market. So balance, it's not just about your equity market, it's also about what's the potential return in gold, silver, and debt securities.
Yeah, that's true. Well, certainly an important point and something that people should take note of. Okay, just a small detour in this conversation, but we have to do that because NDTV Network has taken a giant leap with the formal launch of the new product NDTV World. Let's cut across to Mustafa Wajid of Billion E and Gagandeep Sethi of Pernod Ricard, who are speaking at the summit.
Urbanized transportation. Now, whether this billion comes in a year or in cumulatively over 2 years or maybe even hopefully in a month as we go forward, this is something that we will see. Just to mention one thing, India's transportation requirements have multiplied by 3 times in the last 10 years. It's normally assessed in what we call as ton kilometers. And if you see the government publicate reports on this, 10 years ago we were at 1 trillion ton kilometers. Last year we crossed 3. So it's growing faster than the GDP. And that's because of increased urbanization, increased, I would say, consumerism, and also the e-commerce sector is also contributing to it. So that's something that we need to remember. And at Billion E, we would like to see how to reduce not just the decarbonization, but also make this transportation more sustainable. Thank you.
You can, of course, watch this entire conversation live on our social media handles as well, all through today too. But Ajay, coming back to the conversation, it's an important point you raise, rebalancing of portfolios. Now, the last 3-4 years, people have been all equity, all through and through. Now, let's assume people are rebalancing. There is pain in the mid caps and the small caps in the last few days. You reckon that will continue, or at some point of time, some high quality mid caps will get bought into, Ajay? Because this quarter, Ajay, I've heard dichotomous statements, right? There are companies which are talking about not a great number today, but we were talking to Epack Durables, an EMS player, who's just told us this morning that from 1,500 crores of revenues in FY24, with a new deal that they've signed with Hisense, he expects to go well over 5,000 crores of revenue by the time FY28. So that's a 3x jump in revenue in 4 years. That's quite stellar, really.
Well, I wish I could be the same, seer who can predict 4 years. Okay, believe me, I can't predict what's going to happen to my life tomorrow morning. 4 years is too long a time. I like to live my life peacefully, saying this year what I'm going to do for my life. 4 years, okay, maybe so, maybe not so. And on all the boards that I work with and I represent, I think one thing I really dislike is CEOs telling me everything is going to be very good 4 years down the line. But you know what? Current year is a problem. Dude, you can understand what current year is going to look like. You're going to tell me 4 years is a certainty. Current year is the uncertain element. This is the standard talk that you hear in investor community, in the boards of the companies. Every single CEO tells you the same story. This year I do not know, but third year from now, I will grow at 40%. So I would take it to the pinch of salt at the end of the day. And as you ask the mid-cap, see, mid-cap stories are meant to be ridden up to a point and then you're off. They are flavors. They are a trajectory point till the price is discovered by the market. Once price is discovered, then your ride becomes choppy, then it's performance driven, then you've already taken that. So, so the game of mid-cap is all about changing horses, jumping horses. It's not about trying to ride the same horse till sunset comes. That's only happened in Westerns where the hero goes into the sunset. In mid-cap, if you go into the sunset, you're going to lose terrible money. So I don't know if I've answered a question. The question, really, the answer is that if you've ridden a good ride with the mid-cap and you're seeing high PEs, and there's no way the companies can grow at 70, 80, 60% in the next 3 years, you need to get off those mid-caps and move to newer stories. Good part, India's IPO has given you a lot of newer stories, a lot of new discoveries are coming into place, and therefore some are good quality long-term stories like aviation, hotels, which give you continuous trajectory. But mid-cap, you need to get out of the horse. It's a galloping horse. You have to get out, ultimately book your profits and move on. One in few may go on to become a mega bagger and so on and so forth, but 3 which can cut you halfway or both can just kill your returns. So my advice always in mid-cap is, you made a good return, you rode the first ride, second ride, now get off, let somebody else come in place, but you need to find newer horses. It's a tough game, but it's a game of newer horses.
Okay. Fair call. The point well taken. The theme that was expected to start post the new government coming in is infrastructure. We've seen a clutch of order wins, not necessarily very large ones, but decent ones for the mid-sized companies as well. I heard you say mid-caps are a flavor. Are infrastructure mid-cap companies a flavor, or is that something that you're looking at slightly more constructively?
No, we have got investments in particularly two large mid-cap infrastructure companies. We have got investment, and they are primarily debt-free companies. That's one of the key things we look for is, if an infrastructure company, you got debt, you got a problem. So I think the first criterion is, as long as the company remains debt-free, these infrastructure development companies are going to do well. The moment they load up the debt and they start to take primary risk on the projects, you got a problem sitting here. And look at the other context of infrastructure, the power sector, the end companies which are robust, which are the people like NTPC, that I'm not saying recommending any name, but I'm just saying the end power generation companies, the transmission companies, including a REIT, which has done so remarkably well for us in our investment portfolio for years, which is a transmission REIT. I think those are the places where you have better and easier, simpler plays to happen with quite a quality return with less uncertainty. So the way I would play infrastructure is go for the power sector on the generation side, transmission side, go for the infrastructure on MNC companies, which have got proprietary technologies to come to India, whether it's in sustainable environment, whether it is railway coaches or engines, and so on and so forth. So I think for Indian infrastructure mid-cap companies, the bar is going to be very high, and our bar is they need to be debt-free and growing at 25% per annum. And there are only 2 companies which have qualified for it so far. They've done reasonably well, but beyond that, I think it's anybody's game that what this company can do, cannot do. Debt will kill these companies. And pure execution companies, civil construction, that's a disaster. You've seen L&T's construction. If L&T is making 2 to 3% margin, can you imagine what a smaller company will do? So I don't think it's a place where you want to put your money in smaller infrastructure companies. And a lot of them do a lot of civil work, which is a 2 to 3% margin business.
Okay. Well, and what will feed infrastructure is cement. So, let me try and get in, or let me get in my colleague Mihika, who talks about the big cement deal that has been announced this morning, and then we'll get an Ajay Srivastav's view on the same. Mihika, the Ambuja acquisition of Orient.
Good morning. So Ambuja recently in the morning has reported that it will acquire 46.8% stake in Orient Cement. Now the entire acquisition value is at 8,100 crore rupees and will be funded totally via internal accruals. Now the company will be making an open offer for Orient Cement at a share price of 395.4 rupees per share, which is at a 13% premium to yesterday's close, and it would trigger 26% of public shareholding. The acquisition will add 16.6 MTPA of capacity to Ambuja and will take its operational capacity to 97.4 million tons per annum. A little bit about the deal. When you talk about just the cement capacity that Orient Cement has of 8.5, the deal is valued at $114. But when you talk about, when you take into consideration operational capacity, cement capacity, as well as the potential capacity, the acquisition, is valued at $58 per ton, which is lower than the greenfield setup cost of $110 to $120 per ton. A little bit about Orient Cement. Its current cement capacity stands at 8.5 MTPA. It also has ready to implement capacity of 8.1 MTPA and a clinker capacity at 5.6 MTPA. The potential cement and clinker new capacity stands at 6 and 4 MTPA respectively, and the company has presence across Telangana, Karnataka and Maharashtra. When we talk about benefits for Ambuja Cements, well, it helps Ambuja increase its presence in the south and west of India, and it can increase its pan-India market share to 2%. And Orient also has large-size, high-quality limestone in Chittorgarh, which will support the North India capacity of 6 million tons per annum. There's also acquisition will also help improve the overall return of capital of employed for Ambuja Cements. Lastly, when you talk about benefits to Orient Cement, well, the opportunity will improve operational efficiency because of a higher green power mix and domestic coal linkages. It also could lead to a clinker cost reduction potential of 150 rupees per ton, which helps the company achieve its rupees 1,500 EBITDA per ton target by FY28.
Thanks for that, Mihika. Ajay, consolidation seems to be the name of the game here. But the top two are now taking a serious lead over the others. What implications for investors on the space?
Investors is stay out of cement, continue to stay out of cement, remain out of cement. Look at the capacity addition in the market. It's if you look at this economic, it's a purely undifferentiated product. By and large, I don't think you care that your house you bought was made of Ambuja cement or XY Ultratech cement. I don't think you care a damn about it. Quality is almost similar. Its capacities are going up in the market. There's no differentiating aspects to this product thing. It's linked highly to infrastructure, real estate, which is okay, nice, but the capacity expansion, everybody expanding 30, 40, 50% capacity. Where do you take the price up? How do you create a positioning in the market? This is classic, absolutely classic, uninvestable kind of an environment for a product at this point of time. There's so much happening in this country, differentiated products, differentiated new industries, new e-tech companies. Why would you want to go to the old fuddy-duddy cement, which is not going to give any return? It has not given a return in 5 years. It's not going to return next 5 years. I can tell you this much. You consolidate, you pay. Why are you consolidating? Because you think you're going to get market share. You're going to get a little bit. The other guy is also big enough. And the best part is all players are big enough. And therefore, each of them can increase capacities. Each of them can price you out of the market. So I think it's one of the games where an investor is always losing in. It's nice sales size for a promoter, but for an investor, I'm not sure it's the right place. There's nothing there for you, my friend.
Okay, avoid cement. That is Ajay Srivastava's call. And standard disclaimer, of course, we spoke about Ambuja's acquisition of Orient. NDTV is owned by the Adani Group. So keep that in mind. Okay, final question, Ajay. In a skittish market, where is it that you find favor? Could banks do the trick? There are a lot of reports and on that, and HDFC Bank's results yesterday seem to have induced some of the bulls.
Well, it's strange that no one talks about it, but the trigger in the big banks is not, we are not looking at banking as a trigger, is all the other subsidiaries they own. Whether it's the AMCs, whether it's the insurance companies, whether it's the life insurance, health insurance companies, whether it's a financial services company. If you look at it, what we see, the net accretion in value in these banks, which are holding companies, literally speaking, will be significantly higher because what's happening down below in the investment companies. To the point, in 3 to 5 years, these will become significant drivers. And hope and end that someday regulation changes and these become demerged companies. But the game in banking, and it's really the game in top 2 banks, really speaking, is the underlying subsidiaries which are going gangbusters. You can directly invest in few of them, which are like the AMC of one bank and so on and so forth. Some places you can't directly invest in it directly. But the trick is that these banks, as they become a holding company for something which is growing at 30, 40%, like the AMCs, the insurance companies are growing at 20%. Therefore, lot less is talked about is what's happening to the investment subsidiaries. You saw HDFC Bank is going to come with an IPO of their financial services companies. It's going to be 1 lakh crore. It's not big in terms of their market cap context, but it is significantly large value accretion for investors. So I think it's going to be a good story for few banks who are in non-banking activity in a big way. But will it beat the market? I doubt it very much. Will it be a top stars return? I doubt it very much. Yes, they're a good part of the portfolios. They must be there in the portfolios. But if you can invest directly to the subsidiaries, so be it. But I can tell you one thing, that value accretion will come from below the subsidiaries, not on the banking. These banks are facing a tough call, as you and all the smart investors saying, either give me high interest rates, or I move to capital market, or I move to gold, as we discussed. So therefore, come match my returns, and then you'll find it. If you match my returns, your loan portfolio has a problem. So banking itself is going through its crisis. You've seen what's happened in the US. All the revenues come from trading revenues. If you see commercial banking, retail banking revenues, almost zilch. What is making money is investment banking, trading revenues. Nothing going to be different for Indian banks. They're going to be very commoditized in lending, but value-added services will pay the premium. But unfortunately, your returns will be suboptimal. Even best is to do an index, you'll make better money than investing in these banks.
That's a valid point. I mean, and India used to be a nation wherein FDs were the holy grail. That is turning, and some high believers have turned, some others might turn as well. Ajay Srivastava makes a telling point. Ajay, so good having you. Thank you for taking the time down. And talk to you very much. Talk to you maybe in or around the festive days, Ajay.
Oh yeah, once I come back from China, definitely I'll talk to you.
Sounds good. Thanks, Ajay.
All
and
right,
viewers, thanks for tuning into this edition of The Talking Point.
At the NDTV World Summit and looking forward to a conversation between two amazing investors, Mark Mobius, Ramesh Damani. Gentlemen, what are you planning to talk today? I would love to not be the fly on the wall, but be in the audience as well. Ramesh, you want to start? What are you looking forward to?
Sure. Thank you, Neeraj. Lovely to be here, of course, and it's such a great honor to be interviewing Mark. He's been variously called the Indiana Jones of emerging markets.
because he's always traveling, living out of a suitcase, but always discovering very exciting companies. So I want to ask him about two things basically. First, what did John Templeton teach him? Because that was his first boss. And secondly, what does he feel about India? A few years ago, he was very bullish on India. Does he continue remaining bullish, or does he feel a bit let down now? I want to get his opinion on what is going on in India.
Yeah, we'll hear that in the interview, Mark, but quick 20 seconds. How do you feel about India? How do you feel about this summit?
I feel very bullish on India and continue to be bullish. As you know, it's been the last 5 years or more I've been bullish on India.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries, shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matter.
Hello and welcome. You're watching the FNO show. Over the next half an hour, we'll take you through all the action in the FNO markets. As much as it's a tough market, we'll try and see where there are opportunities for you to trade on. We'll of course take up queries as well over the next 30 minutes. So if you want to ask the guest any of your questions, please feel free to do so. The markets not being able to hold up, and I think that continues to be a problem. The bulls on the losing end. Once again, very volatile. 24,800 is where we trade at, just below that actually, 24,662. So we've dipped, broken 24,700 in trade. Agam, when I started India market open this morning, and I did ask you whether 24,700 would hold. Yeah. It's not holding just yet.
It's not holding, and well, unfortunately, we are heading lower at the moment. It does seem like that, because what we are actually looking at now is there could be a potential of the Nifty to test 24,500, where we have a couple of important moving averages. In fact, the 50 DMA is slightly below that mark. We have a lot of writing of puts around 24,500, and at the moment, even if you consider the previous 7-day volume weighted average, that comes to somewhere around a little higher than 24,500. It's about 150 point move from current market levels, which isn't much. So if we do in fact see that breach, we're certainly going to see another bout of declines coming in. Now, as far as the day today is concerned, let's take a look at whether or not we're actually looking at fresh shorts into the system for the Nifty and the Bank Nifty, see how futures are panning out. And even though over the past few days we haven't seen too much change in the open interest of futures, well, we'll just have to see whether today is that day where things turn. And it does seem like it is turning. We are looking at a 2% increase in open interest as far as the Nifty futures go towards what potentially looks like shorts right now. The Bank Nifty, on the other hand, also is something that is of importance, but that one isn't looking at too much change here. Sure enough, a little bit of unwinding, but it's marginal. So again, that's something to take stock of. But moving on, let's take a look at the constituents of the Nifty 50. It does seem like it's a day where we're seeing mixed trends coming in. So, you will have, some names which are actually trying to counter the gains coming through. So we do have ICICI Bank and HDFC Bank. And of course, we're going to continue to keep an eye on that.
I'm going to interject you right there. It's Hyundai, that is listed today, and Tushar is of course, covering the management conversation for us. Tushar, over to you.
Post the IPO, and what is the kind of out of the capex that you spoke about, what's the kind of investment that's going to go into R&D? If you could elaborate on that as well. Thank you.
So look, if you see, we have the our R&D is done at the Namyang Center in Seoul, and that's a very key part and a key differentiating advantage which Hyundai has, Hyundai Motor India has. Regarding the royalty, we pay a royalty of 3.5% of the revenue, passenger vehicle revenue, to HMC, and in lieu of this royalty, of course, we get all the cutting edge technology, electric vehicles, future technologies as well, the use of brand. Post IPO, we believe that this royalty payment will remain the same. It is not going to increase, and so that is one. The second is, of course, the Namyang R&D center, it coordinates with the local R&D center. Like, for example, we have our HMIE in Hyderabad, the R&D center. You would have already seen that we have already announced that we are going to improve the capabilities of India in terms of R&D. So I think that is a very critical part of the way going forward for us. Thank you.
गर्ग सर, NDTV प्रॉफिट हिंदी से लिस्टिंग के लेवल्स पे आपकी क्या प्रतिक्रिया है, इनिशियल रिएक्शंस क्या हैं, अगर आप थोड़ी बात कर पाएं तो।
तो देखिए, बिल्कुल एज मैनेजमेंट हमारा हमेशा से ये उद्देश्य रहेगा कि हम अपना बेस्ट करते रहें, ग्रोथ, कंपनी को ग्रोथ के पाथ पे ले आते रहें, इनोवेशन करते रहें, नए प्रोडक्ट्स मार्केट में उतारते रहें, इलेक्ट्रिफिकेशन करें, जिससे लॉन्ग टर्म शेयर होल्डर वैल्यू रहे। ऑफ कोर्स प्राइस हमेशा इन्वेस्टर डिसाइड करेंगे, और एज मैनेजमेंट हम हमेशा कमिटेड रहेंगे कि लॉन्ग टर्म इन्वेस्टर वैल्यू क्रिएशन के लिए। धन्यवाद।
थैंक यू
सर।
That's the management of Hyundai talking about the outlook for the company. Remember, the stock listed just a few minutes ago. If you can quickly pull it up and see what it's getting up to. It's gotten only worse from the get-go this morning. Listed around 1930, now at 1874. 5% cut on Hyundai is what we have. Remember, the participation of the retail subscription was rather muted, made up by the QIB investors who oversubscribed to this by about 9 times. But clearly not too much interest or euphoria on this listing. The markets are having a down day. Like we've said, the Nifty 500 again is down another %. You have a few gainers. City Union on back of earnings is up 13%. Jyoti Labs is looking good. Hindustan Zinc is up 3% despite being in an F&O ban. ICICI Bank is up 2%. CG Power post earnings is up about 1%. Ambuja announced the acquisition of Orient Cement. The stocks both reacted well positively to it at the get-go at 9:15 this morning, but both those counters now deeply in the red. We will understand why that's happening, even though institutions are giving this acquisition a thumbs up. On the sell side, Amber, about ahead of its numbers, is down 10%. PNC continues to decline after a 20% fall yesterday, down another 8%. EPC companies are lower, defense companies are lower. All in all, it's not a great day. 361 WAM reported strong numbers, but the counter sees a cut of 6%. We have with us Sneha Seth and Kush Bora both joining in with the trading ideas. Sneha, I'll start with you. Last Monday, we were sort of holding on to resisting a fall below 25,250. Within a week, the range has moved 500 points lower, and now even 24,700 looks difficult to hold on to. Sneha, how do you feel about the Nifty?
So, very good morning. If you look at market, yes, we are seeing decent selling pressure despite, like on Friday, if you see, we have seen a strong comeback, but the follow-up action was missing. In fact, yesterday we saw decent writing in call option, 25,000 call option, and we have been continuously seeing this call writers being very active. On the lower side, we also saw put writers exiting their position from 24,700, 24,600, 24,500 strikes even. So that wasn't encouraging. In fact, yesterday's data wasn't encouraging at all. And we were expecting some further selling to come in today. And that's what we are seeing. At this point in time, important level to watch out will be 24,500, 550 zone. Any correction below that would trigger some fresh selling, in index. So which can, at least bring it towards 24,200, 300 zone. In case of banking index as well, if we see the resistance which everyone were talking about, 52,000, 52,200, that has acted as a resistance in yesterday's trade even. We did see some respite, some up move beyond that range, but it wasn't sustainable. Now looking at the overall banking index, even I believe for now 52,000, 52,200 should be acting as a resistance, and we may see some selling coming in banking space as well.
All right. Kush, welcome to the show. How are you reading cues on the benchmark indices now?
Hi, Agam. Very good morning. Well, I mean, very clearly, the bias is negative. While we've had the Nifty sustaining around the 24,700 mark for the most part, for the last couple of sessions, or at least closing above that. I think a dip towards that and a constant retesting of that level is not healthy. The more number of times the index tests those levels, the more likely it is to break down. Right now, we're seeing the index, marginally below that level. I think for me, this downward bias could continue, and the key level to watch for is actually 24,400, where from a medium-term perspective, we've seen some sort of resistance earlier, which should now act as a support. Bias clearly negative. If you're looking at a short trade, then on the downside, you're looking at a 24,550 as the first target and 24,400 as the second target. On the way up, 24,900, 25,000, this zone will now act as your resistance zone or a stop loss in case you're going short. So the bias is clearly negative. While you could see this as a consolidation with a negative bias, the near-term trend is very clearly on the downside.
Sneha, you did indicate that Bank Nifty would see some pressure as well. In that case, would it require enormous amount of bravery to go short on Bank Nifty at these levels?
See, I believe if you want to go short, the ride won't be very smooth in case of banking index, because that was the space which was performing decent. So I would not suggest going ahead and selling banking index at this point in time. In fact, any bounce back in case of Nifty should be used to go ahead and short for a positional trade or for a day trade. That would be a better strategy if we compare Nifty and Bank Nifty.
Of course, your cues on the Bank Nifty, do you think that there could be more concern here as compared to the Nifty 50 at the moment?
No, on the contrary, I'm a little more constructive on the Bank Nifty. While the Nifty is a sell on rise, the Bank Nifty is a buy on dips kind of a setup. And we have seen those kind of, if you see at least on the weekly basis, we've seen a higher low kind of a formation, a higher low, higher high kind of a formation. So the trend of, from a medium term perspective, from a near term perspective, isn't really as bad as the Nifty here. So any kind of dip towards 51,500 should actually be taken as a buying opportunity, on the Bank Nifty. Yes, there is pressure, seeing how the overall market is, perhaps, seeing some sort of profit booking, consolidation, negative bias. The Bank Nifty actually stands out. So any kind of dip towards 51,500, will be taken as a buying opportunity. The moves in this one have always been sharp, so that will continue. But for me, Bank Nifty is, one index that could perhaps be considered for a long trade, even in a market like this. Also, the fact that HDFC Bank is sort of starting to turn a corner around, has had a good run, might continue to do so, from a near-term perspective, will hold Bank Nifty in good stead. So Bank Nifty is a buy on dips kind of a setup for me at the moment.
But buy on dips at 51,500 is what you're saying, right? Kush, that's still quite a bit out, I would imagine. It's not like it's an immediate trading call. Hopefully, we don't go down to 51,400 anytime soon.
So, that's from the perspective that there is volatility, and from a near-term perspective, you're looking at a resistance at 52,200 marks. So the risk-reward ratio from here will not be favorable, because the index has turned around a couple of times from those levels. If the Bank Nifty does slip in, indeed to 51,500, even 51,600 levels, for that matter, the risk-reward ratio will become very attractive, where the 51,000 support zone will start acting in. And on the upside, you've got 52,200, and once that is taken out, 52,800 as well on the upside. So it's mainly from the risk reward standpoint that I feel that any kind of dip should be taken as a buying opportunity on Bank Nifty.
Okay, Sneha, you want to go into your trading calls? I believe you've got 2 sell calls this morning.
Yes. So I have a sell call on IOC. This counter, if you see, it has been trading in a range from quite some time, wherein around 164, 165, there was a support zone, which it has breached. Today, we are seeing some fresh coming in below those levels even. So I believe we may see further selling pressure in this counter. One can expect a target of around 149, and the stop loss can be maintained around 162. Apart from this, from banking space, I have a sell on IndusInd Bank. Now this counter again, if you see, it was consolidating in a range wherein 1330 zone was acting as a support, and which has been reached yesterday. We have seen decent writing in call options as well. So I believe we may see further selling over here, which can bring it towards 1250 odd zone. And on the higher side, I believe 1327 should be strict stop loss in that.
What about you? Stocks on your radar this morning?
So a mix of a long and a short. Torrent Power. This was one stock that we discussed yesterday. Has done well today as well. In a volatile market like this, the clear trend on this one is on the upside. It's from the cash segment though. So if anyone does want to consider this, in the cash segment, Torrent Power is your stock to look at. Your targets at 2020 and 2070, 1950 is where you place your stop loss. On the short side, we've got Biocon. Again, very clear medium term, downturn on this one. Had a good support zone around the 335, 340 mark. That's been broken and the stock is heading lower. The targets on this one are 330 and 325. Since the start of the show, the stock already slipped and closer to the target one. But if someone does want to consider, then you can take it for target 2 as well, which is 325 now. And you can move your stop loss to 335. So Biocon is a sell.
Sneha, what are you doing with cement stocks? The moves that are a little difficult to understand. Ultratech reported numbers, the stock is higher. Ambuja reported an acquisition. Stock reacted positively, but now is trading negative as we see it on Orient as well. Anything in the cement pack that looks like a good trading strategy at this stage? I mean, Ambuja and Orient, would you bet on a recovery today itself?
The Ambuja, I believe, yes, the counter has corrected from the higher levels, but I think around 540, 545 zone, that is the zone wherein one should, think of, accumulating this counter if they want to, because that is the support zone. On the weekly chart, there is an 89 MA support over there. So I think further selling can be there, but around 540, 545 zone, one should review this counter, and there one can, think about taking a fresh long in this counter. At this level, I would say avoid. But yes, in the dips around 540, 550 zone, one should be looking at.
All right. Maybe if we can actually take stock of all the companies and all those counters which are moving in the futures and options space, and looking at perhaps an increase and decrease in open interest. Can we pull that list up and see where? Well, I'm sure there will be plenty more shorts at this moment. So, there's a little reversal of the sorts. So, Tata Chemicals, which was up as much as 9-10% yesterday, is actually looking at profit taking, is down 5% now. And again, we're seeing an increase in open interest there. Then we have Dr. Lal Path Labs. The spot is not looking at significant cut, and neither is Kotak Mahindra Bank for that matter. But we are looking at positions being built, considering we've seen an increase in open interest there. ICICI Bank and ICICI Prudential, on the other hand, looking at some longs coming through. What about stocks which are seeing unwinding? We have long unwinding for names like Balrampur Chini, Ultratech Cement, as well as RBL Bank and Atul Limited. So some very interesting names coming in there. Perhaps we could take stock of something like Tata Chemicals as well, because this certainly will be something which is very, very, I would say strange. Kush, come in on Tata Chemicals. And yesterday it did seem like it was nearing a new high, and now once again we're looking at selling. How would you approach Tata Chemicals?
I wouldn't really, and the reason being that this stock hasn't really seen any kind of a big move or any kind of a positive return in the last year and a half as well. If you see somewhere around the mid or the late of 2022, the stock was around this 1200 mark. It's still trading below that. There was a spike, but that's given way. So even in the chemical space, where a lot of other names are seeing some traction, this one hasn't really been able to break out of a range and hasn't really sustained on the upside. So if someone does have a position from lower levels where it was consolidating around the 1050, 1075 mark, not a bad idea to perhaps exit, because 1200 seems to be a strong resistance zone, a strong supply zone. So if you do hold this position, not a bad idea to book some book profits, take the money off the table from Tata Chemicals.
Take some profits off the table. If you hold the counter, the stock was up 10% yesterday, now down 4.5%. It's time to move on to queries, and this one's a tough one. Kumar writes in from Delhi, and he's holding Vodafone calls at 10. 10 calls at 5, at a premium of 5. If you can just pull up where Vodafone calls are currently trading at and get a sense of what, oh my God. Sneha, that looks extremely painful. I don't know what is left to hold on for, but anyways, have a go at this one. What does he do? It's his buy price is 5. His buy levels are 5.
Yeah, I think the overall chart structure is quite bad. I don't think one should, trading with a call option in this counter. In fact, the put option would be a better idea, I would say. But yes, if someone is holding a call option here, I would say that please exit it. I don't think there is any chart structure wherein it shows that it will rebound from here anytime soon. Maybe it can at least correct towards 7.5 even going ahead. So strictly it is that exit at this point.
Okay, another very interesting query coming in Tata Consumer Products, which did see a little bit of a correction when its earnings came out. We have Asia from Siliguri holding Tata Consumer Products 1020 call, paid a premium of 20. The question is, should I hold? So let's take a look at where this one is currently trading at. The 1020 call, firstly, let's see where the spot price is. And with respect to the spot price, let's see where. So it's not too far away. Considering it's in fact just about 5 points away, it's about 0.5% away from it going at the money. It just seems like the call must have potentially been held for a bit, which is why we're seeing that deterioration in the premium. It's currently at 12. This call was bought at 20. Kush, do you think it's a good idea to hold on to this still?
So, Agam, she can continue to hold on to this one. The only reason, I suggest that, with a stop loss of 5 rupees, let me add that, with a stop loss of 5 rupees, continue to hold this one. The reason is while the near-term structure, is extremely, bearish on this one, the stock's now gone into oversold territories with the kind of fall we saw yesterday and the crack that we're seeing today as well. Now, given that, and given that you typically have some base around these round figure 1,000 kind of marks, plus the stock's gone into an oversold territory, there's a possibility that you could see a swift, sharp rebound on this one. I'm not saying that that will turn the fortunes for the stock, but as you rightly pointed out, the stock is not too far away, or rather the option is not too far away from her buying price. There's a possibility that she could exit at a much lesser loss, perhaps even at cost. So with a stop loss of 5 rupees, continue to hold on to this one for some time. You might get a rebound, and as I said, you might get an opportunity to exit at a much lesser loss than you're looking at currently.
Hold on, you might get a better exit on the counter. Well, a quick mention, Paytm numbers have come through. Revenues are up 10.5%. Net profit is of 930 crores versus a net loss of 840. But remember, this is not comparable because there is an exceptional item of 2,048 crores for sale of its events business. So operationally, we don't know whether there is an improvement. The profit number that you're seeing versus a loss is largely on back of the fact that they sold their events business for over 2,000 odd crores. That's what you have on Paytm. The stock, of course, trying to react positively to that, but not doing so just yet. Next up, we have another query coming in from Rahul, who writes in from Bihar. He's holding Hero MotoCorp calls of 5,300 and he's paid a premium of 54. Let's take a look at what the 5,300 calls are currently trading at. 57.75. So he's actually in the money, fortunately. Sneha, what's the advice with everything that's happening in the markets and auto having good days or good weeks and followed by very, very long periods of selling? Do you advise Rahul to take the little bit of profit that he's made on these calls?
I think one should, I guess he should be holding it, because if you look at the chart structure, this counter has been consolidating around the 200-day simple moving average on the daily chart. And there are possibility that once it surpasses 5,000 to 80, 90, this levels, then we may see follow-up buying coming in. So I think one can keep a strict stop loss. Like if we have, one should keep a strict stop loss of around, say, 5,000. 60, 70 odd zone, that should be acting as a support for now. So whether that stop loss on the cash level, one should, can hold this counter. If any correction below the support zone, which I mentioned, that is 50,000, 5,050 levels, So in that case, one can, exit their longs, but I think there should not be any issue in holding this counter. It has been consolidating after a fall, which is a positive thing.
Okay, well, on that note, thanking both Sneha and Kush for joining us and taking us through their views on the markets, solving our viewer queries, and of course, giving us a couple of trading ideas to work with. With that, we shift focus to the commodity space, and we have Dinesh Somani. He's the co-founder of Pro IntelliTrade Services, who joins us right now. Dinesh, good morning. Thank you so much for joining in. Dinesh, the first question will be with respect to gold. What's the outlook here?
Yeah, good morning. As we saw, the prices rallied, and they rallied exponentially right from the low of recent low of 66,000 to 78,300, 400 levels. Prices are moving up. The basic reason is we expect a 25 basis point cut in the next meet of the Fed. ECB already cut the Fed rate by 25 basis points, and that is boosting the prices. Secondly, the Middle East tension that is bringing up, that is also adding premium to the prices. At present, I expect around 78,150 should be a good buying level in gold MCX December contract. Upside potential in a day or two should be 78,600, 77,800 should be the stop loss maintained. I think the bullish momentum is likely to continue in this week as well.
It's fantastic of what silver is getting up to. It made record highs back to levels of 2012. How do you play silver right now? Do you feel the momentum in silver is here to stay?
The momentum in silver is even stronger compared to gold. I mean, the prices rallied almost 8,000 to 9,000 rupees in the last week. Prices are trading around 98,300 levels. Any fall of 200 rupees near about 98,100 should be a good buying opportunity for intraday cases. Upside potential could be 99,500. Stop loss to be maintained below 97,300 levels. We expect prices to rally to 1,01,000 almost in the weekend.
All right. And Dinesh, what about crude at the moment?
Fundamentals does not support any upside potential in crude as of now, though the Middle East tension is driving up, but is not adding premium to the prices. We expect around 5,905 should be a good selling level. 5,815 should be the target on downside. 5,965 is a major resistance zone, should be the stop loss as of now.
Right. What about aluminium? Base metals as well, a buy call here?
Right. Aluminium is at a support level around 238 should be a good buying level. 240, 250 should be the upside potential. Stop loss to be maintained below 235 levels. A good buy opportunity on the downside. Prices already corrected yesterday from 243, 240 to 50 levels to 237.50 right now.
All right. Dinesh, we leave it at that. Thank you so much for joining us and giving us your view on those key commodities. With that, it's also a wrap on this edition of the F&O Show. Lots more lined up on the other side. Stay tuned to NDTV Profit.
I think it's a brilliant session because if India doesn't start disrupting the rest of the world and showing the Indian way to innovate, I think we've lost an opportunity. And with the world in a crisis in terms of what's happening with geopolitics, with what's happening with health, I think this is the right time for us to come together with disruptive innovation. And I think that healthcare has a major role to play there.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries, shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries, shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
Welcome, you're watching the Small and Midcap show. I am Mahima Vachrajani and with me is Varsha. Well, before we move on to the interesting managements that we have lined up for you in today's Mid show, let's take a quick check at how the markets are panning out to be. Well, both the benchmarks and the broader markets are under pressure. The Nifty is down around 250 odd points, within a range of 250 odd points. But before we look at the markets, let's take a quick look at how the Sensex is also doing. The Sensex is also down around 0.23%, in the similar range with Nifty. The broader markets are also under pressure, but they're seeing more pressure and more selling as compared to the benchmark indices. The Midcap 150 is down around 1%. The Smallcap 250 is down around 1.8%. Let's also pull up the Bank Nifty and see what are the levels the Bank Nifty is trading at and see how it's performing in trade today. Well, it's trading flat and it's off from its day's highs and trading around the 51,900 levels. So there you go, that's Bank Nifty for you. Let's also pull up the contributors on the Nifty and see what are the top gainers and top losers on the Nifty. There you go, there are counters like ICICI Bank, Infosys, Bharti Airtel, Shriram Finance, some counters that are in green and trying to keep the Nifty in check, but some counters like L&T, M&M, Reliance, Tata Motors in red, which are pulling down the Nifty by roughly 110 odd points. Let's also pull up the advanced decline ratio and see what's the breadth of the market like. Of course, it's a seller's day, so the declines are 1800 odd declines versus 300 odd advances. So the ratio is quite high. It's almost 6:1 when it comes to the ratio. Let's also pull up the top gainers and top losers in terms of sectors and see how are the sectors performing in trade today, where there are hardly some sectors in green. Something like Nifty IT is up around 0.16%, but Nifty Realty seeing quite a significant pressure, down around 2.6%. PSU banks down around 1.75%. Metals also down by 1.3%. In fact, Nifty Realty has been the top gainer for the entire Samvat 2080. Now that we will be entering a new Samvat 2081 on the day of Diwali, that is 1st of November, it has been the top gainer, but it's seeing a significant pressure since the past few days. Similarly, Nifty Media is down also around 1% and Nifty Auto is down around 1% as well. But moving on, our first guest on this Mid show is Mr. Ketan Sablok, who is the Group CFO of Rosari Biotech, who joins us now. Welcome to the show, Mr. Ketan. My first question to you is that, your sense of how the quarter has gone by. It's seen a pocket of both growth as well as some weakness in some counters. So I want to understand as to how was the quarter as per your sense, sense, what were the volume growth at overall, and what's the way forward?
Hi, good morning. I think we've had a pretty much a quarter with which we are quite satisfied. We've had a good volume growth, especially in the HPPC division of ours and also in the domestic textiles. So that's a little heartening for us. Pricing was a little bit of a challenge. We had to soften prices, just to ensure the volumes are met. And that's why we saw pretty much a slow kind of a growth in this quarter. But I think going forward, we are very, very hopeful that the pricing will come back, volumes will pick up further. And to be specific on the divisions, I think the HPPC volume uptake was around 10 to 12% growth over last year. The pricing was slightly lower on the lower side. And that's why we saw a little bit of a smaller growth in the HPPC. Textile domestic saw again some volume growth, but again we had pricing pressures. On the export front, I think that's what has led a good run during this quarter, and I would say probably even the first half. And textile in the export side, we had a little bit of headwinds from our Bangladesh market, some of which did not pan out the way we had expected. But we are seeing now good order flows coming back from Bangladesh, and we hope that December onwards we should see the Bangladesh exports picking back again. So I think we are in for good times, especially from December onwards, November, December, and then getting into the fourth quarter.
Well, Mr. Ketan, Varsha here. Regarding our domestic business, which seems to have declined, now going to exports or increasing exports was our conscious choice, number one. And number two, so the new product launches, didn't they help to offset the degrowth that we have seen?
Yeah, Varsha. So I think you're right. The export push, I think that's something we've been talking about through Q1 and Q2 is a conscious call that we've taken, because we've seen that the domestic market volumes are really not picking up the way we would have wanted it to. And then given that, our key raw material, ethylene oxide, we have limitations on the availability, plus the capacity utilizations for our ethoxylations are almost now peaking. They are at about 85-90% kind of utilization. So it was a conscious call for us to look at the export markets, build up our volumes on the export side, because that's something is a large untapped market for us. And we hope that going forward, exports is going to be, and we've seen in the first half, the export has been the real growth driver for us. The exports have grown almost in H1 by 30% onwards, and the domestic growth rate has been about 5%. So we've really not degrown in the domestic market, but probably we've not grown the way we would have wanted it to grow.
Right. So, Ketan, I believe then you expect exports to grow further in the coming quarters as well. And if that is the case, I also want to understand that, right now maybe the new customer acquisition that you're making, the freight cost you're bearing, on your own for that matter. And that is kind of impacting your margins. So, if exports increase, how will the margins be impacted overall?
Yeah, so see, some of the markets and some of the customers, as you rightly said, we just entered into, and freight is really playing a hardball for us, especially now given the situation globally, availability of containers, the freight routes have gone a little longer. So this is something we'll have to deal with. But having said that, I think that will not stop us from growing our export basket, because that's where we see the revenue streams, especially with some of the capexes that we've lined up and which will come up over Q4 and Q1 of next year. I think it's time for us to start seeding these customers so that next year we are ready full flow once the capex come online. So this is something we'll deal with over this year. Getting new customers, new geographies, even if it's going to cost us a little bit on the freight, because that's where we see the growth coming going forward.
Also, there was this pricing pressure driven by raw material, which has been, intensified. Now, should we expect this to continue for the next few quarters until the raw material prices probably increased? Whether pricing or price will offset the growth that you're expecting?
Yeah, so raw material prices have stabilized now. So our outlook now is that further price coming down doesn't look like it's going to happen, but it again depends, because we have a wide variety of products, different divisions, so each one could play on its own. But our key, as I said, would be to keep driving the volumes and keep utilizing and ensuring that capacities are fully utilized. Now with the agro season waning out, we'll have a lot of capacities available for some of our non-agro products. And our key will be to keep utilizing our capacities to the levels we've utilized in H1. So that's how it's going to play out till the new capacities come into play.
Got it. Ketan, I also want to understand that you pointed out that there was some impact because of the Bangladesh situation as well, which is now easing. You're getting more order flows. But, it's a two-part question. First of all, what was the impact in terms of quantification, if you can quantify that for us? And secondly, because of the Bangladesh impact, we spoke to a couple of textile companies which said that they might, the orders might get diverted towards the Indian exporters. So are you seeing that there is a change in terms of shift, in terms of orders which were coming from Bangladesh are now coming from Indian textile companies?
So on your first part, yeah, we saw a significant decline in the Bangladesh export business. I would really not say that we didn't have orders, but we took a conscious call not to fulfill many of the orders given the situation in terms of banking, forex, LC is not coming on time. So we had a little bit of a thought that it's better not to export rather than expose ourselves to any of the vagaries of the financial situation in Bangladesh. But now I think a lot of these issues are slowly getting resolved. We are getting a lot of positive signals from the Bangladesh market. And we hope that, and we expect that, November, December onwards, we should start seeing a good traction in the Bangladesh. Because Bangladesh is something we, seriously went into this year, setting up the office, the division, the people over there. So we have a lot of hopes of this market bouncing back for us for the textile chemicals. And on your second part, I really don't think we've seen that, at least immediately in the last quarter. We'll have to just wait and watch, how the domestic situation plays out. While a lot of the domestic players are talking about it, but if you frankly ask me whether it's, coming out in terms of orders and numbers, we've not seen that yet.
So continuing on the textile segment, things were recovering in textile segments. I remember one or two companies posting good results in last quarter. So what are the challenges that you as a company is facing when it comes to, textile segments?
So domestically, I think if you see, the pricing is the only issue. Otherwise, as I said, we've grown in terms of volumes. On the export side, in textiles, I think once this Bangladesh thing opens up, there are a lot of other geographies we are looking at, including countries like Vietnam, Egypt. We've also ventured now and send products into North Africa and Turkey. So I think overall, over the next few months, we'll see the textile business, which has been a little bit of a stagnant growth for us in the last few quarters. And we expect Q4 onwards, it will bounce back. That's how we plan.
And even in terms of home and personal care, there has been an impact there as well. So for that particular segment, when do you expect recovery in terms of timeline?
No, so in home and personal care, again, we saw good volume growth in this quarter. I think we would have grown about 11-12%. Pricing, was the issue. But we expect this to be the main driver for us going forward. HPPC is the segment that's really driving our growth. We had a little bit of a muted demand from FMCG home care, which we hope at least in the second half the demand should pick up. And then I think we'll have good numbers to show, better growth number to show in HPPC also.
When it comes to capex for the entire organization as a whole, and what is the peak revenue that you are expecting from this capex?
So this capex, the capex at our Dahej facility, we spent about 128, and we've had a little bit of a modification now in the capex. So we are spending an additional about 80 odd crores in that. At a peak utilization, we expect the revenues to be between 3 to 4 times the asset turns. That's generally what our assets give us in terms of revenue.
And this additional 18 crore that you've done, will it be via internal accruals or you'll be funding it from somewhere?
No, so it's a smaller number. We'll be doing it internally.
All right. And in terms of capacity utilizations, Mr. Ketan, where does your capacity utilization stand at right now? And considering the kind of capex that you're doing, how will the capacity increase? And similarly on that lines, how will the utilization increase?
So currently, if you see, I think in the top solution space, our capacities have been completely utilized. As I said, last quarter we were at close to 90. This quarter we were around 80, 85. So in the first half, I think we have peaked on the capacity utilization for the entire ethoxylation piece. And that's where we are adding capacities, additional about 30,000 tons. I think some of the initiatives, as I said, we are taking on growing the export market is actually playing into the fact that these capacities will now come on stream by Q4 onwards. And that's something we have in our mind. And I think some of the initiatives that we are taking is towards ensuring that the new capacities over a period of 2 to 3 years get fully utilized.
Also, for FY25, what kind of growth are you expecting when it comes to top line? And will you be able to sustain the margins, or we can see a dip in margin because of the operating cost that you are facing?
No, so for FY25, we had earlier indicated that we'll grow at close to between 12 to 15% kind of levels. I think H1 we have closed to growing at around 11%. I still think that we'll be able to end the year at the levels we've talked about, between 12 and 14%. That's it's very, actually, given the situation globally, it's become a little difficult for us to not really talk about the numbers, but having the half year already gone by, I think we should be around that 12 to 14% kind of top line growth. Margin should be at similar levels.
Right. Well, Mr. Ketan, thank you so much for giving those answers so candidly, and thank you so much for taking our time and speaking with us at NDTV Profit.
Thank you, Varsha. Thank you.
Yeah. The next company that is in focus is CG Power. It came out with its Q2 earnings, and we're joined by Mr. Amar Kaul, the MD and CEO at CG Power Industrial Solutions, who joins us now. Welcome to the show, Mr. Amar. First off, your sense as to how the quarter has gone by for you. There are some pockets that have done very well, some pockets which have, not done very well. So your sense of the entire quarter gone by, and second half, how is it shaping up?
So thank you very much for having me here. So from the quarter results that we have, I think it's a fairly strong growth that you would have seen, about 19% growth. And profits, of course, the result that you see, it is showing downward trend, but I'm honestly not worried about it, because there's almost 36 crores that we invested into strategic initiatives, right from the acquisition expenses or the strategic initiatives for our go-to-market strategy. So to me, I call it investment to take the short-term hit, but for the gain in future. So honestly, I'm not really worried about it. We continue to gain the momentum.
Got it. Your margins were down by around 320 basis points, and this is on addition of a one-off cost, which was around 36 crores. But even if we consider that one-off, the margins have kind of shrunk as compared to the YOY situation. So first of all, what has happened there? And going forward, do you expect margins to be in the same range, or do you expect a recovery?
Absolutely. So very good question. So we had, if you see power sector, the segment that we have, it has been doing fairly well. On industrial side, we had a bit of stress on the motors piece in last 2-3 quarters, but I think it's already hit the bottom and it's already started sliding up. So with the operational excellence action that we have initiated on the lean thinking in the manufacturing plant as well, that started showing results. So for the quarter, it did not show much, but if you look at individually for September performance, we gained almost 200 basis points on that, which will hopefully get reflected in Q3 as well. So good days ahead.
All right. So then where do you expect margins to be at by the end of FY25?
I think we should get close to where we were at, between say 14 to 15%. That's where we would expect it to be at.
All right. In terms of your order book also, your order book is up 50% YOY, which is significant growth. So I want to understand, first of all, the kind of breakup of this particular order book. And secondly, what will be the execution timelines like in terms of revenue?
So these order books is majorly in the power sector. As you know, the sector is booming, and whatever we add to the capacity, you always fall short of that. And that's where we need to keep investing more and more to expand our capacity. So in power, typically we have switchgear and transformers. So both have scaled up, between 44 to 50% increase in the backlog that we have. So and the momentum continues.
Okay. And in terms of, QIP, you've recently approved a QIP of roughly 3,500 crores. Now, I understand that this fundraise is for expansion plans as well as for innovation, but give us some more color as to how exactly this big amount will be utilized.
So there are three different areas. One, if you look at the kind of backlog we are building and the growth we see in the sector, so we need more money for the expansion. So I would say approximately 1,200 to 1,500 crores is, I have very clear visibility. After board approval, we'll of course initiate that discussion for the expansion on the power sector area. And then we have, commitments to the semiconductor industry that we have already bought and in the process of buying from Renesas, the radio frequency components business. And third, I would say in terms of innovation. So we're investing a lot in terms of innovation to make sure we have the best-in-class products, which is made in India, for India, and the globe.
Got it. Mr. Gaul, two things here. You're expanding your capacity overall in terms of power as well. So give us some color as to where will the capacities be at from a long-term perspective, let's say by the end of FY28.
Oh, so FY28. Obviously, so today, if you see the board approvals that we have, we should be getting from, if I take transformers, so we'll go up to 40,000 MVA. So I would expect it to go up to 80 to 90,000 MVA by 27-28 time frame, at least. So and we have more appetite to go in that area.
In terms of semiconductors, you said you will be putting a lot of those money raised in terms of the OSAT plans as well. So what is the kind of strategy you're adopting there? How will the money be utilized? And from when do you expect the kind of revenue inflows from this particular semiconductor facility that you'll be coming with?
So there are two segments. So OSAT, if you know, is into assembly and testing. So that project is as per the plan. The plant construction is going on full swing. The leadership management team is in place. So as per the timeline, 26, we should be able to see revenues coming out from there. And if you look at the other side of semiconductor business is the design piece of it. That's where we are pouring into buying the company from Renesas, which of course with the regulatory approvals will take at least 4 to 6 months more. And then we build the capability both for designing as well as assembly and testing to close the loop.
Got it. Mr. Kaul, you're also foraying into the covered space. So give us some sense as to, what exactly are you exploring there? Do you already have customers? What's the kind of strategy you're adopting there as well?
So Kavach, as you know, is TCAS, Train Collision Avoidance System. So good news is that we already got a development order from Indian Railways, which should get executed in next 8 to 10 months. Plus, there's also a big tender, 7,500 crores, which has been floated. So hopefully, even if we get 10% of that, that needs to be executed in less than 12 months. And Railway Ministry has been pretty bullish on that, and they want us to go fast on that direction as well. So pretty strong on not only for the Indian Railways to improve on the safety piece of it, but also making sure that there's a good synergy with CG Power business, where we import a lot of electronic components which can be actually fed from GG Tronics itself.
Right. You rightly mentioned that you've also acquired 55% in GG Tronics. Just to understand, because this is Kavach anti-collision system. So just to understand that this you've acquired for roughly 3.2 billion rupees. What kind of a top line addition will this make to the overall top line of CG Power?
So yeah, it will go step by step. But I think what we are looking at, for example, even if we get this tender of so I think that itself will be about 700 crores, which should get accomplished in next 12 to 18 months. So that's only one piece of it. Plus incremental things will keep happening. So pretty strong synergy between the two companies.
And what are the kind of margins when it comes to the Kavach system for you? Where will the blended margins be at?
So we don't declare individually for each of the businesses separately, but yes, if I say overall PBT margin that you look at 14 to 15% that I said in the beginning, it'll be incremental to that.
All right, and the Renesas acquisition that you've made for semiconductor design, give us some more color with respect to that. How will that play out for CG Power?
So that, if you see, we are trying to build more capability into the country, not only for the organization CG Power. So this will be primarily into two segments for the radio frequency components business, which is wireless infrastructure, and SATCOM, which is satellite communication. And there are different products along with that which you have. But if you look at the main applications, for wireless communication, it's the 5G network, the way we are expanding into India. So we'll be introducing power amplifiers, PA bias controllers through this acquisition. And for SATCOM, if you see the entertainment system in the aircrafts that we have, so that's where we will be focusing on. And it's generally called LEO, which is low Earth orbit broadband constellation. So these are the two focus areas that we have in this acquisition.
Right, and you're also foraying into newer end segments like ESL orders, biogas, ethanol progress. So I want to understand as to what's the progress with respect to this, as well as what are your plans with respect to this?
Oh, I think that's interesting, and that's why I said, we are not looking at the market, how it's going up and down. The thought process for the group has been control what you can control. So we can look at the markets where we can foray, and we have not been there. So for example, you talked about EESL, we had already received for our consumer products division huge orders, which is getting executed right now. But then we looked at other businesses, for example, drives and automation. The drives, we got another 10 crores order along with the same ESL. And then we linked it back to the motors also. So recently we got about 8 crores for that order. So, and there are more in the pipeline. So we're exploring each of these new areas, biogas, nuclear power corporation. So each of these where we are not present, so pouring into those verticals as well.
Got it. Well, Mr. Kaul, thank you so much for taking our time and speaking with us at NDTV Profit, and all the best for the second half of the year.
Thank you so much. Pleasure talking to you.
Yeah. Well, with that, we're completely out of time on this edition of Small and Mid Cap Show, but there's more lined up on the other side. Stay tuned.
It's been more than a decade since I was on the ground here in India. I follow from a distance, but on the ground, what I see is the remarkable progress that India has made, and in particular, the success of the government in leading the nation into a better future. So it's very encouraging at a time when you see many other governments that are struggling to do anything right, to see a government that's really succeeding.
We're going to look forward to hearing this and a lot more from you. I'm not going to give most of it away, so stay tuned for that conversation with Paul Romer. Thank you so much.
Thank you.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries, shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option.
Hi, good morning. It is morning. Good morning. Thanks so much for tuning in. You're watching Ask Profit on NDTV Profit. And my name is Alex Matthew. With me is Mahima Vachrajani. And we will take you through the next half an hour to 1 hour, I want to say, of trade, depending on what is happening at the NDTV World Summit. There are some interesting conversations which we will cut into. But for now, let's take a look at where the markets are right now. And it's not a pretty picture, unfortunately. It is weakness in the broader end of the spectrum, which continues from trade yesterday. In fact, we've seen this over the past few sessions. The benchmark, of course, only losing about 0.4% or thereabouts. But even there, you're seeing a little bit of pain in a few quarters. But the real pain is visible at the broader end of the spectrum. The mid-cap index losing over 1%, in fact 1.4% at the low point of the day. The small-cap index down 2.2%, and that adds on to the pain that you've seen in trade yesterday as well. The market breadth, as a result of which, is very heavily tilted in favor of the declines, and it is quite a wide margin. This is almost as wide as you saw towards the end of the session yesterday, and quite a lot of that pain visible in the broader end, as I pointed out. Now, take a look at some of the sectoral indices. Initially, you saw the Nifty Bank hold out as a gainer, but at this juncture, there's only IT that's treading water. Everything else is losing ground. In fact, the worst performers are the Realty Index, and that's really a picture of the day. Most indices trading in the red right now. But there are a few names that we're focusing on at the start, and one of them, of course, the pair Ambuja Cements and Orient Cement. There are a few others that you would like to highlight as well, though, Mahima.
Absolutely, Alex. So, something which is really doing well, which is working against the market today is City Union. Came out with its numbers and good set of numbers, positive, because growth is back to 5% QOQ, both on advances as well as deposits. Margins have improved and H1 FY25 provisions have significantly gone up.
Oh, and it's at the high point of the day.
Exactly. It's at a high point of the day and currently trading 14% higher. The next stock in focus would be, of course, Hyundai India. It got listed at a discount. Let's see what it's trading at right now and see how much of a pressure it's still going through. Well, it's down at 4% as we speak. But, interesting, Alex, because brokerages have come out with positive view on Hyundai. For example, Nomura has initiated buy with a target price of 2472, which is an upside of almost 20% from its listing price. Macquarie has initiated a coverage with a target price of 2235. That's roughly a 14% upside from its issue price.
I saw Enam's initiation with a reduced rating on the first day of listing.
But that is another counter in focus, of course. And one more counter, which is defying the market trends today is Epack Durables. It's signed an agreement with Hisense India, which is for manufacturing of air conditions and home appliances. And the stock is locked in upper circuit, up around 5%. But of course, Alex, the focus, as you rightly mentioned, is Ambuja acquiring Orient Cement. The acquisition is at around 8,100 crore. And we have Mika joining in with more details on that. Mika, what are you picking up?
Yeah, so the update came in this morning and Ambuja Cement will acquire 46.8% in Orient Cement and the acquisition value is at 8,100 crores. Now the transaction will be funded entirely via internal accruals of the company and they'll be making an open offer at 295 rupees per share, which is at a premium of Orient's yesterday's close, and this will trigger 26% acquisition of public shareholding, and it will this acquisition will add 16.6 MTPA of capacity for Ambuja, and acquisition will help Adani Cement as a whole to take its operational capacity to 97.4 MTPA. A little bit about the deal valuations. Well, if you take it at operational cement, just the 8.5 million tons which is currently on stream, the valuations come around $114 per ton. But when you talk about even the planned capacity, that's at $58 per ton, and both these values are lower than the greenfield setup cost of $110 to $120 per ton. A little bit about Orient Cement. Well, current cement capacity is at 8.5 MTPA. They have also ready to implement capacity at 8.1 MTPA, which was taken in the deal valuation calculations. Clinker capacity is at 5.6 MTPA, and the potential cement and clinker new capacity stands at 6 and 4 respectively, and they have presence across Telangana, Karnataka, and Maharashtra. Now, when you talk about the benefits for Ambuja Cement, well, the acquisition will help Ambuja Cement increase its presence in South and West India. It will increase its pan-India market share by 2% additionally. And Orient also has large size, high quality limestone deposits at Chittorgarh to support capacity in northern India, which is around 6 MTPA. And the acquisition will improve the overall return on capital employed for Ambuja. When you look at it from Orient Cement's perspective, well, the opportunity will improve operational efficiency via a higher green power mix and domestic coal linkages. It will also help in clinker cost reduction potential of around 150 rupees per ton, which is positive for the company's margins, and it also helps them achieve their target EBITDA per ton of 1,500 rupees by FY28.
All right, comprehensive. Thank you so much for getting us those details, Mika. And it's a great opportunity for me to get on board our experts. We've got Sameer Dalal of Natvarlal and Sons Stockbrokers, as well as Swati Hodkar, AVP Technical Research at Nirmal Bang. Thank you so much to the both of you for taking the time, and good morning to you. Sameer, I'll come to you first on Ambuja Cements. What do you make of the deal? What do you make of the pricing of the deal and also the consolidation that's underway?
So the consolidation, I'll answer first. It's great for the cement industry, right? Okay. When you have players controlling almost 85% of the overall market, I think it gives some amount of pricing power to the larger players. Plus, you get the operational benefits of having a larger capacity, better operational efficiency. So in every way, it's a good thing for the industry. For Ambuja Cement, I think they've not paid too high. The valuation seems all right, given the fact that this is an ongoing plant. You know, if you set up a new plant, it takes 3 years gestation. There's an interest cost added for the money that you put in upfront, and taking all that into consideration, I don't think the valuation is that expensive. So it's a positive for Ambuja Cement. Of course, for Orient Cement shareholders, it kind of creates a base, of the price. But one thing I will say that, we've seen in the past that whenever these acquisitions are made, it's not necessary that Orient Cement shareholders stand to benefit significantly. You can take Sanghi Industries, a similar acquisition done by the group of yours, Adani, where they've signed an agreement on certain buying conditions, which allows only certain amount of profit to go to Sanghi. So if I were the investor, I think I'd much rather be at this point in an Ambuja than an Orient Cement. So if you are holding the Orient Cement shares, I would tender them, and then whenever I get a chance, I'd buy the ACC Ambuja stocks. I mean, more Ambuja than ACC, but yeah.
Okay, that's a fair and good advice to give on a day like today. Thanks, Samir, for that view. And the standard disclaimer, of course, that we have to provide you with. This is NDTV Profit, part of the NDTV Group, and it is owned by Adani Group, which owns, of course, Ambuja. Let's talk about the first queries that have come through, and that number that you see on your screen, that's where you send your questions to us. If you're tuning in for the first time, make sure you tell us what your name is and where you're tuning in from. The first question is from Gujarat, from Porbandar. Kamlesh Majithia. I got your name wrong. I'm so sorry about that. Kamlesh is asking a question about Saregama, which he's bought at a price of 570. He's got 250 shares. Swati, what's the advice that you would give for somebody who's holding at a loss?
Good morning, Alex, and all the panelists. Overall, the view is a little bit cautious. Why I'm saying that? Because on the weekly chart, the stock has given the formation of a negative divergence, which shows that we might witness some sort of a more correction towards to 470 to 480 levels. So up to that level, we might witness a correction, and from there onwards, we might see some sort of a reversal, which might take a counter towards to 540 to 600 levels. But at the current levels, view is a little bit cautious. If your plans to hold for a short-term duration, definitely you can hold on and you can average it out at every dips towards to 480 levels. So it's a hold from my end at the current levels and wait for the average it around at the low levels.
All right. Now, as you know, NDTV Network has taken a giant leap with the formal launch of its new channel, NDTV World. Let's cut across to Erik Solheim, who is a former Minister of Climate and the Environment of Norway, as well as Lindy Cameron, UK High Commissioner, and Harjeet Singh, Director of Fossil Treaty, as well as Shishir Priyadarshi, who is the President, Chintan Research Foundation.
Together. And I'm hopeful that we'll find some of those today in this August panel. A quick introduction is in order. We'll get Erik Solheim as well. He's the former Minister of Climate and Environment of Norway. He's joining us from Oslo. Excellency Lindy Cameron is here. She's British High Commissioner to India. Harjeet Singh, Global Engagement Director, Fossil Fuel Non-Proliferation Treaty Initiative. And we have Mr. Shishir Priyadarshi, who's the President of the Chintan Research Foundation. Thank you so much, all of you, for taking out the time. And Erik is also with us here. Let me start by asking one thing, which I think would also set the context of why this conversation is so important, which is the fact that the speed with which we are seeing climate catastrophes happening around the world, their recurrence is now happening at an alarming pace. Developed countries are facing extreme challenges, but that also gives an idea about the fact that if the largest countries are struggling, then the extent of impact for developing and poor countries is, I think, frankly, unimaginable, because they don't have the framework, the solutions, and response as well. So that's one question I feel that all of you should answer in terms of when you talk about climate catastrophes, their impact, their speed, how does that play into the urgency with which governments need to find a solution? Ma'am, let's start with you.
Thank you. I think you're absolutely right. I think the lived experience of climate emergencies helps people to understand why their governments need to take policy action now. And nowhere is that more evident, actually, than here in India, seeing the floods, the landslides in Kerala and in Odisha. So I think it is really helpful in driving that sense of urgency. And we know that matters not just in helping to build a global consensus for policy change, but also in helping people to invest in what they need for resilience. So we've been really proud, for example, to be a founder member, along with India, of CDRI, the Coalition for Disaster Resilient Infrastructure, which is helping to ensure that best practice from India is actually delivered in the Global South to ensure that infrastructure is built in a resilient way. And we know that is really good value for money. We know that every dollar invested in resilient infrastructure pays off 4 times over. So it is important and it is really urgent. We're also really proud of what the UK government is doing. I mean, my new government takes climate change incredibly seriously. It was one of the first speeches that our new Foreign Secretary gave, highlighting the importance and the urgency of the climate and nature crisis. And we were really proud, for example, that we've literally just closed the last UK coal-fired power station on our journey to carbon-free electricity by 2030.
All right, and you can watch more of that on our social media platforms, including on our YouTube channel. But turning back to the questions that we have, and we've got Priyanshu, who's got a question on Tata Consumer, as well as Tata Motors. Would you hold for a year is the question. I'm assuming that he has bought already. And Samir, from that perspective, would you hold on to a purchase of Tata Consumer, which has taken a bit of a battering in the recent past, and Tata Motors?
So yeah, let's talk about each one individually. Tata Consumer, we definitely hold on to for the simple reason that we believe the consumer space in India is only going to keep growing. We're going to see Tata Consumer profitability increase as their product launches continue to increase, as their operating leverages play out. And then, of course, the Starbucks continues to roll out where they have a sizable chunk, and the profitability from that angle keeps increasing. Simply giving an example, what happened in Trent, where Trent sold some amount of shares back to Inditex Group for the Zara shareholding, which leads to a huge cash flow. I think a similar situation could happen for Tata Consumer. So there is value unlocking opportunity as well. So we're quite positive. On Tata Motors, for the near term, we still remain a bit cautious. So we don't deny the fact that, look, the auto sales are slowing down in India, which is a slight bit of a negative. The festive season was supposed to be where things turned around, but that doesn't seem to be happening at this point of time, at least by the management commentary that we're getting from across the auto space, which can be a slight negative because that could hurt profitability targets and valuations if Tata Motors are already a bit, I'll say on the fairer side, I won't say expensive. So, but what happens is when you are trading at fair valuation, your upside kind of to some extent gets gapped. We do believe the long-term opportunity for Tata Motors is extremely strong. So corrections would be great buying opportunities. Like I said, small corrections of 2% like today don't matter. It needs to be a significant correction. So of course, we corrected from the top. It went up to 1,100 odd levels and we're down to 900. So you've seen about a 20%, but also the run up, if you see, was quite significant. So I would like to say that closer to 750, 800 is where we have more comfort for buying from a longer term to generate decent returns, I would say, of 15 to 18% CAGR over a 3-year period.
Right. The next question is for something that's really in focus today, that is Hyundai. And Manthan is asking whether so he's got an allotment, of course, and he's asking whether he should sell or keep holding the Hyundai stocks that he's been allotted. So Samir, your view on Hyundai?
So if he had invested in the IPO, he obviously knew he was not going to get a major bounce. So obviously he's a long-term investor. Now, given that, I'm assuming he's a long-term investor. I'm talking on that angle. I do believe that Hyundai also will benefit from the growth that is going to happen in the auto industry in India over the next many years, 3 to 5 year period. I think sales in the auto segment can more than double over a period of time as we see a shift happening from bikes to cars. Hyundai caters to a varied segment of cars, I mean, from the entry level all the way to slightly higher premium SUVs. So they have got a good aspect of the Indian market, and as Indian market grows, they will continue to grow. They also have certain interesting launches coming up, which is the Creta EV. I believe, EV space is where maybe Maruti, the market leader, has missed out, and Hyundai can probably capture some market share, which is what Tata Motors is also doing, which we discussed a little earlier. So I again remain positive on Hyundai. Valuations are fair. The thing is, they came out with an IPO price which left nothing really on the table for investors to make money. And especially in a time where we are seeing sales slowing down a bit. So that's kind of adding on, building onto the pressure on the stock today. Of course, it's the IPO. But I think if you have a 2-year view, I think Hyundai can be something that you can invest in and get good returns. Now, if you ask me, is it the top pick in the space? Probably not. Tata Motors, for me, I think would be the top pick if it comes down to the 800 levels which you talked about. But Hyundai too could give good returns, so you can stay invested if you have a 2-year horizon. I think you will make good returns over a period of time. It may not be the top return, but you will get a good 14-15% CAGR.
14-15% CAGR is what you can expect. KNR Construction is the next counter that we're talking about. Halima has got this question. She's writing in from Bengaluru and she's looking for a short-term view. She's bought at 302 levels. The stock is trading very close to that mark, down about 3% in trade today. Swati, on the short-term charts, how does it look and would you hold on to it?
Yeah, Alex, the short-term chart is a little bit cautious only, but the interesting fact that is currently the stock is just hovering nearby support levels at around 295 levels, which is the previous swing supports levels. So if it's break that support level, then we're likely to witness some extension of this fall at least towards 270 levels. So up to that level, we might witness a sell-off in this particular counters. But the overall long-term horizon, if we look towards on a larger degree, definitely we are likely to witness a reversal from 270 to 280 levels back towards 350 levels. So if you're looking for a long-term horizon, definitely you can hold on this particular counter. For a short-term, my view is a little bit cautious. We might witness some more dips into this particular stock.
Before we move on to the next queries, Varun Beverages has come out with its Q2 earnings where net profit is up 22.4% at 629 crores versus that of 514 crores. Revenue is up 25% at 3658 crore versus that of 3266 crores. Let's also pull up the EBITDA if we can, and we'll have the EBITDA numbers soon, but this looks like it is beaten estimates for Varun Beverages in terms of the Bloomberg estimates that we had in the morning, Alex. And it's interesting because yesterday, day before yesterday, when Tata Consumer came out with its numbers, their beverages segment got impacted because of Campa Cola. So it's
30% growth in EBITDA as well, and by the way, the stock has bounced from the low point of the day.
And
it is still
recovering.
down about 0.9% or so, but it has bounced from the low point of the day.
Right. So it's interesting that it's good numbers. And this is despite the kind of heavy rainfall we've seen, because generally these beverage companies don't post good growth when it's monsoons, because the demand goes down for a lot of these beverages. So it's good. In fact, the EBITDA margins have significantly improved to 31.5% from that 27% mark. So good set of numbers for Varun Beverages in Q2.
It's surprising that you say that. Of course, I would assume that beverage companies would, not all beverage companies, I would guess, chai makes sense, right? So you would consume more chai. But having said that, the RBI in its monthly bulletin also said that the heavy rainfall in August and September had a result of reducing the GDP growth of the country by 20 basis points. So it's not just the beverage companies that are facing the brunt of heavy rainfall, unseasonal heavy rainfall.
Right.
It is the rest of the country as well.
Absolutely. But moving on, let's take the next query. The next query is from Vishakha, who's from Bangalore. And she's asking, which defense stock should I buy today? This is because defense stocks are tanking today in trade. And she wants to understand whether she should buy the dips or not. Swati, I'll come to you for this one. Is this the right time to enter any of these defense stocks?
Yeah, as of now, we are witnessing some sort of a price correction in this particular counter. If you want to check into the quality counter, I believe HCL really looks very good on the technical front. Even though we are witnessing some correction from the last 3 to 6 months, but I believe this is the one counter one should definitely have into their portfolio on every dips. If you're looking for a fresh long positions, I will suggest to wait on. If you're getting any dips towards to 4200 levels, then definitely one can go for a long positions. For a longer term horizon, I'm looking for a target of at least 5,000 to 5,400 levels. So this is the one counter one should definitely go for a buy.
I like the pun that you just spun, Mahima, on this. Defense stocks are tanking. Let's talk about Birla Soft. 1,000 shares bought by Manoj in Rajasthan. He's bought at levels of 682 and he's wondering what to do. He's in a loss. Swati, on the charts, what is a strategy that you would employ? He's asking whether hold, average or sell at this juncture.
while it's looking toward the market positions and the chart of the BSOFT, I will not suggest to average it out at the current levels. But there at the cluster support, the counter has formed at around 560 levels. So as long as it sustains about that level, definitely we are likely to witness some sort of a reversal, or say the slowly and steadily we will see the upward momentum towards at least 640 to 650 levels. So I will suggest to hold on this particular counter, not to do any average it out at the current level, but we might witness some sort of a reversal from the current market price towards to 640 to 650 levels. So it's a hold from my end.
The next question is from Shankar Prasad, who's from Karnataka, who's not from Karnataka, but he has a question on Karnataka Bank. Can we pull up the chart and see what is the price it's currently trading at? Because his question is very specific. So he's bought 500 shares and he's bought it at 250. Currently, the stock is trading at 212. So he wants to understand whether he should sell them right now and buy Union Bank or not. Samir, I'll come to you with this one. Fundamental view on whether he should sell Karnataka Bank and buy Union Bank?
So since he's asking specifically for Karnataka Bank, I don't think it's necessary for him to sell right now because the valuations are not so expensive, right? It's trading at about 0.7 times book value, about 7 times earnings. I think on the valuation front, it's quite comfortable. Where they are probably lacking about to some extent is on the growth. So if they are able to recapture some of that, I think it's okay. Would he want, if he is looking to make a shift, there are better opportunities than a Union Bank. Union Bank is not one of the stocks that we recommend from a buying perspective because we are not as positive on that. If he's only looking for a PSU, I think Bank of Baroda would be the right PSU. If he's looking to make an investment from a 3-year horizon, he said this ample number of times on a TV channel, IDFC First Bank remains our top choice in the space when it comes to small cap banks at the moment. For the simple reason of the arm that they have for loan growth and the fact that they've been able to grow their deposits faster and better than anyone else in the industry. And as they scale up, the strong management led by Vaidyanathan will continue to do well. We believe there's a major re-rating possibility that can come up in IDFC First Bank. So if he's only looking at Union Bank, no, I would not recommend selling Karnataka and buying a Union. But if he's willing to go outside of the one that he's looking at, our top pick is IDFC First Bank in the private sector space and the overall banking space. And if he wants a PSU only, then Bank of Baroda.
And we've got another question on Union Bank as well. I guess that answers that question as well, Samir, because you've specified what your picks are in the banking space. In the automotive space, relatively new listing, Ola Electric. It's been in the news for all the wrong reasons in the recent past. Service problems and after sales being a bit of an issue. We've got retired banker Rajan G. Iyer, who's writing in, and he's bought 103 shares at a price, he's bought 3,000 shares at a price of 103. And so therefore he's incurring a loss right now. So I mean, on the fundamentals, he says that he's not in a hurry, he's ready to wait 3 years. So from that perspective, do you think that the prospects are bright? And do you think that the issues that have been highlighted, which, by the way, the company is written into the exchanges overnight to clarify that several of these issues have been addressed, do you think that it should be held on to?
Oh, absolutely. I think one should hold on to it. So if you go back a few times into when I've spoken on your channel, when the stock had run up all the way to 140, 150, we said that we would like to buy the stock closer to the IPO price of about 175. We're there, we're roughly there. So I would be recommending a buy on the stock actually. And I'll give you my reasoning very simply that I believe the shift to electric vehicles is going to only accelerate going forward, and it'll be faster in the two-wheeler side given the affordability that is. Now, I don't deny the fact that the charges that are being made by consumers that, they've been dissatisfied with the vehicle on certain servicings and things like that. It's still a new product. It will take time for them to stabilize it. I mean, if you go back into history and see Tata Motors, when they launched their first car, they had a lot of teething issues. And then, of course, over time, they improved. I believe a similar situation was there. But the kind of business model that they're building, where they're going to be manufacturing batteries, which will take some time, of course, to come up. But once all that comes up, I think they will be able to increase their margins and profitability, which is something which is missing at this point of time. Secondly, I would like to add on is that if you see that their sales market share is not going down, even though all these complaints are there, which means that obviously it's a small percentage of the overall sales that is having a problem, which they claim they have addressed, and hopefully they have. And if that is the case, then I think the stock can bounce back quite nicely. I would be recommending for this particular person, hold on, since you have a longer term view. It will take time for them to come to profitability, but when they do, I think there's a major re-rating. And if you haven't bought, if somebody hasn't bought, I would even advise them to go ahead and add on to the stock at this point of time.
All right, that's a fair point. Samir, Swati, we have to slip into a very quick break. Viewers as well. In the meanwhile, why don't you send us your questions on that number that you see on your screen? We'll be back on the other side to take more of your questions, so do stay tuned.
I would like to congratulate NDTV on its World Summit 2024. This morning, the Honorable Prime Minister inaugurated the session, and it was a very inspirational talk by our Prime Minister, talking about not just India's role on the world stage, but also how India can play a role in the entire humanity across the globe. How India's aspirations can be the global or the world's aspiration. I think Indians have taken a lot of pride in seeing how India has been built in the last 10 years. Watching Prime Minister extol the virtues of what has been achieved and what lays ahead for India and the world was truly inspirational.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries, shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Welcome back. You're watching Ask Profit, a show where we answer all your stock related queries. Well, viewers who've just tuned in, you can ask all your stock related queries, whether they're fundamental or technical, on the number that is flashing on your screen. Just a clarification that, on the numbers of foreign beverages that we just discussed before the break, the margins are up at around 24% and not 31%. So just a clarification there.
But still good set of numbers.
Good set of numbers for sure. And the stock is kind of recovering, not done much, but kind of recovering. But yeah, moving on with the next query, and I'm going to dread taking this query, Alex, because it's from...
You'll get there.
Yeah, it's from Jaya Krishnan, who's from Kozhikode.
Very good.
Yeah, I pronounced it right this time. And his question is whether, is this the right time to enter Dixon and Polycap? If this is not the right time, then what is the entry level that one can consider for Dixon and Polycap for medium term? So Swati, I'll come to you for this one. Both Dixon and Polycap, how do they look on charts?
Both are trading near its overbought zone as of now. If you look towards the polycap particular counter, in the last year today, it has given the breakdown of the short-term moving average, say the 50 and 100 DMA. So now I believe we might witness some sort of a sell-off, continuation of the sell-off towards at least 6,400 levels. So if you're looking for any long fresh positions, definitely any dips towards to 6,400 can be a good level to take a buy call. Coming towards the Dixon, as of now, there is no major reversal sign as of now. The counter is trading in the pattern of the higher tops and higher bottom formations. But looking towards the markets, I believe we might witness some sort of a correction towards to 14,500, support provided by its 20 DMA. The past history shows that whenever the counter corrects, it takes the support of 20 DMA and again it's heading towards its new high. So any bottom up towards to 1400 or 1450 levels, definitely one can go for a long position, but not at the current market price.
All right. Very good, I must say that your pronunciation of Kozhikode has improved quite significantly. Yeah. PNB Housing is the next counter that we're talking about, and we're looking at holding this for a period of 1 year. Ankesh from Bengaluru is asking whether it can be bought at the current price for the next 1 year. The stock has done okay over the last 12 months in the context of, several other multi-baggers at 20% is nothing to write home about. Swati, from that perspective, would you say that it's a good buy from a one year perspective or better opportunities available?
Yeah, I'm not that much bullish on this particular stock if you're looking for PNB Housing. Why I'm saying that, because if we check on the weekly charts or the monthly chart, the stock was trading above nearby it's the higher time levels, and we are witnessing some sort of a correction from 1200 levels towards to 900. The stock is just breaking all the support levels of the previous, and now I believe it might see some extension of this fall towards to 800, 840 levels. So I will not suggest to take a fresh long position into this particular counter. If you're looking for a stock from this particular sector only, I will suggest go for the LIC Housing Finance. No wonder this counter is also witnessing some sort of a correction, but definitely for a longer term horizon, this stock will do the better performance compared to the PNB Housing.
The next question is from Murli, who's from Bengaluru, and his question is on SBI, and it bought it at 808 a piece. The quantity is not mentioned though, but he's asking whether he should hold on to SBI or not. Sameer, I'll come to you on this one. Should Murli hold on to SBI?
Yeah, for over a 1 year view, I don't think there's a problem to hold on to SBI. I think the growth opportunities are quite strong. I believe that, yes, in the near term, if you're a short-term investor, then you could see NIM pressure. So the next 3 to 6 months may not be as great for the fundamentals, the earnings that come out. But from a longer term perspective, we believe once the deposit rates start cooling down, which will take some time, and you see the corporate sector starting to borrow again, this will take some time given the fact that money is so freely available from the equities. Companies much rather raise money through the equity mode than through the debt mode. So for the time being, next 6 months could be a little tough, but if you have a 1 to 2 year horizon, I say hold on. There's value unlocking. SBI IMF may come up for a listing, so that could also add on to the thing. Stock has run up, no doubt, but if you have, like I said, a longer term view, you will make decent returns.
Interesting. Incidentally, Sameer, this morning we picked up a piece of information on State Bank of India, speaking of fundraising, that an AT1 bond, additional tier 1 bond issue is taking place by State Bank of India. 5,000 crore, which includes the green shoe option, is also something that is on the card. So we'll bring you updates as and when we get them. Certainly something that banks might start looking at again if State Bank of India is issuing an additional tier 1 bond. Shishir Biswas from Jamshedpur has got the next question. And incidentally, I did want to ask about HDFC Bank. So Shishir, thanks so much for saving me the trouble. Sameer, I'm curious what you say about HDFC Bank, because he's bought at an average price of 1,500 rupees per share, and which is a great buy price, I would think. You spoke about compressing NIMs and or net interest margins, which ultimately is going to be reflective of the profitability for those that are tuning in not familiar with the banking space. But we saw, if I remember correctly, 3.46% for the net interest margin for HDFC Bank. And they've managed to protect the downside for the net interest margin. Would you say, therefore, that operationally they've done better than you expected, and would you hold on to them?
So first off, to answer the question, I would definitely hold on. Second, So we were not expecting as much of a NIM compression for HDFC Bank. For the simple reason that they already have a lot of high cost borrowing. So, when the merger between HDFC Bank and HDFC happened, HDFC actually had much higher cost borrowing than what HDFC Bank had. And over the next 2 years, as they continue to replace those old higher ticket loans with the banking funding, which is at a lower level, they may not go in for as much of a NIM compression as some of the other players will. I'm not saying that they will not go it, they have it, but it will not be as drastic because they had these slightly higher cost borrowings which are being replaced. So I'm not as negative when it comes to the NIM compression in the next 6 months for HDFC Bank as I am for some of the other banks. Having said all of that, valuations of HDFC Bank are still at probably the last 20-year lows. It's trading at about 2.2 times book, which is very, very attractive. I'm not compared to the historical. I'm not saying it's attractive on an absolute basis. It's still fairly priced. But as the bank growth returns, as they continue to replace these high-cost fundings, which we talked about, I think the profitability for HDFC Bank will continue to grow. So I would stay invested. In fact, I would even recommend adding on more at any small dip.
Got it. The next query is from Debi Prasad, who's from Bengaluru again. And it's a quite detailed query that is asked, Alex. He's holding SBI cards since the IPO issue, and the issue price was at 755 a piece. And during lockdown, he's saying that it went down to 499, where he bought few more. But till date, SBI card hasn't given any bonus or share split. Rather, the share price stays near 700 or below. He's saying, should I sell or hold? And his stockbroker is suggesting that this will go to 900. But he's saying that given the ballooning credit exposure non-payment cases, is it safe or not? So excellently detailed query and elaborated query is asked. I think, Samir, I'll come to you with this one again because he wants a long-term view whether he should keep holding SBI card or not.
So my personal view is to hold on, but yes, what he rightfully said is there is a bit of stress in the credit card space. We've seen it not only we've seen it with Kotak Bank, we've seen it with the other RBL Bank that came out with results. We've seen that this part of the business, this non-secure part of the business is going through a bit of stress at this point in time. So SBI Cards, who pretty much is only doing this card business, could see their NPA spike, which could affect their profitability in the near term because they would need to make provisions for these, and these provisions can be quite large. Having said all of that, valuations are relatively not so bad. If you see, the stock has been a massive underperformer over the last, ever since its listing, it's down from where it was and it's really not ever bounced back. So it could probably go through a similar consolidation sideways movement for a little bit longer, maybe another 6 months. But if he has over a 1 to 2 year view, I think the stock will eventually rebound as collections will improve, as the economy starts seeing an uptick, as we see the negative cycle from, the positive cycle coming in from a good monsoon, from the rebound in the rural segment and from the broader, from the entire space. I think there will be some benefits that come through. So maybe after 6 months, the stock will start performing. So hold on if you have patience.
Okay, Suman from Hyderabad has got a question on Cochin Shipyard, which Suman has bought at a price of 1,835. Should they continue to average or wait for it to stabilize? It's been under a little bit of pressure. It is currently under pressure as well. It's down 5% even as we speak. So Swati, on the basis of what you're seeing on the charts, what should the strategy be here?
Currently, the counter is down by almost 16% on a monthly basis as such. The counter also the interesting fact that it is just entering into the oversold zone. So downside, it might find a support nearby 1380 levels. Up to that level, you can hold on for this particular counter and average it out up to that levels. From there onwards, we might witness some sort of reversal only if the stocks manages to give the breakout of a 1520 levels on the higher sides. Then only we can witness some sort of a reversal. But the overall, the trend as of now, it's down. We might see some sort of a reversal in the near future once it tests the support of a 1380 levels on the downside. So it's a hold to take a average it out. Any dips towards to 1380 levels, you can definitely buy the position.
Got it. Well, the next question is from Sudhakar, and his question is on Morpen Labs. Now, he's bought it at 86, and he wants to know the next target price from a short-term view. So, Swati, what should be the next target price for Morpen Labs?
In Morpal Lab, as of now, it is currently trading below the 20 DMA, which is the short-term moving averages. Positive momentum can be seen only if the stocks gives the breakout of 86 levels. Any move above that level will see some sort of a positive momentum towards to 94 to 100 levels. So at the current level, view is little bit cautious, but definitely positive momentum can be seen only above 87 levels.
Okay. Tanla Platforms is the next counter that we're talking about. We've got Ankit from Hyderabad who's writing in, who said that he's bought 800 shares at an average price of 1,100 rupees per share. Looking for a long-term view on the stock. The stock is currently trading significantly below the buy price and he's lost quite a bit of money. Samir, on the fundamentals, why is this not working? And what should... all right, we have to... apologies, Samir, I have to... avoid asking this question because there's an update coming in from the NDTV World Summit and there's an interesting conversation I'm told that you should definitely pay attention to. Listen in.
Get an opportunity to capture what disruptive technology can do, but talk about, I think, the biggest talking point in living rooms right now, which is, aaj market mein kya ho raha hai?
So first of all, thank you so much for inviting. Do you want me to answer that question? Market mein kya ho raha hai?
Before we start, do people randomly come up to you and ask you, quick tip hai kya? Kya stock kharide? Because you run Groww?
People used to a lot, but then they got just so bored of our answers that now they have stopped asking those questions.
Okay, let's start with the story of Groww. Tell us, of course, you started in 2016. That was a time, markets have been in a bull run for a while, undoubtedly, but that was a time when I think online trading had not become as prevalent perhaps as today. Yes. What was the idea behind it, the thought process?
Got it. So we were working with Flipkart and personally I started investing like when I was in second year of my college here in Bombay around 2000, 2001, right? So was really passionate about investing and found a good set of folks, three awesome co-founders, all were passionate about financial services and so on. And we saw that we were also lucky to see how e-commerce grew in India, right? Everything becoming online and so on. And then we looked at the penetration of, how many people are investing in India, mutual funds, stocks, and so on. And then we saw like on Nifty 50, the constituents of financial services is like very large part of everything. And in the hindsight, if I see a lot of dots connected, right? And there was this opportunity to kind of create a crazy big impact, leveraging our technology to reach out to like millions of customers, millions of people across India. So that was the starting point.
Did you expect this kind of a trajectory, or that there would be this huge quantum of Indians across, it's not just middle class Indians, everyone now has some equity exposure or the other. The boom has been immense. Did you expect that to happen, or do you think that that's something which came about in a post-COVID era? You were in the right place, right time to ride the wave.
So we were definitely lucky. And by the way, we are still like penetration-wise, we are still very, very low compared to...
Agreed. Relatively, relatively, I would say.
Yeah. So if we compare with 2016, right? Bunch of things played a very big role. Like, as you said, markets have been kind of very, very good. And then a lot of fundamental changes happened in India. And especially on the digital India side, like, Aadhaar KYC happened and UPI came and a lot of education started happening, a lot of campaign, mutual funds and all, right? So there were some signals that, this wave, like this is a very, very kind of long-term wave and this is India's time and so on. Did we expect this much? I'm not sure, because we did not think too much like, where will be in 8 hours. I mean, of course there were plans and so on, but I think we were lucky, yeah.
Yeah, so right time, right place. Right now, there are also concerns, Lalit, about, so for example, futures and options or derivatives trading. All the regulators recently trying to clamp down a bit on the kind of retail participation. I just want to understand what that what is the kind of volumes you see on a platform like Groww? Have you seen a lot of interest or excitement about weekly futures and options, for example, and the impact that you see of that coming down?
You see, Groww is a kind of very broad-based platform. It has like number of products.
Sure.
We have mutual funds, stocks, and then of course derivatives. There are like 15 to 20% of our customers who do derivatives as well. And as you rightly said, like over last few years, the interest kind of is high, and regulator, as you again said, that regulator thinks about the customers, thinks about the investors, and kind of more or less aligned with our kind of thought process also, because what matters is the long term. How are people making money in the longer term, and so on. And yeah, so I mean, yeah,
do you have an impact on volumes, or do you see those customers moving somewhere else? And do you think that retail investors needed to have been protected from things like weekly options?
I think, see, there are certain things where customer protection is very, very important. So from that perspective, I think we are in the right direction. Your first question about will it impact? Of course it will impact, but how much? What will be the degree? I mean, your guess would be as good as mine or anybody, because there are a lot of second order, third order effects of any rule that comes into picture and any kind of change that happens, right? So we don't know about that, but of course there would be some impact. Yeah.
Give us a sense of the kind of growth we have seen in equity investment across India, and because you're at a position where you can get that expanse. It's not typically, it used to be maybe Mumbai, Gujarat, some pockets of the country where there were avid equity investors. That's not the case anymore, is it?
Yeah. So internet plus Aadhaar, UPI, like they have like lowered the kind of barriers like anything. And then folks like us came who made it very easy, very transparent, and a lot of education campaigns and so on. So earlier, as you are saying, like investing was limited to cities like Bombay, Bangalore, or some cities of Gujarat and so on, right? But now you go to any like tier 2, tier 3 town, a lot of customers today are coming from like smaller cities. Why? Because all the information arbitrage that was missing, like now it's available to everybody at their fingertips. You can open Groww app and see, what is a mutual fund, what is a stock, what are the related parameters about them, what is their fundamentals, what are technicals, like anything, whatever you want is available. So, so that's a big fundamental change that has happened, and I think it's not like relatively new. I think the long-term trend started around that 2015-16, and again, we were lucky to kind of start at the same time.
Yeah. Lalit, recently, I think you've had a big move. Our conversation and our context today is about the India century. And we have seen in the last few years, a lot of startups and young companies choosing to headquarter outside India for tax reasons, etc. We are seeing right now a trend of a ghar vapsi, in a sense. And your company is one of them that has now decided to move your headquarters out of US to India. So first of all, congratulations on that.
Thank you.
And tell us why.
You see, India, Groww is an Indian company. Customers are in India, management is in India, all operations are in India. So it did not make sense to kind of be outside India. We had to go, we were a YC company, so we had to register in the US, but now there is no reason why we should not be in India.
You had to pay more taxes to come back though.
Yeah, I think in long term, that's a price you pay. But in long term, I think it would be very good for us.
It's also paving the way to tap the equity markets. You're setting up for an IPO by coming back?
Maybe in some time, yeah. But yeah.
It's on the cards.
It's somewhere down the line, but we don't know when.
Okay. I'm trying to fish a headline out of you, Lalit, which you're attempting to avoid. But nevertheless, I'll go with somewhere down the line. So yes, the Indian equity investor is the center of all attention. IPOs are making, a huge inroad to investors, mutual funds as well. What do you think is the next big phase of growth? Will it continue to be mutual funds? Will it be IPOs? And will this confidence of investors sustain? Because we've seen in the cycle of equity markets in India that a bull run comes, one bad phase, and investors flee.
Yeah.
This time, do you think the things are different?
See, again, very hard to predict the future. We will come to know. On the next products, I think mutual fund is the most beautiful product for retail investors, at least, right? And then there's a lot of innovation that is going to happen there as well. Penetration is still very low. Like we compare ourselves with, let's say, 2016 or 2020 and so on. But if we compare with other countries, then it's still like very low. Like people are still kind of not beating inflation, right? And retirement problem is still not solved and so on. So there's like still long way to go. And I don't know whether there will be new products or not, but with existing products itself, I think there's kind of a lot of penetration. And that's where like companies like Fintech, where the cost of serving customer is very low because of tech and everything, right? Where you can penetrate into kind of, deeper sections of the country. Like that's the big kind of innovation that is going to happen.
Yeah, but you're also in a very competitive space because the moat is low, right? Because the digital infrastructure exists. You have a fair number of platforms that make it very easy for you to invest at a click of a button on your phone while you're traveling. How does Groww aim to remain head and shoulders above or have a competitive edge?
See, the biggest thing about financial services is trust, right? You're compounding trust. And I mean, if you continue serving customer really well, if you continue kind of being on the side of the customer all the time and keep compounding that trust, I think that's the brand that you create. Or like if you look at all the financial services, large companies in India, why do we kind of go to them? Because they are trustworthy and they have very, very good service and so on, right? So, and it's very hard to do that, like continuously understanding customers' need. Like there is a saying in our product world where, customer need is always ahead of you and you are just running to kind of meet it. And my strong belief is that if you continue doing that, and other thing is like there's a big playground here. Like India is a big playground right now. Like India growth story is like multi-decade story is what like you have to believe, right? And and continue kind of building for the customer.
So what is the next big exciting announcement we're going to be hearing from Groww, or the next innovation that you're working on, Lalit?
See, I mean, I would be very happy to tell if we kind of work that way. But so the way we work is like we work on bunch of things, right? There are a lot of customer feedback that we keep getting. So we go out and meet customers. Like I personally travel across the country, meet customers in all the cities and so on. And then we invite customers and we come with like hundreds of ideas from those. And then we kind of keep churning them. So it's like more like an innovation factory than, one big idea that I can announce here and tell, this is going to happen. So it's kind of very boring under the hood, but then, what comes out is like much more exciting for customers.
I think talking about customer feedback is the daily volume of people complaining that their tech is glitching or their app is glitching. Is that your biggest pain point? And not just for you, I think across the industry, because every once in a while you see this Twitter trend or this X trend coming in. XYZ company glitch, my trade got stuck, I lost so much money, please refund. Is that a big problem that still needs to be sorted, even as 99% of the time things are working smoothly?
I think more important than is the customer love that we get every day. Like, of course, like when you're building something very kind of, tech-based and very high scale, there would be anomalies, but I think what gives us energy is the kind of positive feedback we keep getting every day. So it's unfortunate that all the negative things are pointed like much more, but like, I get like hundreds of emails per day, build this, or this is very good, and you should get this feature done. And customers are also very vocal. One beauty about building a product where customers care about you is like they are very vocal about what they want. So in general, in consumer product, it's very difficult to find what customers want. right? You will have to use various tools. But in our business, at least, that is like very, very. So we are grateful to customers in kind of talking about all the things that they want on the platform.
But is the biggest area to work on for the industry as a whole on smoother transactions and more tech-enabled transactions? What is the next leg?
There's a lot of investment that is needed. See, infrastructure is very complicated. So, like we have almost like 400 engineers working on just that, kind of getting things like very perfect, because it's about customers' hard-earned money. And that's like the promise, like reliability becomes the number one kind of item in your roadmap all the time, right? And rest everything is secondary.
Fantastic. Thank you so much, Lalit. This is truly an example of innovation driving a business that is growing, a hallmark of growing India. Thank you so much.
Thank you so much. Yeah.
At the NDTV World Summit and looking forward to a conversation between two amazing investors, Mark Mobius, Ramesh Damani. Gentlemen, what are you planning to talk today? I would love to not be the fly on the wall, but be in the audience as well. Ramesh, you want to start? What are you looking forward to?
Sure. Thank you, Neeraj. Lovely to be here, of course. And it's such a great honor to be interviewing Mark. He's been variously called the Indiana Jones of emerging markets because he's always traveling, living out of a suitcase, but always discovering very exciting companies. So I want to ask him about two things, basically. First, what did John Templeton teach him? Because that was his first boss. And secondly, what does he feel about India? A few years ago, he was very bullish on India. Does he continue remaining bullish, or does he feel a bit let down now? I want to get his opinion on what is going on in India.
Yeah, we'll hear that in the interview, Mark, but quick 20 seconds. How do you feel about India? How do you feel about this summit?
I feel very bullish on India and continue to be bullish. As you know, it's been the last 5 years or more I've been bullish on India.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries, shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome. You're watching Earnings Edge here on NDTV Profit. I have with me Mr. N. Kamakodi, MD and CEO at City Union Bank. I'm Harsh Saita. First off, Mr. Kamakodi, the street enthused with regard to at least your growth numbers. 5% both sides of the balance sheet, advances as well as deposits. Just talk to us about what gives you the confidence in the current environment to go out and lend. You've done very, very well in this quarter where growth is concerned. And can that stay at that 4 to 5% sequential kind of run rate?
Over a decade or so, we had a consistent track record of about 15 to 17% growth rate of our book. But post-COVID, we had, let's say, a few years when the growth rate was actually lower compared to our earlier track record. So in that, actually things started once again from the January when we could see the growth coming quarter after quarter. When for the June quarter, it crossed 10%, and now it is in the range of 12%. And our entire growth has purely come from our traditional areas of strength, like the MSME, the commercial trading activities, agriculture, and gold loan. Even though we have expressed our desire to start the retail, probably, like say, the preparatory works are underway, and whatever growth we have achieved now is purely from our conventional areas, and new areas of growth, whatever we have identified, are yet to give their, let's say, contribution for the growth. So the track record, whatever we have seen, and also we started the exercise with the consultation of Boston Consulting Group to start the digital lending activities, where the decision making for the proposals less than 1.5 crore are being taken by the let's say system almost to 70 to 80%, and that has also started improving the TAT, and it has started improving the capacity to handle things, which has helped us to take things to the next level. So we feel before the end of the current year, we should be, let's say, touching the industry level growth is what we expect at this point of time.
Okay, so by end of this year, roughly teens kind of growth, is that what one can expect? Maybe 13, 14% for full year FY25?
Yeah, we refrain from giving any exact number, but what I can definitely say is that it will be touching the expected industry level growth before the end of the current year.
Okay, and with regard to margins, they've held up in an otherwise difficult environment when it comes to margins. Talk to us about what's happening. Are you doing higher yielding kind of lending, or what's helping your margins in this environment?
See, basically, like we had given our expectations that, like say, the margins will be at 3.6% plus or minus 10 basis point, and we are very well within that. Whatever expectations we shared with the market in the earlier quarters. Basically, like there were last year when the like say the rate of interest was increasing, like say we couldn't pass on certain like say rate hikes, which like say in fact had a certain impact last year. But this year, like say, since the decreasing interest rate scenario got delayed by like say a few months, if not few quarters, that has helped us to stabilize our net interest margin. Particularly, we are able to have better bargaining power in the new businesses we are booking to.
Okay, and do you believe credit costs have now peaked? You're past the cycle when it comes to credit costs. Your provisions number is half of what it was same time last year for first half of this year.
Yeah, basically, if you had a chance to look into the past strength, year before last, we had about 1,200 crore plus slippage, which moderated to about around 1,000 crores for the last financial year. And this year, we expect it will further come down by about, like say, come down by 200 crore to about 800 crore. And also, you may also find that the total recoveries, the recoveries from the live NPA accounts and the technically written off accounts are much ahead of the incremental slippages, which has helped us in seeing the reduced margin, like provisions and also the gross and net NPA numbers coming down in the successive quarters.
And do you therefore, what is it that you believe will be the kind of provisions credit cost number for this year in your opinion for FY25?
See, we don't normally go by such an estimate, but what we clearly say is that since the recovery numbers are more than the slippage numbers, incrementally the reversed provision will itself take care of the incremental provision requirements, and whatever extra provisions you make, that depends upon what is the targeted net NPA we would like to have, and these sort of decisions we will take it on an ongoing basis. So the point what that needs to be understood is that like the slippage numbers have come lower than the total recoveries from both live and technically written off NPAs put together, because over 90% of our, maybe even 95% of our total loan book is fully secured with to greater extent with the immovable collateral, and our recoveries from the NPA account percentage and all are like say we are able to recover about like say around 70 to 80% of the slippage amount at the portfolio level. So the incremental like say the recoveries since they are more than the additions, we are very safe in that.
Got your point. And when does ROA therefore start to inch up? Do you believe this is that year where you'll see an inch up with regard to ROAs? Where do you exit FY25? What kind of an ROA number?
We had for like say multiple decades, we had our average return on assets around 1.5% plus or minus, and we are back at that level after 2 to 3 years of COVID impact, and that ROA numbers are very well stabilized, and we should be able to have this ROA level, current ROA level is what we expect.
Okay, and do you believe that FY26 you'll grow faster than the system?
We are working for that, and since we expect some amount of incremental growth contribution will come from the new areas like secured retail and which we are planning to start, probably our growth rate we can definitely aspire and like say see getting more than about the industry level is what the visibility we are having currently now.
Okay, so that turnaround visible. With regard to NPA ratios, you said that at least your provisioning for this year will largely be zero except the adjustments to net NPA. So what's the kind of GNPA and NPA targets broadly that you have? I'm sure that there's likely going to be internal discussions even going forward, but broadly what are those aspirational numbers that you will be looking at?
We hope on the current trend, we should be closing the current financial year between 1 and 1.25%, 1 to 1.25% net NPA is what we expect at the current point of time.
Understood. So another maybe 0.5% kind of reduction or 50 bips reduction with regard to where net NPAs is concerned. Is that fair to expect?
Yeah, from the current level of 1.62, you have 37 bips will take you to 1.25%, and more reduction will probably get you somewhere. The minimum reduction has to be like say the 37 bips.
Okay, 37 bips minimum. Okay, and with regard to your loan book, I believe largely secured, so you're not seeing any fresh delinquencies, no stress from unsecured?
We don't have much unsecured, like say, like all our core business to greater extent is through the secured book, and that is because of that, like say, consistently we have higher recoveries from the slippages.
Right, and could you give us that component, the mix for secured versus unsecured in your book?
Yeah, like say the almost 95% plus percentage of our loan book is secured.
Understood. And therefore, from the unsecured side of things, are you seeing absolutely any pressure?
So far, no.
Understood. Okay. And asset quality, you believe even through this cycle will hold up? You're seeing some bit of stress in the system as a whole. You're not seeing it on your balance sheet yet. You are expecting that that will not reverse for you, right?
Yeah, fortunately, like say, when post-COVID, when the cycle started, you had, like say, significant increase in the loan book of the banking sector came from the unsecured retail credit. We were not in that segment at all. Because of that, okay, we had to, like say, face a certain amount of reduced growth. But nevertheless, when the tide turns on the opposite side, we are relatively safe. And since we don't have much unsecured portion, particularly the consumption type retail, right from the beginning, our focus had been in the funding for the, like say, I mean, mainly secured portfolio and funding for the creation of business assets, which had taken us so far. And in this asset quality issues in the unsecured front, we don't have much to complain about.
Got it. And with regard to your deposit side, what's the kind of growth number you would expect or aspire for? You have a healthy loan to deposit, I don't deny that, but you don't want it to get too far ahead as well. So how are you playing that? How are you playing things on the deposit side?
That's right. Like say, we feel and we continuously work that the deposits will not be a constraint for the credit growth, whatever we try to achieve. Is what we have as the rule, and we are going ahead with that focus.
Right. And what's helping you hold on to cost of deposits? Because it's not gone up substantially. It's gone up by maybe 20-30 bips over the last year or so. Do you believe all the repricing is done for you, or do you believe some bit of repricing still in the pipeline?
To greater extent, the repricing is over. And as you are expecting, like say, you have reached the fag end of the increasing interest rate cycle, and only the time of beginning of the decreasing interest rate cycle is getting debated. We think we are perhaps almost reached the like say peak level of the deposit cost for it.
Right, and of course you've alluded to the fact that we are likely going to see rate cuts going forward. Impact of that on your margins, if any, or you see a very marginal impact on your numbers on the back if that were to translate?
Definitely, you will see when the interest rate increases, there will be expansion in margin, and when the interest rate decreases, there will be, like say, some amount of impact. But one thing what you have to keep in mind is that if the rate of decrease in the, like say, interest rate is slow and steady, probably that impact will not be, like say, fast. So the both the yield on advances and cost of deposits will match. So we hope the decrease in the rate of, like say, the rate of rate cuts, when they happen, if they happen in a slow and steady fashion, by and large, the incremental impact on the margin should be minimal.
Okay, Mr. Kamakodi, great getting perspective. Thank you so much for coming in, speaking with us. Let's pull up the City Union Bank stock chart, because intraday it's flying away in trade. Many congratulations on a solid quarter, at least this time around. If we can pull up City Union Bank, kind of reflective of how the numbers have been. There you go, 14.5% now on City Union Bank. But first off, let me bring in Rucha Somaya as well, who's joining us on this show. And with us, we have Mr. Ashish Rai, who's the CEO at Orient Pro Solutions, to talk to us about the Q2 numbers. Mr. Rai, just talk to us about margins, because EBITDA not growing in line with top line. Give us perspective on what's happening.
Yeah, so look, I think my guidance of this while, Harsh, has been we'll have revenue growth between 30 and 35, EBITDA between 20 and 22, PAT between 15 and 16. I think EBITDA is between 20 and 22, came down a point. PAT is slightly above 16, so slightly above guidance. I think it not sort of emphasize too much from one quarter to the next. The reason we give a wide band is the numbers will keep on moving at the pace at which we are growing, the pace at which we are investing in the product, the pace at which we are expanding the markets. It's very hard to calibrate that number. I know people look at it. This specific quarter, I think we had a forex loss, which basically cost about a point on the EBITDA in one of its subsidiaries, about 4 odd crores. So that does move the number a bit, but by and large, I would not read much into a movement. It's a solid quarter. The revenue continues to grow, and we continue to deliver.
Right. Thanks for that, Mr. Rai. This is Rucha Somaya joining in. Can you tell us more about the margin walk? I can see that the change in inventories is what has hit the margin. Also, employee benefit expenses are a tad higher as a percentage of revenue than the last quarter. So how do you expect this to move in the second half of FY25?
Yeah, that's a very, very good question, Rucha. Thanks for that. So look, I think for us right now, the main focus of the enterprise is how do we capitalize on the demand environment in front of us. The demand environment has been really very, very strong. The question is how do you capitalize on it, and which means we will continue to put some product build outs ahead of revenue. So the way the product business usually operates is we do need to invest a fair amount of capital upfront to get ready if you're getting into new markets. So our core product build outs are by and large done, but there is a lot of incremental build around making the stack AI enabled or AI native, depending on what the strategy is, as well as getting market ready where we are succeeding. So we expand into Middle East, we expand into Southeast Asia, and there's a lot of market readiness to be done. So that sort of points to the R&D spend, which we expense out, and that is where the employee spend has been increasing. So you'll always have to keep investing a little bit ahead of revenue. So I think that's where the sort of movement has come in, right? I think we are not very intensive as an organization, but we do need to build up scale. We're now at 2,500 plus. We expanded the R&D setup quite significantly over the last, I would say, 3 quarters, and that will climb up a bit. But then, the revenue will also keep climbing up. So, by and large, that's the picture.
Got it. So, Ashish, a couple of quick ones on margins before I close that out. So, 20 to 22%, is that the band we can expect margins to be in? Because you've consistently been there. Couple of quarters, 23, but otherwise, 20 to 22% is largely the band we can expect you to be in?
Yeah, so Harsh, and probably I'll spend just a bit that comes in, right? So we will stick to that band, and we found that to be the right band, because when you're growing at 30-35%, parts of the business are growing at 50%, it's hard to calibrate margin down to a very fine point. The second is the philosophy of the organization, right? So unlike a services setup where revenue is just a function of people, the products and platforms business that we are in, we do need to invest a lot of capital to build the product out. We expense this R&D that is right now running at slightly above 9% of the top line, right? And that the commitment we have to the investors, or rather the guidance that we have, is we'll keep EBITDAs between 20 and 22. As the products scale up, obviously operating leverage comes in and the margins improve. We'll pour this excess back into the R&D spend, because right now, at least for the next 3-4 years, the focus still is getting new products out, capitalize on the demand in front of us. We'll probably have very, very strong demand the next 5-7 years. So this is the time to step up and not really try to increase the EBITDAs too much. But between 20 and 22, we feel confident about keeping it for quite some time.
Ashish, I believe there's a problem with bandwidth. I'm going to quickly have someone check on that. And maybe take a minute or two to do that. But while we are at it, I'm just going to quickly look at Orient Pro's numbers. They're guiding for a 30+% growth, Rucha. This is a company which is trading at trailing 12 months, 55 times in terms of earnings, with a 30% kind of growth trajectory, committing to a 20 to 22% kind of band where margins will be at.
Right.
So valuations will likely, maybe 2 years forward, start to look much better than what they currently are at. But just talk to us about product suite. What is Orient Pro doing in terms of expanding product suite? He's talking about R&D.
Right.
I'm curious to know.
Right. So Harsh, basically overall this company has two verticals. Number one is the sale of software services, which contributes around 68% of the company's revenue. And the next part of it is the sale of equipment and product license, which contributes the balance around 30% of the total revenue. Now the focus of the company is to expand the software services, and this time the margin in this vertical has come down a tad at 79% versus 84% same time last year, whereas sale of equipment and products license, which contributes a lower share of the revenue, has actually expanded in margin. It came in at 37% versus 32% last year. But we'll see what Mr. Rai has to talk to us about this one. But Harsh, if we look at the stock price performance, I mean, the company has really done well. It has given 125% returns over the last 1 year. Now, you talk to us about the valuation of the company. Do you think an investor should get into this, or what are your thoughts on this one?
Yeah, so I mean, of course, we'll have to understand from Mr. Rai as to how long can this 30% kind of growth run rate continue. Trailing 12 months, they're doing around 1,000 crore of revenue, around 215 odd crore of EBITDA, which is roughly at 21.5%. If they grow at 30%, this will likely also continue to grow at roughly 30 to 40%. It's a roughly 10,000 crore in market cap. It's trading at roughly 4 to 5 times EBITDA current, and likely that will, 40 to 50 times EBITDA current and 55 times earnings trailing 12 months. That's how I'd break it up. Not sure if we have Mr. Rai back. Stock is obviously down 5%. Okay, Ashish, if I can ask you, you've guided for a 30% growth in FY25. What I want to know is, demand traction is strong. How long can you grow at 30% for?
Yeah, so Harsh, for quite some time we think, we pivoted away from what was a fairly diversified IT services style model 4 years back into building out a global products and platforms player that can really play on the global stage, right? The dream was to build out a really mature enterprise technology business rooted in India. So we selected a few segments where we will operate. These segments, we were confident, have a demand runway going 5, 7, 10 years out, because there is something fundamentally transformative happening in those spaces, right? And that's why we feel so strongly about the demand environment, whether it's transformation on the corporate banking side, which is 55% of our revenues. We've got very mature products in lending, in transaction banking, where we see the banks continue to move away from their custom software builds into a mature global product. Whether it's transit payments, again, very strong demand, because we feel over the next 5, 7 years, the entire world will move away from closed loop payments to open loop payments, where we have a cutting edge stack, very successful in US, very successful in Central America, now moving into Europe, right? So each of these spaces, data center space in India, again, unprecedented demand. Enterprise AI, we feel, is a very, very large opportunity over the long run. So we selected these spaces because we knew there is something fundamentally transformative happening in that space, which creates that demand. So I think for the next 5, 7 years out, we do see a very strong demand runway ahead. We painted a vision 2030, 4 years back for ourselves. We want to be a top 3 global player in each of these spaces. We're still a fairly small player. These are all double-digit billion-dollar spaces. So we feel very, very good. We have to focus on the product. We have to focus on the technology, make sure we build out tier 1 products that can compete globally. I don't think demand is an issue.
Okay. So demand is not an issue, and AI is another next opportunity for you. But let me talk to you about the segment and highlights quickly. Well, the sale of software services, where 68% of your revenue comes in, dropped down a little bit in terms of margin, whereas the 30% of the side, that is the product license side, actually improved in terms of margin. So what kind of segmental mix do you see going ahead in second half, number one? And number two is, what kind of new product launches are you looking forward to in the second half of FY25?
Okay, yeah. So I think I would not read too much into the services versus licensing revenue from one quarter to the next, because most of these services that we do are also around the products that we sell, right? So I think it's a question of revenue classification, but because the order book has been very, very strong, because we won a number of new deals, when we win the deals, licensing revenue is a little bit more, and then the implementation revenues kick in, and then the support revenues kick in after that, right? So I think the mix will change from one quarter to the next. I do not think that makes a lot of difference from a margin profile standpoint. Of course, the steady state AMC revenues are very high margin, and while you're enabling the customer, you're low, but it sort of evens out over a period of time, right? So I think, sorry, I missed your second question, Rucha. Can you ask that again?
Yeah. What kind of new products are you looking forward to?
Yeah. So look, I think for us, the single biggest investment we are making right now is enterprise AI, right? So we feel, of course, there's a lot of sound bites around frontier models and LLMs and all, and we'll see where that game goes. But we feel as any technology matures, a bulk of the value creation happens on the application layer, and hence bulk of the value capture for vendors like us happens there. We are already a very mature enterprise application house, right? We did an acquisition for Arya.ai, which is probably one of the strongest enterprise AI teams exclusively focused on banking and financial services world, doing it for 10 years. Right? We are bringing together our enterprise application stack together with the ML capabilities, AI capabilities that Arya.ai brings into very, very mature offerings. A lot of the wins that we've announced recently over the last 3 months actually have been on stacks which have been AI enabled, right? So transaction banking, for example, we're bringing in more and more use cases around, right? So ultimately, I think a lot of where the banks use technology, right? I mean, they're using our applications, mission critical applications to run their business processes. That is where the value gets created. And that is where we are making a lot of investments around new product launches. The entire Orient Pro stack will be AI native pretty much in terms of the application stack going out.
Right. Right, Ashish, pleasure chatting. Of course, larger chat warranted, very interesting space. We look out for this one, of course, but good luck for Q3 and beyond.
Thank you, Harsh. Thank you.
But let's immediately cut across. We have Kunal Bell speaking at the NDTV World Summit. Listen in.
Why are we obsessed with 8,300 crores? Why are we obsessed with a currency that is obviously not ours? We generate revenues and profits in Indian rupees, not in dollars. And a mythical figure. If you think about it, like, it doesn't make any sense. Rather, isn't it better we build businesses with the intention of making them lasting and enduring and aim for goals which enable us to get there? So 100 crore revenue business which is profitable. Because the moment a company becomes 100 crores in revenue and is profit making, it is very likely it's not going to go out of business, right? And will keep going from strength to strength. And what India probably needs right now is not 100 or 200 or 300 unicorns or 500 unicorns. We need 10,000 Indicons, because that will form the bedrock of the startup ecosystem. Right. And that will create the steady flow of companies that eventually become listed companies and large businesses.
As you explain that fundamental, and it's a fascinating concept, but it's also an attitudinal expression, right? Like yesterday we had the Prime Minister here speaking about AI is not just for artificial intelligence, but aspirational India as well. When you come up with jargons and terms which are local in nature and something that's homegrown, it also reflects that aspiration.
No, absolutely. I think the Prime Minister has made an indelible contribution to the startup economy. When I started my startup journey, I was 23 years old in 2007. There was nothing known as a startup. There was no nomenclature called a startup, however strange that may seem right now. You either did a business or you did a job, right? And the business was typically the one you inherited or you joined your parents' business. There was nothing sitting in the seemingly twilight zone of this is not your family business and it is also not a job. There was no word for it. Imagine. Startup came into national parlance only around 2015 when the Startup India initiative was evangelized and launched by the Honorable Prime Minister. And because of that, startups gained legitimacy. They gained recognition. Suddenly parents in small towns were not aghast the moment their 23-year-old child who went to IIT after a lot of struggle by the parents, saying, I will not join McKinsey or Goldman Sachs or Microsoft or Google, and I'm going to start something and I'm going to make zero money for the next few years, and likely we are going to be in debt during that period. They were no longer aghast at that. And that contribution, I think, significantly goes to the Prime Minister, and obviously the role models that have now become available to the younger generation of founders.
And you know, for instance, I was wanting to ask you, when you come up with a term like snap deal, it's again something that's inspired. You studied in the US, and it's inspired by that the American influence. Over the last, let's say, 15 years, what's changed at that psychological level? I mean, is it the American influenced or American educated, or one who's gone abroad, who's come back here? I come from Bangalore, where you have most in the startup world speaking with an accent. Is that changing really in terms of how Indian homegrown startups are seeing themselves?
You know, what has really changed over the last...
I think it's a brilliant session, because if India doesn't start disrupting the rest of the world and showing the Indian way to innovate, I think we've lost an opportunity. And with the world in a crisis in terms of what's happening with geopolitics, with what's happening with health, I think this is the right time for us to come together with disruptive innovation, and I think that healthcare has a major role to play there.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries, shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards...
Simplifying futures and options trading.
Don't worry about the future,
as we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
In a world of shifting power dynamics, India stands tall as a global force.
Markets are near the day's high as heavyweights RIL and HDFC drag. Broader markets underperformed. Small cap registers big gains. All sectoral indices trade with deep cuts, with Realty and PSU banks leading the fall. During his address at the NDTV World Summit, Prime Minister Narendra Modi acknowledged investor Mark Mobius's vision for India. Later, Mobius expressed his deep affection for India, praised Modi's vision of digital India. Prime Minister Narendra Modi is en route to Russia for the 16th BRICS summit in Kazan. Beyond the summit's formal agenda, all eyes will be on Modi as he holds a key bilateral meeting with global leaders discussing everything from trade ties to climate change. It was a muted start for India's biggest IPO. Despite the buzz, Hyundai Motors debuted at 1,934 rupees on Dalal Street at a discount to issue price by 1.3%. Paytm's earnings results are out and they reveal a net profit of rupees 930 crore for the July-September quarter, surpassing expectations. However, the stock tumbled 5% as the profit was largely attributed to a one-time gain from divesting its ticketing business to Zomato. Hello and welcome. You're watching Market IQ. I am Himakshi Bahuguna, and let's take a quick look at the markets first. The benchmarks are near day's low, with Nifty below 24,600 and the Sensex above 80,600. The broader markets are underperforming benchmarks today, with the Midcap index losing 1.8% and the Smallcap index falling over 2.8%. The market breadth is skewed today towards declines, with the advanced decline ratio being 10:40. Nearly all sectoral indices are trading with losses today, with Realty and PSU banks leading the fall, followed by auto, media and metals. Nifty IT is marginally in the green. Speaking of the Nifty losers, Adani Enterprises, BAL and M&M's SBI are the top losers, whereas ICICI Bank, Nestle India and Ultratech are seeing some gains. Gautam Adani-owned Ambuja Cement acquires Orient Cement for 81,000 crore to expand pan-India share. The acquisition will add 16.6 million tons to Ambuja's annual capacity and will be funded via internal accruals. My colleague Mihika joins in with all the details.
So the update came in this morning, and Ambuja Cement will acquire 46.8% in Orient Cement, and the acquisition value is at 8,100 crores. Now the transaction will be funded entirely via internal accruals of the company, and they'll be making an open offer at 295 rupees per share, which is at a premium of Orient's yesterday's close, and this will trigger 26% acquisition of public shareholding, and it will this acquisition will add 16.6 MTPA of capacity for Ambuja, and acquisition will help Adani Cement as a whole to take its operational capacity to 97.4 MTPA. A little bit about the deal valuations. Well, if you take it at operational cement, just the 8.5 million tons which is currently on stream, the valuations come around $114 per ton. But when you talk about even the planned capacity, that's at $58 per ton, and both these values are lower than the greenfield setup cost of $110 to $120 per ton. A little bit about Orient Cement. Well, current cement capacity is at 8.5 MTPA. They have also ready to implement capacity at 8.1 MTPA, which was taken in the deal valuation calculations. Clinker capacity is at 5.6 MTPA, and the potential cement and clinker new capacity stands at 6 and 4 respectively, and they have presence across Telangana, Karnataka and Maharashtra. Now, when you talk about the benefits for Ambuja Cement, well, the acquisition will help Ambuja Cement increase its presence in South and West India. It will increase its pan-India market share by 2% additionally. And Orient also has large size, high quality limestone deposits at Chittorgarh to support capacity in northern India, which is around 6 MTPA. And the acquisition will improve the overall return on capital employed for Ambuja. When you look at it from Orient Cement's perspective, well, the opportunity will improve operational efficiency via a higher green power power mix and domestic coal linkages. It will also help in clinker cost reduction potential of around 150 rupees per ton, which is positive for the company's margins, and it also helps them achieve their target EBITDA per ton of 1,500 rupees by FY28.
Moving on, Paytm reports over 900 crore profit in Q2 on gains from ticketing business sale. The revenue for the same period dropped 34% on an year-on-year basis. My colleague Harsh joins us with more.
Well, YY, of course, revenue is lower, but when you're looking at it sequentially, revenues are up 10% on a QOQ basis, which is definitely a plus, because what you're likely going to see is we've seen the bottom in terms of the revenue decline in Q1 of FY25. So that's the key positive which I take from this. The 10% rise at 1650 odd crore in terms of top line, 1660 crore is where the top line number came, is largely in line with what even the street was anticipating, what analysts were anticipating. But the real number is that EBITDA number, which has come in sharply better than expected. The EBITDA loss has come in at 403 crore versus the expectation of 475 crore in terms of the EBITDA loss. Even your net profit, of course, is 930 crore. Let me break that down because some exceptional items there. 1345 crore is the gains coming in from the sale of ticketing business to Zomato. If I exclude that, your profit after tax is actually a loss of roughly 415 crore. The loss number was expected to be a higher 630 crore, and therefore a very strong beat coming in terms of the numbers themselves. But that's not the only thing that's come out when Paytm is concerned. You've also had a release which is coming through where the board has considered to give loans or grant loans with a default loss guarantee. They believe that this will accelerate loan growth for Paytm, and that's probably what's also causing a little bit of disappointment on the counter, because earlier they never used to give default guarantees on the loans that they were giving out. Now, of course, they will do that. What the mechanics will come out as part of the earnings. So we'll have to wait and watch, or rather as part of the commentary post the earnings, which have now come out. So commentary awaited. We'll try and wait and watch as to how that plays out. Currently, the company is providing a default loss guarantee of roughly 225 crore. It's a one-time amount which the company is going to provide for one specific lending partner.
Yeah, thanks Harsh for that. Now City Union Bank zooms after reporting the asset quality improves sharply in Q2. My colleague Vishwanath Nair joins in with the key highlights.
Right, so the City Union Bank shares were up about 14% a little while ago when I was checking. Actually, it's dropped since then, but still in the 12 to 13% range, primarily because of a very strong set of numbers. If you look at the profit number, actually, it's not really that good. The profit growth is only about 2%, but the true impact on, or the true benefit for City Union Bank is coming through on the asset quality front. That's a 34 basis points quarter-on-quarter reduction in gross NPA as well as net NPAs, which have improved about 25 basis points on a sequential basis. So that's a pretty strong set of numbers that are coming in from City Union Bank. The other part of the results which looked positive was the fact that net interest margin is about 13 basis points sequentially, and that's a sight for sore eyes in the current environment where most banks are actually reporting either flat net interest margins or slightly lower net interest margins. So there the bank has performed better. This is primarily being led by a higher loan growth than deposit growth. Deposit growth is about 9% compared to loan growth about 12%. So that's obviously helping the bank post good numbers for this quarter. According to what analysts believe, the growth engine has started now for City Union Bank, and going ahead, things are only likely to improve with return on assets as well as return on investments looking much stronger than what they were in the last few quarters. We will need to see what exactly Q3 for the bank looks like, because that's when the rest of the banks will start catching up. If things remain the same way, of course, City Union Bank looking like a very promising set of results.
Yeah, thanks Vishy for that. Now, India's largest initial public offering has landed on the D Street in a subdued debut. Shares list at 1.3% discount to IPO price at 1,934 rupees a piece. Brokerages sound bullish on the company with a possible upside in the stock price. Puneet is here with more. Puneet, what are the brokerages saying about the company?
Well, that's right. The results, the listings per se was a little bit of disappointment. But since being the largest IPO, I think that's what they get. Now, the problem is that brokerages have actually come out and, upgraded the stock to a buy. And they've initiated coverage on the same. So Nomura is the first one. They've initiated the stock with a buy with a target price of 2,472 rupees per share, or roughly about 20% upside from the current market levels. Now, Nomura has said that Hyundai has consistently been able to predict the change in the industry as well, and that was the last done when the SUVification of the industry, so as to say, happened in 2015 with the launch of the Creta. At that time, the SUV share was just 13%, has now increased 68% for a company like Hyundai. Apart from that, they mentioned that they are poised for long-term growth with this higher XUV mix as well, with improving average selling prices, which will help margins, as well as increasing the market share going forward as well. They've also said that having an Indian management on board for the last 2 decades has helped the company Indianize itself much better, and they're looking to increase that as well going forward in the listing. For the estimates as well, the Nomura is expecting a 8% volume growth over FY25 to 27 with the launch of 7 to 8 models for the company. They are also expecting EBITDA margins to come in at 14% versus 30.1% for FY24 over the next 2 to 3 years. And they're also saying that the Indian PV industry is expected to grow roughly 8%, 6% CAGR in the next 5 to 10 years, and Hyundai will be a key beneficiary. A similar notion has been echoed by Macquarie as well. They have a target price of 2,235 rupees per share, and essentially it says that Hyundai's market share in the compact and the mid SUV has been stable despite higher competition from Tata Motors and Mahindra. They've also said that it has outperformed its peers such as Kia Motors, which is its sister company, as well as Maruti Suzuki, and they have also higher EBIT realization per unit, as well as EBIT per unit as well compared to someone like a Maruti. So they estimate a 12% CAGR between 25 to 27 and implying a 25 PE, both these brokerages are, which is a little higher, 15% higher than Maruti Suzuki.
Yeah, right, Puneet. Thanks for that. Now, market regulator SEBI may come up with proposals on SME IPO oversight this month. This after the whole-time member Ashwini Bhatia reiterated concerns over increasing participation of the retail investors in SME IPOs, highlighting the risks involved. Charu Singh, who tracks the space, joins us with more details.
The Security and Exchange Board of India, the market regulator's stance on SME IPO seems to be very clear, as they want to bring in more stringent and stricter rules to deal with the risks and volatility associated with the same. Now, the whole-time member Ashwini Bhatia was speaking at the Morningstar Investors event, where he mentioned that a consultation paper with stricter rules could be up on the website very soon, and if they are able to do it soon enough, it could be out this month itself. Now, this is not the first time that the market regulator has said anything about SME IPOs or a consultation paper about the same. The conversation regarding the same has been continuing for months now, and there have been several advisories and warnings also given by the market regulator to the investors and the investment bankers associated with the SMEs as well, saying that there are several risks and volatilities and issues associated with SME IPOs, and these need to be addressed, and caution needs to be practiced while being associated with these IPOs.
Yeah, Charu, in fact, listen into what he had to say.
India accounts for the largest volume of F&O globally. We are number one, and globally also, more than 50% of the F&O volume happens in India. This is a crown we do not wish to wear. F&O cannot be and should not be a national pastime, which actually means that savings of retail participants move into the pockets of institutional hands.
Now, after finding irregularities in gold loan practices, RBI has asked supervised entities to comprehensively review their policies, processes and practices on gold loans. This has come after the central bank found that select lenders were exercising irregular practices in granting loans against gold ornaments and jewelry. We have Subhana Sheikh with further details from the circular.
So after the RBI actually increased scrutiny on personal loans, MFI, top-up loans, gold loans, agricultural gold loans could be next on the central bank's radar. Now this is because agricultural gold loans, have been growing rapidly in the banking system. Mainly public sector banks, regional banks, and non-banking finance companies are said to have been major lenders in this space. Now agricultural gold loans are basically crop loans or loans given for agricultural or allied purposes against the pledge of gold jewelry that falls under the PSL category of banks. Now, according to the circular, and sources are also telling us that actually the regulator is actually concerned about the misuse of funds, the misuse of loans by these borrowers, in this space because the outstanding dues of agricultural loans are far higher than crop loans. Now, in the circular that it had issued last month, they basically advised lenders to follow these practices and processes and adhere to these norms. And also RBI's warning on gold loans is also being considered that agricultural gold loans could, the growth of agricultural gold loans could actually taper down going forward. So yes.
Yeah, Subhana, now moving on, during the address at NDTV World Summit, Prime Minister Narendra Modi acknowledged market guru Mark Mobius's call for substantial investment in Indian stocks. Later, Mobius articulated his love for India, attributing its success to Modi's initiatives in digital infrastructure and economic liberalization.
जो भारत को सबसे ज़्यादा प्यार करते हैं, ऐसे श्रीमान मार्क मोबियस जैसे पारखी एक्सपर्ट यहाँ मौजूद है। वो जिस प्रकार भारत में होने वाले इन्वेस्टमेंट को लेकर उत्साहित है, उसका बहुत महत्व है। जब वो ग्लोबल फंड्स को कहते हैं कि अपना कम से कम 50% फंड भारत के शेयर मार्केट में इन्वेस्ट करें, तो इसका एक बड़ा मतलब है, बहुत बड़ा मैसेज है।
What he got right was trying to be all-encompassing to all the people of India through digitization.
The first thing is digitization.
That, I think, was a revolutionary idea and concept that included everybody. He was inclusive, and it accelerated what was happening in the market.
In what could come as a relief for middle-income consumers, the central government is working to extend the regional connectivity scheme UDAN for another 10 years so that private sector players gain the confidence to operate more regional flights across India. This scheme has made air travel accessible to over 1.4 crore lower middle-class passengers, bringing inclusivity to the sector. Aditya brings in the more details on the data.
Aspirational India is the key, and it is the dream of Prime Minister Narendra Modi that everyone who wears Hawai Chappal should be traveling in Hawai Jahaz. That's what he said at NDTV World Summit yesterday. And now let's look at data, because data itself shows that the dream of Prime Minister is coming true. UDAN scheme was launched in the year 2016, October 2016 to be precise. And if you look at the numbers, number of travelers before the year 2016, in the year 2014, the number of travelers were a little over 6 crores, which jumped to nearly 12 crores per year in the year 2024 so far. So the year has not completed yet, and we already have around 12 crore travelers in the domestic flights this year. And looking at the data further on, basically what data shows is that after 2016, when the UDAN scheme was launched, in 2016 the data was showing that there were around 10 crore air travelers, and after that in 2017 it jumped to nearly 12 crores, and further on it carried, and there was a lull during COVID era, but it definitely picked up right after that era, and the aviation companies were able to boost up their numbers because of the regional connectivity and the higher reach of the airlines. And let me highlight a few more important points very quickly. Under the Udan scheme, around 601 routes were operationalized with 71 airports, and this facilitated over 1.4 crore passengers. Now, in last 10 years, all of this has happened, and now government is planning to extend Udan scheme for another 10 years. So we can only imagine the impact it is going to create in the Indian aviation space.
मुझे याद है कि जब मैंने पहली बार कहा कि मैं हवाई चप्पल पहनने वालों को हवाई यात्रा कराना चाहता हूं, तो एक स्वाभाविक सा रिएक्शन था कि ये भारत में कैसे संभव है। लेकिन हम आगे बढ़े और उड़ान योजना शुरू हुई। आज उड़ान को 8 साल पूरे हो चुके हैं।
Finance Minister Nirmala Sitharaman, while speaking at the Columbia University on India's digital infrastructure, praised the digital landscape in the country and its role in shaping the economy. Listen in.
When I spoke about NPCI, I was grateful that very senior minister of finance in Mexico, he's one who's continuing the new government as well with the same portfolio, was keen to understand how India's QR code-driven revolution is actually taking digital payments to the grassroots level. So we will arrange for NPCI to go.
Some more national update. Prime Minister Narendra Modi is in Russia for a 2-day visit to participate in the 16th BRICS summit, which is being held in Kazan from 22 October. This gathering of emerging economies will see PM Modi engaging in a series of high-level meetings, including bilateral talks with Russian President Vladimir Putin and other global leaders, including Chinese President Xi Jinping. Well, that's all the time we had on this show for now. Do stay tuned to NDTV Profit for more news.
It's been more than a decade since I was on the ground here in India. I follow from a distance, but on the ground, what I see is the remarkable progress that India has made, and in particular, the success of the government in leading the nation into a better future. So it's very encouraging at a time when you see many other governments that are struggling to do anything right, to see a government that's really succeeding.
We're going to look forward to hearing this and a lot more from you. I'm not going to give most of it away, so stay tuned for that conversation with Paul Romer. Thank you so much.
Thank you.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries, shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with.
Hi, thanks so much for joining in. You're watching Ask
You're watching the Mutual Fund Show on NDTV Profit, and my name is Alex Matthew. I got the name of the show wrong, but I've got the show lined up for you. Don't need to worry about that because it's an interesting chat that I've lined up. You've seen over the last few weeks that there's been a little bit of wobble in the equity market. The definition of a pullback is a 5% fall from the peak, and we've actually witnessed that for the Nifty 50. Now, what we are going to be looking at today is one of the outperforming themes, particularly over the last year certainly, but in this bull run, we've seen momentum as a factor that has done incredibly well. And quite a few of you have benefited from that. In fact, a few fund managers espousing the factor as well when they're choosing to buy some of the stocks that they have in their portfolios right now. But the tendency of momentum to outperform in a bull run is tremendous. There is also a tendency to underperform when the markets see downside very quickly. To talk about whether or not you should adjust your strategy and what you should bear in mind, I'm joined by Nikhil Kotari, who's a director at Etika Wealth, as well as Akshat Srivastav, who's the founder of Wisdom Hash. Thank you so much to the both of you for taking the time, and welcome to the Mutual Fund Show. I'll come to you first, Akshat, on what you think of the momentum strategy, particularly over the last several months, certainly. But I think if you were to define this bull run, we've been seeing a bull run since the COVID lows.
So there are 3-4 points, right? So first is that momentum is a fairly new strategy in the Indian market. Even if you check some of the oldest momentum funds, they are not fairly old. So we don't have a lot of historic data to analyze the performance truly. So that's point one. Point two is that momentum typically does well when the markets are going up, right? When we are in a secular bull run, so to say. And we have been in a bull run since 2020, right? So this is two. Third, if we analyze the recent performance of momentum investing, it is not something to gloat about, right? So for example, in the last 1 odd year, it has, if you check the average performance of a momentum fund, it could be somewhere around maybe like 10%. The last 6 months have been really bad, right? For momentum funds, they have underperformed the market, even if you look at like Nifty from that example, right? So I would say that momentum is fairly new. It's flavor of the month type of a fund, so to say, right? It works great till the time it's working, and then after that, the investors need to be a little bit careful and do not run after this theme, because you need to judge the performance on a slightly long-term basis, right? So that's my initial impressions on the momentum fund.
So I do want to point out that the data that we pulled out, I will actually clarify on that in just a bit, but there's a second set of data that we should have where the Nifty 50 uptrend since October of last year to the 27th of September this year has been about 39.3%. In that time frame, a value fund has actually, or value index has actually gone up by 45.5%. And you have the Nifty 200 that has gone up 47%. If we have that data, can we pull that up, please? And in that time, we've looked at a momentum as well as a quality index. The momentum has gone up by as much as 73.3%, and you have the quality index that has gone up by 47.5%. So in terms of an outperformance, underperformance, you have an outperformance by value over the Nifty 50, certainly. But a broader gauge of momentum has done incredibly well over the last 1 year, gaining as much as 73%, not something that you can see in any given year. It's because of the outperformance of the benchmark, of the equity markets as a whole. Now, what we've also done is we've looked at the downtrend from the end of September to currently, yesterday's market close. And it's not really painting a very clear picture, because actually, what we've seen in several situations in the past, and Nikhil, this is my cue to come to you. In several situations in the past, momentum tends to underperform when the markets go down. And you also have value that underperforms when markets go down. In the recovery phase, you see value outperforming. Quality protects your money when the market is going down. So where do you think that we are in this cycle, and what should people bear in mind?
Okay, so as you rightly said, see, right now when you're looking at the data, it's only a very short period of time when the market reversal is happening, right? And if you look at today's data specifically, you will see momentum funds have slightly underperformed the broader markets, right? If the trend continues on the reversal side, then this strategy may underperform the broader market. Okay, but from a valuation perspective, I'm saying broadly what we need to know, the valuations are not cheap right now. There's a little bit stretched right now. So in that case, I'll say that one should be slightly more conservative when it comes to investing your money. And that's where the quality and the low vol index makes far better sense as compared to only putting all your money in momentum. So it's a time to rebalance your portfolio and add some part of quality index or a low vol index in your overall portfolio. So that's what I'm trying to say, that short-term reversal, it's a very short period of time, and then when we're seeing the reversal, if the trend continues, and the problem what happens in momentum strategy is more about illiquidity. See, what does momentum does? It keeps on buying stocks where the price trend is upward. Like when the reversal happens, and if there's a low liquidity in those stocks, and if you want to get out from those stocks, the impact cost can be very, very high. So if the reversal continues for a longer period of time, then you may see this fund slightly the strategy underperforming the broader market. From a diversification perspective, as I discussed, quality and low vol is a good to add a new portfolio.
Interesting. Akshat, I'm curious about what you have to say about fund managers generally looking at some of these factors. I know that they don't look at it in isolation, but they have increasingly been looking at these factors when they're trying to determine the stocks that should form part of their portfolios. What do you think about that? And have you looked at certain instances where this is very clearly evident?
So just a very quick note on the data that I presented. So for example, when you pulled up the data for Nifty Momentum 30, right? So that comprises of both large cap and mid caps. So comparing it to Nifty 50 is not a apples to apples comparison from that perspective.
Which is why we took the Nifty 200. Yeah. Which is why we took the Nifty 200, which in that time frame has gained about 47%.
Right. So, yeah, correct. Right. So, I just wanted to talk about the broader market index from that perspective. Now, talking about the fact that how momentum funds are typically designed. So as the other guest was speaking about the fact that it is, one needs to understand that in a riskier market where we currently are, where we have seen a little bit of a drawdown over the last 1.5 to 2 months, where things look a little bit wobbly. It is important to understand that if you are exposed to a certain theme, especially if it is illiquid, then the chances of that going down is fairly high. Now, momentum is a investing style. Now, based on that, certain funds are designed. So we are, so there is a little bit of risk associated with that. On top of that, if you are a beginner investor, you might just believe that, okay, you know what, momentum is just style of investing, which is ubiquitously applied, which might not be the case. You really need to look at the construct of the fund in which you are investing, right? Whether it has more exposure to mid cap, large cap, whether it has exposure to certain industries like auto that have done exceptionally well over the last 1.5 to 2 years. So you need to consider those points and do not believe that, okay, there is this one kind of momentum fund out there. So you really need to pick and choose from that perspective and take a more rational view. So these points might be a little bit complicated for beginner investors to understand.
That's a fair point. Nikhil, you want to come in on the strategy and what I was asking Akshat as well, whether you've noticed certain funds having a propensity or fund managers having a propensity to use these factors more. I know that they don't talk about it very clearly, but there are some instances where this seems evident that they are betting on more momentum than quality or value. Yeah.
So as I say, every fund manager will have a style, okay, and he will be known for his style. So we know Warren Buffett is value investor. He tries to find value when he want to invest for long term. So Prashant Jain used to a lot of talk about value investing. So what I'm trying to, every fund manager will have a style. So there are a few fund houses, few fund managers which follow momentum style of investing. There are a few fund managers which follows a growth style of investing. So when you talk in detail about the fund, it won't be explicitly mentioned in the scheme objective, but broadly, when you discuss with them, we understand that what the style they are following when they are investing their money. But from a more, I'm saying for more advanced investors, the good part is that now, since the passive fund will have a lot of strategies already played out. I'm saying you will have a momentum funds, you'll have quality funds, you'll have low vol funds. And so if someone wants to purely go with the one style of investing and you have well aware of what about the market situation and he wants to bet on particular style, then passive as a fund, he can choose those specific strategies and play on that fund. Otherwise, if you're going with a few, you looking at the past trend, you can broadly understand what the fund manager follows and then invest in that fund. So if you look at performance of those quality, so I'm just giving you, I won't name the fund, but I'm just giving you broad comparison. So if you look at last 6 months, if you see the quality fund managers has bounced back again as compared to the fund who are following a momentum style of investing or a value style of investing.
Yeah, that's a fair point. I'm coming back to you on this because, of course, some of these indexes, as has been pointed out by both of you all, we don't have too much of a history. There has been backtesting of them when they were launched. But Nikhil, there are a lot of people that are investing in it and are saying that they've had the benefit of that because look at the last 1 year, as I pointed out, you've had the momentum index that has gained 70+%. It's not something that happens every year and it's not something that generally anything can do for you, right? We're talking about an index itself that is practically more than or nearly doubled, right? You're talking about 70+%, which is incredible. So from that perspective, if somebody is employing a passive approach to saying, okay, fine, I'm going to put the core of my portfolio into a Nifty 50 or a Nifty 100 or something to that extent, and I'm going to also spruce it up by having these factors, there are people that have called it out and said, look, it's all baloney, but the results are for you to see yourself. So how should you go about it?
Okay, so a lot of time you have to understand that whether it was only because of style or it was a market cap bias also. So last 2-3 years has been very, very strong for mid and small cap stocks. So if any fund house who have a large portion of your money or any strategy which has got good amount of money in mid and small cap stocks, they have tend to benefit quite handsomely as compared to the broader market. So what I'm trying to say is that one need to understand that what was the reason why this strategy has worked in. What was the constant of this fund, and based on that, take a call on that. So as you see, if you see your own data, right? So what I'm trying to say, the momentum 30 has given 73%, whereas the quality 30 has given far lower than. So the momentum 30 has good amount of mid and small cap, and when you buy stock which is in a small and mid cap, when you buy a stock which is trending upward, right? Then because of the sheer low volatility, low liquidity, the stocks tend to keep on outperforming. But when the reversal happens, the illiquidity can be a big factor when the fund wants to get out of this fund. You may not get enough liquidity to sell this fund, and then you have a high impact cost. So when you're broadly looking at the portfolio, you also look at what is the exposure of mid and small cap in the overall portfolio, and then take a call. So what I'll say that going forward, as the market becomes more and more mature, as it will become a trend that you have a diversified as a core part of your portfolio, and you want to have some strategic exposure. You can have, at time you will have momentum, at time you will have quality, at time you have low vol as an index to add in your portfolio. So as I discussed last, when it's a downward trending market, adding a low vol index in your portfolio can make better sense, right? And in the bull market, adding a momentum in your portfolio can make a good sense.
Yeah, okay. And what I'm gauging also is that this is something that you add in your satellite allocation. We've spoken about this often on the show, where you have a core allocation and a satellite allocation. Akshat, do you concur with that view that these strategies that you would employ in different market scenarios would be in your would be in your satellite allocation? And it's also been said that you don't exit a strategy whole hog based on what you think is going to happen with the market, but incremental allocations can be adjusted based on where things are likely to be heading or where you think things might be heading. A lot of people have espoused momentum as a strategy whole hog and have benefited from it. But is this an opportune moment now that a significant amount of returns have been made for a shift in strategy?
Yes and no, in the sense that, for example, any investor should decide what level of risk they are willing to take in context of the returns that they are making. For example, many investors, they go with the thesis that, you know what, I want to make like 15%, 20% CAGR, right? That's my goal of getting into the stock market. Some investors say that, you know what, if this is the company chalta, I want to make like 25, 30% CAGR. Now, depending on your answer, you need to pick a mix of large cap versus mid cap versus small caps, right? So if we actually break apart the momentum funds that you are, the returns of the momentum funds that you were showing, it's primarily the underlying thesis or the underlying engineering within those funds is that how much exposure do you have to mid caps versus small caps versus large caps, right? In the last 1.5 odd years, small caps and mid caps have done exceptionally well. For example, if you would have simply picked, let's say, small cap index, it has given exceptional returns, right? I mean, and these are the themes on which people sort of, or the mutual fund managers build these momentum funds. So coming back to the discussion, I think a much easier question to answer for a beginner or an intermediate investor would be that, okay, how much exposure do I want to mid caps versus small caps versus large cap now, and accordingly pick momentum funds which kind of aligns with those needs, right? So that's what I would say. Final note from my side would be that the market looks risky right now. The mid caps and small caps have given exceptionally good return over the last 1.5 to 2 odd years. And if you are a conservative investor, it might make more sense, right? To be a little bit conservative at this stage and reduce your risk from the market by going largely to like large cap stocks rather than small and mid caps.
Yeah, that's actually something that has been pointed to by quite a few people at this stage. I'm curious about what you have to say about that. Nikhil, I'm coming to you on this question. We've moved past, I guess, this momentum conversation because ultimately I think both of you all have said more or less the same thing. If we're talking about a reallocation that fund managers themselves have done, and Sandeep Tandon, by the way, was speaking to NDTV Profit just the other day, earlier this week, I believe, all end of last week, if I'm not mistaken, and he's talking about the fact that he's utilizing the entire 35% in his small cap fund to have a combination of large cap plus cash. And he's utilizing that portion because he feels that there is a little bit of nerviness in the broader end of the spectrum, rightfully so. So how should investors in mutual funds react to something like that when the fund manager himself is taking a call or herself is taking a call?
So I'm saying from a pure investor perspective, what they should look at is that they should have an allocation towards incremental investments towards a flexi cap type of strategy or a large cap type of strategy. Looking at the overall portfolio, if they have a say 40-50% of their portfolio in small cap or mid cap, incremental exposure can predominantly to a flexi cap or a large cap oriented fund. If the exposure is 10 to 15% of your portfolio only in small and mid cap, then you can be in multi cap fund or keep on continuing SIP in mid and small cap. That's not a problem. As the exposure is 70-80% of your money in mid and small cap, that's a good time that you book some of your profit, move to a flexi cap or a multi cap strategy instead of only being in small cap funds. So depending on your overall allocation, you need to look at your portfolio. Again, in the small cap, you need to look at whether your fund is a quality oriented small cap fund or a momentum oriented small cap fund. If the fund is a momentum oriented small cap fund, I'll say that it's better to be in quality oriented small cap fund as compared to a pure momentum oriented small cap fund. So that some allocation has to be rejigged depending on your overall portfolio, depending on what allocation you have in mid and small cap and what allocation you have in specific strategies like a quality or a momentum.
That's a fair point. And incidentally, since you all were talking about the fact that small cap itself has outperformed, Akshay, I think you pointed out the small cap 250 up as much as 40% over the last 12 months. From the high point on the 23rd of September, it's down only about 6.8%, 6.7% or thereabouts, less than 7%. So we've not really seen, even in the broader end, despite the fact that we're seeing cracks in trade as I'm speaking to you, we've not seen drawdowns to the extent that it can really dent somebody's portfolio. So it's an opportune time to rebalance. Akshat, you want to weigh in as well? Nikhil has pointed out how you should consider rebalancing right now. What would you suggest as a strategy to rebalance right now?
So just to add to what Nikhil has said, I would also encourage people to look at multi-asset funds, right? So this is another important point, and the investment thesis here is that we need to understand the concept of mean revision, right? That okay, if typically like in an average market, Nifty 50 will give like maybe 12 to 13% CAGR. Small and mid caps will give 2x the return, with around 25% CAGR. Now, in the last 2 to 3 years, if we look at the CAGR, it has been much higher than their usual average, which means that the concept of mean revision tells us that in the future, if you're holding a mutual fund for 3 to 5 years, which most people typically do, there is a chance that you will not make that average CAGR of 12 to 13 on large cap versus 25% on mid caps. So therefore, like going to other asset classes might also make sense. So from that perspective, in addition to what Nikhil has said, I would encourage people to start looking at more multi-asset funds as well.
Point. You want to talk about some, Nikhil, very quickly before I get into the queries. And by the way, if we can pull up that number on the screen while we're at it, that number is where you can send, and we'll pull that up in just a bit. Yeah, that's where you send us your questions if you've got them. And if you've got a goal that you are trying to achieve with the funds that you're investing in, that would be more helpful to contextualize the question that you have. But Nikhil, you want to just give us a few examples, not necessarily recommendations, but the small cap funds that you were talking about that are more orientated towards momentum perhaps, or at least if you want to highlight the ones that are more orientated towards quality.
Yeah, so I'm saying from quality index, you can look at Access Small Cap as a fund, which is most likely biased towards quality. You can look at Kotak Small Cap, again, some part of it's allocated towards quality. On a mid-cap, you can look at DSP Mid-Cap as a fund, which is biased towards quality. So these are a few funds which I'm saying is slightly biased towards quality. You can look at those funds. Like in terms of FlexiCap, UTI FlexiCap is one fund, which is again biased towards quality. So these are a few funds which I'll say that you can add on your portfolio right now.
Okay, and Akshat, you specifically mentioned multi-asset funds. This is incidentally the first question that we've got today. Ravi Kumar, who's 37 years old, one of the funds that he's investing in is the ABSL multi-asset allocation fund. He's also investing in the SBI focused fund and the HDFC manufacturing fund. Are these good choices for wealth creation in 15 years? And he's also planning to invest in a mid-cap 150 index fund. Now, not very often that you see people venturing into the broader end of the spectrum for index funds, and not many options, frankly, available, but one is being considered right now. Should he do that?
It's not a simple yes or no, right? So first and foremost, if someone says that, you know what, I'm looking to invest for 15 years, then please don't track the market from tomorrow. Okay, so this is like one very commonsensical point that I would suggest, right? Now, if you're really looking to build like a 15-year strategy, then stick by it, right? I mean, you cannot like be tracking the market. That's one. Second, key piece of advice that I'll give you is that pick sectors, segments which will grow faster than the average Indian economy, right? For example, if you're picking manufacturing, and if you look at the growth rate of manufacturing in India, it is not that high, right? Compared to like the general growth of GDP per se, right? So from that perspective, you need to really figure out industries, sectors, mutual funds, which are exposed to those industries, which will grow faster than Nifty, which will grow faster than the economy. And ideally Nifty 50. So this is two. I think multi-asset allocation right now makes a lot of sense, right? Because equity as an asset class / stocks as an asset class have done exceptionally well. So right now it makes sense, but I can't say that, you know, this will continue to make sense in the next 3 years, right? I mean, it's very hard to do, but overall, like your strategy looks fine. Just try to implement these points. Mid-cap 150, right? Again, mid-caps in India typically do well, mid-cap, small-cap companies, because the unorganized segment or sectors in India are getting more and more organized. So, and this trend is already accelerating, and it will grow faster with time, right? And there's still a very big ground to get covered here. So sure. I think from on a 10-15 year basis, doing small cap, mid cap investing makes a lot of sense.
Sure. All right. Ravi Kumar, hopefully that answers your question. We have room for one more question. Balchandra has asked this. He's 33 years old. He's got a fixed deposit of 9 lakh rupees and he's looking to invest 5 lakh rupees in mutual funds via lump sum. Which fund should he choose and how should he quantify the investment? He's got a 2 to 3 year time horizon with a goal of 12 to 15% return. This is a bit incongruous, Nikhil, because usually you would look at equity investments at beyond 5 years and beyond, and he's looking for equity-like returns in a 2 to 3 year time frame.
So I think market has spoiled us completely. Yeah. So looking at fast return, what people think that 12 to 15% is a very reasonable return to expect in 2 to 3 year time frame. So I'll say that first, when your time frame is only 2 to 3 years, then you should not be putting your money in pure equity fund. You should be putting your money in hybrid fund, which is a mix of debt, equity. So in that case, multi-asset allocation fund or a hybrid equity savings fund will be a better choice because they will carry slightly lower risk as compared to broader market. But then your return expectation has to also come down, which is instead of 12 to 15%, you should expect 8 to 10% return on your overall portfolio. So you have two choices. If your return expectation is 12 to 15%, increase your time frame to 6 years plus. And if time frame is very fixed, then be in asset allocation fund and bring down your return expectation.
Okay, and what funds would you suggest in the hybrid category?
So one can look at ICC Equity Saving Fund, UK Multi-Asset Allocation Fund, Nippon Multi-Asset Allocation Fund. These are the three funds. But again, look at with a very clear 3-year time frame horizon.
Okay, three year at the very least, and equity 5 year to 6 years, what Nikhil has said, and practically every advisor on this program will tell you that you should look at investments in equity mutual funds at 5 years plus. Gentlemen, thank you so much for joining me on this program. It's been an absolute pleasure having you, and look to speak to you again very soon. That brings us to the end of this particular edition of the Mutual Fund Show, and there's lots to talk about still over the course of the day. You'll find all of that action right here on NDTV Profit. Do stay tuned.
I would like to congratulate NDTV on its World Summit 2024. This morning, the Honorable Prime Minister inaugurated the session, and it was a very inspirational talk by our Prime Minister, talking about not just India's role on the world stage, but also how India can play a role in the entire humanity across the globe. How India's aspirations can be the global or the world's aspiration. I think Indians have taken a lot of pride in seeing how India has been built in the last 10 years. Watching Prime Minister extol the virtues of what has been achieved and what lays ahead for India and the world was truly inspirational.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries, shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil
Well, this is Earnings Edge. I am Agam Vakil. We are taking stock of earnings from a whole host of companies. But at the moment, we have with me my colleague, Varsha, as well as joining us for the conversation is Supreme Petrochemicals ED, Rakesh Nair. Mr. Nair, good afternoon and thanks for taking the time out. Let's start by taking a look at how you are assessing this quarter gone by and what's the way forward here?
We have done well as far as the numbers are concerned on the EBITDA margins and our PAT is concerned. However, the volumes were flat, and particularly because the exports were down in view of the slowdown in the European and the American markets, and also in Turkey, and the West Asia crisis. So the overall margins are flat, but domestic market has done well. There was a growth in that. And in the first half of the year, domestic volumes are up by almost 17%, and overall volumes are up by around 10.5%.
Mr. Rakesh, Varsha here. So we've seen that West Asian crisis have impacted your exports. Now, what are you expecting when it comes to growth related to your exports and domestic market for, say, FY25?
See, the domestic market continues to do well, and domestic market, we expect that we would be growing by almost 8%. But as far as the exports are concerned, because of this crisis in the West Asian market and the slowdown in the Europe and Americas, we don't see any growth there, rather there would be a negative growth there.
So overall
volumes would grow. Overall volumes, we expect it to grow by around 5.5% for the year now, and domestic market would grow around 8 to 8.5%.
Okay, so overall volume growth at 5.5%, and also your contribution to value-added products. What was the contribution in this quarter, and where do you want to take it for FY25 and 26?
See, our value-added products they move in the range of 35 to 40% of our overall product profile, and it varies from quarter to quarter, the segment to segment, depending upon the product mixes. And we always are working on to increase the overall percentage of the value-added products, but currently they are hovering between 35 to 40%.
Right, Mr. Naik, can you also tell us about your new ABS project, which I'm assuming at the moment you're looking at 70,000 MTA capacity as well in terms of addition. And of course, the other facility that we have in focus, which is your Haryana plant. How much are you looking to invest in here, and what kind of revenue contribution can it bring down the line to your consolidated top line?
Our first line of the mass ABS, which is under implementation right now, would be completed by March 2025 now. And once it is completed in the full capacity basis, it would add around 1,000 crores to our top line. As far as our Panipat project, Haryana project is concerned, there we have acquired the land, and we are now working on all the pre-project approvals and the environment impact assessment studies and other things are going on. And it will be only the actual project implementations would start there towards the end of or maybe the third quarter of the next financial.
Sir, but if you could also give us an idea about the kind of capital expenditure which is going to go in these expansions?
The project for mass ABS first line is around 550 to 575 crores is going to be the cost there. And as far as our Haryana project is concerned, there the cost expected is around 850 crores. And we would be meeting all of these expenses from our internal accruals and our investable surpluses which we have. We are a debt-free company, and we don't intend to borrow for these projects.
Also, when can we expect the normalized capacity utilization for both ABS and Haryana facility?
Haryana facility, see that there are many products coming up there. They would all be coming up in stages. So it will be starting from 27, 28 onwards, the projects will go on stream. As far as the ABS is concerned, it will go on stream in the year 25, 26. It will be there. But then I would say that the full contribution or the full volumes would be reflected in our annual accounts for the 26, 27.
Okay, and also, so let's talk about your margins. We did see dip in margins quarter on quarter. Now, I'm assuming this is because of the pressure in exports. Now, where you want to take this margin? What is the sustainable margin, EBITDA margin?
See, the EBITDA margin in this quarter, we have, there is no dip as I see. We have done better than the corresponding quarter of the last year. If you look at sequentially, because the product is, there are peak months, there are lean months. So when the monsoons are there, they are the lean months. Otherwise, our EBITDA margins in this quarter have fairly stable, and very difficult to predict considering the international markets and the international environment, what the final EBITDA margins will be there for the year.
Right, sir, you briefly alluded to your debt levels. On a net debt basis, are we assuming that it's going to remain zero? And going forward, are we looking at a potential increase considering you have such a favorable debt to equity ratio?
No, we don't intend to borrow at all.
All right. All right, Mr. Nair, we'll leave it at that. Thank you so much for joining us and taking us through the earnings as well as what we can expect. Well, it's certainly looking like a strong quarter, and definitely when it comes to the top line. And of course, the management has a lot of plans in store when it comes to current capacities as well going forward. But from there on, perhaps we can shift focus back to the markets at the moment and take a look at how things are faring at that. So, at least as far as the Nifty is concerned, we're looking at a drop of around 0.8%. And, when it comes to the Bank Nifty too, well, down by around 0.7%. Both these key indices are currently trending in the red at the lowest or near the lowest points of the day. And even in the broader markets, we certainly do have a lot of weakness coming in. So that's something that you need to keep in mind as well. All in all, is the broader markets largely which are taking the brunt. Look at the small cap index, that's down around 3% right now. So there's a lot of pressure coming through. And again, it's something that we will have to bear in mind. Of course, a lot of this is on account of profit taking because of the substantial gains that we've seen in both the small cap and the mid cap indices coming in. Speaking of another company which has in fact done spectacularly well in terms of its share price over the course of the last 12 months is Gravita India. Sure, it is looking at about a weakness at the moment. It's taking a cut of around 11% right now. But we must remember the context. Look at the gains that we've seen in the last 12 months. There you have it. That's for you to see on your screen. In fact, I would say that Gravita India is one of the stocks of this year with the kind of appreciation that it has seen and with the kind of wealth it has generated for all its shareholders. Well, we've seen quarterly earnings for Gravita India as well, and we're going to take this conversation forward with Yogesh Malhotra. He is the CEO and whole-time director at Gravita India. Yogesh, good afternoon, and thanks so much for taking the time out. Your assessment on the quarter, the hits and misses, and what can we expect going forward?
So I think the results have been in line with what we have been guiding our and given guidance for the next 4 years. The EBITDA growth has been 27%, and PAT growth is around 24%. There is slight dip in volume growth, but if you look at the production have gone up, but the volume growth is only around 8%, and that is primarily because we had shipped some of the material into India, and those got cancelled in the consolidated numbers. Otherwise, the revenue numbers are also, the volume growth numbers are also in line with what we have been guiding our investors to.
Mr. Malhotra, Mahima also joining in. I want to understand that your margins have taken, quite a hit. It's come down from 8.7% last year to 6.8% right now. What has caused this dip in margins first off, and what do you expect in terms of trajectory going forward? How will the margins improve going forward?
So in fact, you'll have to look at our margins have in fact gone up. You'll have to look at other income also when you consider the margin, because that income contains the hedging gains that we get by hedging our material. It's in our case, it's part and parcel of the operational income only. So you'll have to consider that, and the current EBITDA margins are around 10%. So a sustainable number of EBITDA margin is around 8 to 9% in our case, and the margins have in fact improved. And going forward also, we would keep the same margins of around 8 to 9%.
All right. Yogesh, can we assume that in that case, the second half of this financial year can see an improvement in your overall EBITDA margins?
No, as I mentioned, that the EBITDA margins are in fact good. So as I mentioned earlier, also you'll have to look at the adjusted EBITDA margins. And why I'm saying this is there is a substantial amount of income that we get from hedging, which is part and parcel of our operational income. So what we do is that one leg of the material we sell on the exchanges, and then whenever we buy material, we then cancel that transaction. So you'll have to consider both the legs together to find out what the EBITDA margins are. That is a way of hedging the variation of the market for us. So you'll have to consider both these legs, and the EBITDA margins on a sustainable basis in lead would be around 18 to 19 rupees. Currently, if you look at this quarter, it has been 21 rupees, which is little higher than the sustainable EBITDA margin of 18 to 19 rupees. So going forward, also the 18 to 19 rupees mark would be there for the rest of the year. Sorry.
Mr. Malhotra, EBITDA per metric ton for aluminium has come down, and this is a pocket which is kind of impacting your operational performance overall. So I want to understand first off, why is that happening, and second of all, when do you expect a recovery here?
So aluminium EBITDA margins generally, because as I mentioned that we are hedging lead, which is around 85% of our total volume. Unfortunately, in the aluminium products that we are making, there is no hedging mechanism available currently. And that is why, because of any variability in the market prices, any volatility in the market prices, you see a change in the EBITDA numbers. But going forward, we are developing a mechanism with MCX in India, where they will have a contract for the products that we make in India. And once that happens, then the variability in the EBITDA margins for aluminium will also be gone. So we are expecting this to happen in the fourth quarter of this year. After that, it will help us in having a sustainable, consistent EBITDA margins for aluminium, and also help us improve the total volumes of aluminium that we are doing right now, which we are kind of not going 100% because of this variability in the prices of aluminium.
Sure. Yeah, Yogesh, let's now put the spotlight on your current capacities. From what we understand is that you're looking at 5 lakh metric tons in FY27 from a little over 3 lakhs back in FY24. I believe that you're also earmarking funds worth a little less than 700 crores for this expansion. Can you tell us how you're going to, fund this expansion, as well as what timelines are you working with respect to, different parts of this expansion coming on stream?
So in the current year, we are expecting overall capex of around 125 to 140 crores. Overall, this timeline for this 600 crores or 650 crores that we're talking about is the next 3.5 years to increase this capacity from current around 300,000 metric ton to 500,000 metric ton. But apart from that, the requirement to increase this capacity to 500,000 metric ton is only 350 crores. The balance 250 crores we are talking about is bringing in new verticals of lithium-ion battery recycling, paper recycling, and steel recycling. And the 350 crores that we are talking about is basically for the existing verticals of lead, aluminium, plastic, and rubber recycling. So all would be through internal accruals only. All these 600 crores would be through internal accruals only. But we are also looking at certain opportunities in merger and acquisition, for which we may have to get some money outside. There is a possibility of raising some debt for that if there's an opportunity, or we can go and raise some equity also.
Okay. Any particular segment that you're focusing on when it comes to mergers and acquisitions, that any company that you're looking to acquire? Of course, you cannot name the company, but any particular segment that you look forward to?
So we are looking at all the opportunities. Recently, we have taken a company in Europe, where we've taken a small company that is into rubber recycling. So majorly, we're looking at opportunities in the verticals of rubber, plastic, and aluminium. We're not looking at any opportunity in lead so far, but as and when there is a company or there is a geography where we are not present and we can have a quality acquisition in any of these geographies, we would be going in for lead also. But majorly right now we're looking at the opportunities in aluminium, plastic, and rubber recycling.
All right. Well, all right, Yogesh, we leave it at that. Thank you so much for joining us and giving us clarity on so many of those factors in terms of earnings. Of course, from there on, we move on to yet another important update, and this is from the cement space, where Ambuja Cement's acquisition of Orient Cement is in focus, and my colleague Sajit Mangat spoke to, Madhavan H. He's the Group CFO and Head of Strategy at CK Birla, which is the promoter company of Orient Cement. About the deal, listen in.
No, the rationale for us, as you know, we are a conglomerate across multiple business verticals. We are in consumer business, human building, technology, and healthcare as well. And we have been investing over the years in some of those specific businesses to disproportionately grow and create value. Now, as part of the conglomerate, as you would imagine, we constantly look at our capital allocation strategy. And given our focus, we being a $3 billion group, to double that turnover in the next 4 to 5 years, but also triple in value. So we are constantly evaluating our portfolio and investing in the new businesses that we would like to invest. And that is primarily the capital allocation strategy that we have followed as a.
And we saw the press release, it mentioned that your existing capacity is around 8.5 million tons, and the ready to implement capacity is around 8.1 million tons. Can you give us an idea of how ready is that capacity to go commercial?
No, but it's pretty much ready, almost to double that capacity as well. So there is the asset is a high quality asset. As you would know, we are one of the lowest cost producers of cement in the country. There is enough and more expansion capacity available, and there is also low debt in the company. So it's quite an attractive asset. So there is enough and more to create value and grow this asset itself.
Does it require any more capex to complete that capacity? Because I understand that there's further capacity that can be added to the entire asset.
Yeah, there is a greenfield expansion as well in this. From 8.5, we can go up to 16 plus, and there is a capex involved, and that plan is pretty much laid out for us anyway, so we know what it is, and that's in a way straightforward. We have the rest of the approvals in place to go ahead with that capacity expansion. So this is a question of execution in the coming years.
And it was purely meant to happen through internal accruals?
Internal accruals and borrowings at that point of time, but the new buyer can, of course, choose how they want to finance that. But that is how we were planning as well.
I was just wanted to. I was just looking at the release which you said, and Mrs. Birla had spoken about the fact that it's one of it's an attempt to consolidate as well as focus on key areas there. which are the areas that the CK Birla Group would be focusing once it exits cement? The big segment that you operate in is IT technologies, information technologies, where Birlasoft is there, and that's one of the largest piece in your listed space. So, which are the areas that you are going to focus on, and how are you going to take it forward?
So we have four major verticals as we move forward. Consumer businesses, there is a home and building space that we have. We have the healthcare space and also the IT and technology, as we mentioned. All four are critical for us. And as you would already notice, we have made this year 2 acquisitions in our healthcare business, in fertility. We have made 1 in HIL business as well in the building material space. So this is, while we invest in our organic growth, we are also continuously looking at the inorganic growth as well. Because our ambition is to, while we double this turnover, we are constantly looking at opportunities organically and inorganically to grow within and outside India. So for us, that is an important element of the strategy. And as we speak, we are evaluating assets both in the country and outside.
Okay, in the consumer and building material space, you have Orient Electric and Orient Paper and HIL. These are the 3 major ones, major companies which are there. What kind of outlook do you have on them in terms of the kind of growth that you're looking at, and the kind of capital they may be requiring to go aggressively and grow inorganically?
No, we are bullish about all the 4 verticals, also about the verticals that you had called out and the businesses you had called out. So there are plans as we speak that are getting executed for expansion, as I said, both within and outside India. So we are quite hopeful about future growth and specifically value creation. Financing has never been an issue for us as a group. We were always quite strong financially. Our balance sheets were quite strong across the group. So that's something which we don't worry too much about. Having said that, there has to be disciplined capital deployment as well. And that is what we are focused on as we speak.
There are 2 businesses which are not listed. One is the auto ancillary businesses, which is the NBC bearings that you make through NEL or NHE or something. And then the healthcare business where you have hospitals which are already there. Are there plans to bring those 2 businesses to the market?
The NEI, as you said, has the brand name of NBC as well. They're one of the largest bearing manufacturers in the country. They are having their clear expansion plans and portfolio expansion plans as well, and that is being executed as we speak. And in healthcare, as I said, we have already made 2 acquisitions. We are not so much looking at building scale, but building more excellence in clinical delivery, patient experience, and care. And that's been our core focus. And that will continue to be our focus as we move forward as well. At this point of time, there is no intention to bring them into the public space, but all these options are always open for us. When there is a right moment and there is a need, we always evaluate that.
The promoters, as per the shareholding, own nearly 38% in the company, and you're going to get 3,000 odd crores. So, do you plan to bring in, plow back this investment into some of the existing companies, or are you going to look at some new areas and newer verticals?
No, absolutely. As we speak, there is a portfolio of businesses that we currently have, and we are also looking at new businesses that the group will enter into as well. So we are evaluating both as we speak. As I said, capital has never been our biggest concern because we are always strong financially. This will only help us accelerate our strategy in terms of both value, in terms of both revenue and value acceleration in the chosen verticals that we have. So for sure, we will be investing in that growth and probably even accelerating it even more in the coming years.
Can you elaborate some of the sectors that you would be looking at?
Well, as we speak, we are very much focused on technology and technology-enabled services, and what can be beyond just pure play IT. We also have a strong engineering background as a group as well. And where the important part for us is we are no more looking at individual companies and their businesses. We are looking at capabilities that we have which straddle across these businesses, and how can we combine those capabilities to build new businesses. So the lens that we use is very different now in terms of looking at newer opportunities. And we are also of the view that we don't have to necessarily build every business, but also maybe invest in other businesses as well. So it will be a combination of things that we will do in terms of creating value. So both organic, inorganic growth for the existing businesses and new businesses where we will build and invest, or all the four options are out there for us and being actively pursued.
Given that you have exposure to the auto sector, are you also looking at the new verticals, the new electric vehicle or ecosystem around it? Because that's something which many companies are looking at to expand as we electrify automobiles in the country. So are you looking at that sector actively there?
No, we are already far into it. In fact, the companies that are in our portfolio are already into that space and supplying components to OEMs as well. So we are already in that space. We are looking at how to scale, how to partner in terms of technology to be more meaningful to the manufacturers as well. So that has been the strategy. But we are already well entrenched in that space and wanting to scale up now.
At the NDTV World Summit, and looking forward to a conversation between two amazing investors, Mark Mobius, Ramesh Damani. Gentlemen, what are you planning to talk today? I would love to not be the fly on the wall, but be in the audience as well. Ramesh, you want to start? What are you looking forward to?
Sure. Thank you, Neeraj. Lovely to be here, of course, and it's such a great honor to be interviewing Mark. He's been variously called the Indiana Jones of emerging markets because he's always traveling, living out of a suitcase, but always discovering very exciting companies. So I want to ask him about two things, basically. First, what did John Templeton teach him? Because that was his first boss. And secondly, what does he feel about India? A few years ago, he was very bullish on India. Does he continue remaining bullish, or does he feel a bit let down now? I want to get his opinion on what is going on in India.
Yeah, we'll hear that in the interview, Mark, but quick 20 seconds. How do you feel about India? How do you feel about this summit?
I feel very bullish on India and continue to be bullish. As you know, it's been the last 5 years or more I've been bullish on India.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries, shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
As we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and
Well, thanks so much for tuning into India Market Close. There is pain on the street. That's the only way to describe this. I was just trying to look at what the indices are doing, and well, there is serious pain. Now, we are at 24,571. The defense was at 750. Breached totally and still doesn't look like we are bouncing back. There's the problem. We are close to levels from where we should bounce back, but not happening. But the more important pain is at the broader end of the spectrum. This still looks okay. Compare this to what's happening at the mid-cap and the small-cap end of the market, and therein there's a problem. 2.13% lower for the mid-cap index. The small-caps are down 3%. At some point of time in the show, today or tomorrow, we'll talk to a small-cap fund manager about how the person is dealing through this pain. The advanced decline ratio is 1:10 in favor of the decliners. So Harsh will have a lot of, actually worse than that, 1:12 in favor of the declines. Harsh has the unenviable task of talking about the mid caps and small caps. I'll just highlight the large cap space because the heat map will look painful out here as well. Hardly any green, maybe an ICICI Bank, and think of what would have happened if ICICI Bank was not in the green per se, but everything is being hit. Adani Enterprises, Bharat Electronics, M&M, Tata Motors, it's across the board. There is no singling out sectors or themes. Everything is getting hit. But Harsh, more so at the broader end of the spectrum, and suffice to say, bad results are getting hit really, really badly.
You've literally taken it. The bad results, or even a little bit of a miss on any one metric, is really being taken to the cleaners, absolutely to the cleaners. And we'll highlight some of those stocks. We've highlighted the pain in both the mid-cap as well as the small-cap indices. Clearly evident, both of those, and even the market breadth, extremely weak. Now, in terms of some specific names, I'll first take it to earnings to numbers, try and focus in on some of those. Let's pull up something like a Supreme Industries. There you go, 9.5% lower. Guidance reduced, numbers not looking good, margins little bit off in terms of there's been a decline. We'll speak to management as well on this show. AB Realty, Balu Forgings. Balu Forging, strong numbers, but despite that, stock down 7.5%. 361 is the other one in focus. Anything where a revenue is even a slight miss, look at that, 7% lower. HFCL also down just by that much. A soft set of numbers again on top line, HFCL as well. Bansali Engineering down 7 as well. Ascend DLM, again, we called this in the morning that results were slightly weaker, but 5.5% lower on those numbers. Orion Pro Solutions down 5% despite margins being in the 20 to 22% band. Just wondering how stock is taking a knock by just 1% or so, margins being off, and that stock clearly taking a knock. Kajaria Ceramics also down 5.4%. Mahindra Logistics off on margins, 4% lower. Paytm first quarter of profitability. Of course, there was a one-off involved. The margin, the profit number was a beat, or rather the loss number adjusted for the extraordinary gain was a beat. Still stock down 4%. Jubilant Ingravia also down 4%. On the gainers as well, you have City Union Bank, a turnaround, a bit of a turnaround. Stock has done nothing over the last 12 months, so 12%, a bit of a relief for shareholders. But Varun Beverages again continues that strong number in terms of growth, PAT, as well as you're seeing good margins as well, 24% on that margin number, 1.5% higher, just about salvaging some relief, especially among earning candidates, and that one is up 1% or so. But anyway, there's another one, Epack Durable, order win up 5%, Ola Electric giving up some of those early morning gains, now up less than 1% in trade on the back of the announcement, of course, with regard to how they are resolving customer issues. Then, of course, new IPO on the block, Hyundai India, down 7%, no listing gains at all. Nelco, satellite, has stopped functioning, stock down 6%. Epigraph on the back of QIP, stock down 4%. Brokerage notes also not being bought into. Ultratech just about 0.1% higher despite some positivity with regard to notes. MCX down 2.5% despite a very bullish note by UBS. Defense stocks, and I'll just highlight 3 of them. Look at the decline in some of those. 11% on Garden Reach, 10% on Mazagon Dock, 5.5%+ on Zentech, even a Cochin shipyard languishing. Across the board, there is pain in defense. That's the other set which is in pain. But I mean, I'll just have to stop here because there's just so much pain across the board, Neeraj.
Ask our guests what to do in a scenario like this. Kush Bora, founder at kushbora.com. Aditya Agarwala, head of research and investments at Invest4EDU. Gentlemen, thanks so much for joining in, both of you. I want to start off by talking about whether it's still not the time to buy is fine. Is this a time to sell as well? A lot of complaints on social media about how we're not getting sell calls if indeed the charts were looking so weak. So, Kush, let's start off with you. What are you doing on the index currently? If you're not buying, fine. Are you selling?
Hi, Neeraj. First, a very good afternoon. I mean, wouldn't be one for a lot of viewers and investors, I'm sure. But just to address that query, we may not have given a lot of sell calls maybe on the Nifty or the index, but there were plenty of them on the stocks. Biocon is a case in point that we gave today during the FNO show. So there's been a lot of traction on the downside as well. In fact, those are the ones that have been hitting targets. Right?
Kush, this is not a specific comment on any one person at any one channel. In general, across social media, they're saying that how is it that sell calls haven't come in when the markets were looking so weak? So just wanted to make that disclaimer.
Oh, no, absolutely. No, my point is actually the reason those calls haven't been coming is that, Nifty is actually sort of consolidating. There's a fair degree of volatility. You'd see Nifty on 100 points down and then perhaps half an hour later, you'd see it 100 points up. So actually Nifty's been a no trade zone, very frankly, despite the kind of negative bias that we've seen. On an intraday basis, at least positionally, there's been, a negative or a short flavor for sure. Now, here too, my suggestion would be to, if you've got a short position, continue holding it till 24,400. 25,500 psychologically important, has a put base, all of that is fine. But if you do have a short position, you can continue holding on till the mark of 24,400. That's where the support zone comes in. Again, from a risk reward ratio, this is the reason why no short calls on the Nifty. From a risk reward ratio, now the short call will not make any more sense. 24,400 is a support zone, 150 points to gain. If a short covering rally does come about, then you're looking at a 250, 300 point kind of an upside move to 25,800. So from a risk reward ratio, a positional short call may not make sense. But if someone does have the the heart and the gumption for it, then sure, for about 150 points on the downside, you could still look at Nifty for a short trade.
Okay, Aditya, is there a trade on the Bank Nifty? Is there a trade on any of the other indices today before we get to specific stocks?
I think Nifty, no, I would not go ahead and short the Nifty at these levels. Bank Nifty, I think, can come under a bit of a pressure from here on as well. Some of these banks which are holding ground so far, the large cap ones, the ICICI, the HDFCs, can see some bit of a selling pressure from here on if Nifty actually does break 25,500, the immediate support zone as well. And I think though The bank Nifty has been holding on to its ground right now. 51,500 to about 51,400 is something that I'll watch out closely. If 51,400 is broken on the downside, I think Bank Nifty will see a further leg of downside. All the way down to 50,000 can also be tested on the Bank Nifty. So of both the indices at the moment, I think Bank Nifty is something which is looking weaker to me on the chart setup and can see further downside from here on. But I think as far as Nifty is concerned, I would not go ahead and short the Nifty at current level. Just look at Bank Nifty for a shorting candidate.
Okay, Bank Nifty for a shorting candidate. What should one do with regard to, I know, for stocks at the broader end of the spectrum, Aditya, when you're at the small and mid-cap end, where some of the pain is really sharp, what should one do in this market? I'm just asking for a general comment. I know maybe specific stocks may react differently according to you, but generally at this point.
Harsh, to be honest, I still feel that a lot of pain is still left in the market, especially in the mid-cap and the small-cap end of the market. And this is something that we've been highlighting for some time. If you take a look at the premium of mid-cap over Nifty and the small-cap over Nifty, mid-cap was trading at an all-time high. So this was coming for sure. It is just that till the time it comes, nobody feels the pain really. And once it starts to feel, then their stocks are already down significantly that you can't exit them. Unfortunately, I think the pain is still not over in the mid-cap and the small-cap end of the market. There can be a recovery, 1% or 2% recovery here and there, but I still feel going ahead, maybe more towards November and December, you will see more bouts of volatility and correction in this space, mid-cap and small-cap. And that is where I feel one should clearly monitor their portfolio closely, see if you're sitting on high beta stocks and ones which are not due to perform. Maybe it's not a bad idea to exit them, even if it's a small loss, and then stick to large cap names where I still feel there's a lot of opportunity for outperformance. Could be in the IT space, could be in the FMCG space, could be in the consumer durable space. So I think stick to large cap names. Still, there is an opportunity to exit from mid cap, small cap, because there I feel the larger pain is still due.
Okay, so some pockets to also look out for. Thanks for that, Aditya. Kush, let me come to you. Your top picks this afternoon.
Sure. Before that, just a quick word on Bank Nifty. I'm a little more constructive on Bank Nifty. If you see on a weekly basis, the week just started, but on a weekly basis, there's still a higher low kind of a formation on this one. It's tanked, but not as bad as the Nifty. So I think, from a positional standpoint, 51,500 is actually a good support zone, or rather a buying zone. Not recommending a buy just yet because, we're towards the close of the day and, inching towards the low point of the day. But as long as 51,000 is held, I think Bank Nifty can make for a good long trade. And on the upside, you're looking at a 52,200 and a 52,800 kind of a move. So Bank Nifty is actually a buying candidate. Now, as far as stocks go, two of them, one is on the buy side and the other on the sell side. Privi Speciality, this stock has done rather well. What we're seeing now is a bit of a profit booking. You did ask Aditya about, how do you deal with a lot of names in the broader market space? But some of these pockets are starting to look attractive, at least from a trade perspective, or at least a positional trade perspective. Not to say that the pain is over, but when you say buy on dips, you do look at these kind of dips to buy for. So previous specialty is again back to those levels from where the breakout started. So from a positional standpoint, 1780, 1818, 1880 are your targets, and 1580 is where you place your stop loss. On the short side, now you've got Gujarat Gas. Again, broken its 200-day moving average a couple of days ago, reeling under that pressure. And any kind of meaningful support really comes in at 520 levels. So up until then, for targets of 534 and 528, you can short Gujarat Gas, and 547 is where you place your stop loss.
Okay, Aditya, your picks for this afternoon?
I've got a couple of short trades. The first one is Hindustan Copper. I think there's still some downside left in the stock. It's broken down from its 200 DMA. One can initiate a fresh shot at current levels for a target of 280 on the downside with a stop loss at 312 on the upside. The second is Godrej Consumer. I think that also is looking weak on the chart setup as of now and can see further downside from current levels. So that is also a short candidate. Godrej CP again has broken down immediate support levels, can test levels of 1220 on the downside. So that should be a target with a stop loss at 1340 on the upside.
Okay, so some names in focus. One stock which is doing relatively well is ICICI Bank in this market. I want to go to Kush because you were constructive when it comes to the bank nifty, but outside ICICI, there's been no resilience whatsoever, at least in trade today. So what's giving you that confidence?
The fact that HDFC Bank hasn't really cracked. I know it's down, a bit, but it's still holding on to that 1700 mark. The 20-day moving average also resides, close to that level. And see a couple of other names like ICICI, SBI. They have their own weightage for sure. But we know that the heavyweight and the heaviest of them all is HDFC Bank. Now, it's seen a good run up. It's not seeing those sharp profit booking, corrections that it does kind of see from 750, 1750 odd level. So as long as this one holds up until 1700, I think the bank nifty crack may not deepen too much. That's where the confidence is coming from. And you're right, the likes of ICICI Bank also contributing does help. Any kind of help from PSU names, doesn't look like it will come out immediately, but any kind of help from there on or any kind of short covering rally from there on will actually aid the bank nifty to move higher. So confidence, in the consolidating move of HDFC Bank is actually what's driving the view on bank nifty as well. Also, one important fact that even in these kind of market falls that we've seen over the last couple of weeks, whenever the PCR for any index, any index, be it Nifty or Bank Nifty, is gone closer to 0.6. We've seen a short covering bounce and then a further selling from there on.
Right.
Bank Nifty right now has a PCR of 0.65. So very close to those oversold territories, and hence there could be a short covering rally around the corner.
Okay, let's quickly switch focus. The other bank which is showing deep resilience today, in fact, has done very well, City Union Bank. They released their Q2 results, which are sharp improvement when it comes to asset quality. We spoke to the MD CEO, Mr. Kamakodi, earlier today on what the growth drivers were and how they plan to scale in Q3 as well as Q4. Listen into a slice of that.
Entire growth has purely come from our traditional areas of strength like the MSME, the commercial trading activities, agriculture and gold loan. Even though we have expressed our desire to start the retail, probably like say the preparatory works are underway, and whatever growth we have achieved now is purely from our conventional areas, and new areas of growth, whatever we have identified, are yet to give their let's say contribution for the growth. So the track record, whatever we have seen, and also we started the exercise with the consultation of Boston Consulting Group to start the digital lending activities, where the decision making for the proposals less than 1.5 crore are being taken by the let's say system almost to 70 to 80%. And that has also started improving the TAT, and it has started improving the capacity to handle things, which has helped us to take things to the next level. So we feel before the end of the current year, we should be, let's say, touching the industry level growth is what we expect at this point of time.
Okay, so poor asset quality is what led them to slow down when it came to growth. That has reversed now. You've seen a 5% sequential uptick both on advances as well as deposits, and that's leading, of course, to the 12.5% surge on the stock. But outside of that, of course, management has guided in FY25 that they'll grow at industry pace. They'll also try to maintain margins at 3.6%, margins currently at an impressive 3.67%. And they also believe that asset quality provisioning is now behind, and therefore asset quality challenges and provisioning is behind. In terms of slippages, those will be equal to the recoveries coming through in the second half of FY25. So all the provisioning which will happen will go to reduce NPAs, which is a key critical positive. NPAs, they're guiding for sub 1.25% on the NNPA number, which is definitely quite heartening to hear. Now, in terms of valuations, currently book value is at 115. It's trading at roughly 170. So your price to book roughly adding up to 1.4 times, but it's currently trading at 1.2 times if I look at the FY26 estimated valuations. If I add the 25 rupee EPS over FY25 and 26, average analyst expectations are a rough 11% upside from here, 188 being the average target price. That's the broad brush for City Union, but let me take it to Aditya. Aditya, your quick views when it comes to City Union. The kind of resilience it's shown today, are there new levels? Is there something that one needs to look out for in terms of how to view the stock now?
Well, definitely, there's positivity in the stock, and look at the volumes, massive, impressive volume in today's trading session. But I think 175 is an immediate resistance for the stock. If you're already holding on to the stock, maybe earlier you can continue to hold on to it for a target of 175 on the upside. If you're looking for a fresh entry, maybe wait it out for it to break out above 175. Above 175, I would be then a buyer in the stock for a target of 210 on the upside with a stop loss at 160 on the downside. Otherwise, I'll wait for 175, which is a resistance. But yes, the interesting point is it has seen massive surge in volume in trade today. I would want to see if there's a follow-through move tomorrow as well.
Okay. Well, it looks just even worse now, to be honest, what's happening. So while City Union Bank, ICICI Bank can be places to hide, the places where people are getting walloped are very, very high. This whole bucket of, and I think Aditya Shah should be joining us any moment, but this whole bucket of defense names has looked very wobbly as well. I think the template seems to be that wherever the earnings are being missed and the valuations were sky high, things are just getting beaten very badly. By the way, banks by and large are not quite necessarily good because PNB is the top loser on the BSE large cap. Bandhan Bank is down another 5% as well in the session today. But there are offsetting factors like City Union Bank, for example, a small weightage but out there. Aditya Shah with us as well, founder at Hercules Advisors. Aditya, there's no respite really. I mean, save for one or ICICI Bank, banking too is getting hit here. Are you deploying some gunpowder, Aditya, today, or are you waiting for lower levels into select stocks, of course, and you may have chosen your stocks, but are you using today's fall to buy, or are you going to wait it out?
Neeraj, you must be really happy today. You're really, really very sad, but you need to be really very happy because this correction clears out the froth. This correction is much needed in the markets per se, and I'm really very happy that the markets are really correcting. So we are deploying money. We have deployed money today as well. You have to deploy where the valuations are not problematic, and that's how you're going to approach it. For example, today we have deployed money in companies like HDFC Bank. We have deployed money across chemicals as well, across pharma names as well, and selectively on the FMCG basket as well. So this correction is healthy. This is setting up the base for the market to move on from here on. So not too much worried per se on any of the good quality companies where valuations are absolutely decent.
Okay, and it's just painful though. That's the limited point here. You know, defense companies too. The story of 2023 has come under a lot of cloud, Aditya. Are you using dips to buy into defense names, the shipbuilders like Garden Reach or Cochin or Mazgon or any of the others?
So Neeraj, no, we are out of defense companies, and I've been warning for at least 6 to 12 months that the party on the defense sector is really over because in the longer term, the indigenization of defense sector is a long-term theme per se, but those stocks have really had a massive run ahead of their fundamentals per se. There's a quote saying that the market cap of Cochin Shipyard is much higher than the entire defense sector in Korea, and mind you, in Korea, a lot of shipbuilding happens. So my perspective is defense was a sector of 2023, and it is a sector where valuations are extremely aggressive per se. So you need to avoid the entire sector. Mind you, some of the stocks are now down even up to 50% from their lifetime highs per se. So clear avoid on this defense sector, PSU sector, even to some extent the green energy sector where there is a lot of euphoria and people are buying at any valuation. You need to be really very careful on these sectors, but because once the valuations start to correct and sanity starts to come into the market, you will find that these themes of the decade become the worst losers for the retail investors per se. So be really very careful and selective in what stocks you pick. Defense is a clear avoid at this stage.
Okay, fair call. Well, let's try and now connect with our management. Supreme Industries, Mr. MP Taparia Johnson right now to talk about how does he see the landscape, more importantly, and then we'll get to Supreme Industries as well. Sir, good afternoon. Many thanks for joining in. Sir, I want to understand from you, a lot of companies are missing their quarterly number estimates. There is a downward revision to guidance in certain cases as well. Do you sense a bit of a slowdown around? Or is this very seasonal in nature, not just for Supreme, sir, for India Inc. at large?
We don't see in our business, we do not see any slowdown. Overall, the country industry is also growing.
Your industries?
We had problem in second quarter, which must have been faced by all plastic pipe converter. That due to Red Sea shipping blockage, the freight rate for container movement from Asia to India went up by $160 per ton. And India import huge variety quantity of PVC from Asia. We are dependent on import material. And that's why the prices went up by 19% in a short span of 1.5 months, then went down by 17.5%, which has caused a big volatility in the market, and so the whole chain was destocking, the piping. Now we believe the restocking will start now.
See, okay. So if restocking is going to start, why is it that you've revised your volume growth guidance lower, sir?
But whatever production you lost in the 3 months.
Okay.
Can't make the production.
But is that so large, sir? From 25% volume growth to 16%, that's a very sharp gash in guidance.
45,000 ton. We had last year 500,000 ton plastic piping. This year we are saying it may be between 560,000 ton to 580,000 ton, 590,000 ton. From 16%, 580 to 590.
Okay, so you are saying, sir, that the whatever damage was done is done for your industry. Or the H2 or the second half will actually have volume growth.
Second half generally is a very bright growth business in our plastic piping segment.
Yes.
I'll give you the comparative number of last 2 years. In the year 22-23, the second half grew by 37% of first half. And last year, it grew by 28%. This year, we anticipate at 16%, we will grow 41% by volume, which compared to 37% in 22-23. So we are giving a guidance on lower side.
Okay, sir. And Sir Harsh also joining in. Give us perspective on raw material prices. Do you believe that PVC, which has been soft in terms of pricing, will turn around, or you are expecting softer pricing to continue?
PVC price has reached its bottom. The freight rate from China again went up, and now the many producers are losing money. So we do not anticipate any more drop in the price of PVC. Contrarily, the prices may slightly go up.
And how much of a margin impact will that have on your numbers overall, sir, if it were to go up marginally?
No, first I can say I can't talk forecast, but in second quarter, definitely we lost around 35 to 40 crores due to reduction in the price of PVC and other polymers. The price have a downward trend of polyethylene also and polypropylene also, apart from PVC.
Mr. Taparia, I'm sorry, I'm just trying to ascertain this. I heard you say that destocking is done and there could be restocking. But at the same time, I also heard you say that while H2 will be good, it will not be as good as the previous year. Did I get that right?
No, I said we're going to be better than previous year.
Better than previous year, but not as good as FY22, FY23, I think.
No, even FY22-23, we had a volume growth of 37%.
Now you'll do 41%.
And last year, we had a volume growth of 28%.
Right.
This year at 16%, we are planning a volume growth of minimum 41%.
Okay. In the second half over the first half, 41% difference. Is that what you're trying to say, sir?
Volume growth, yes, minimum.
Volume growth minimum. Okay. But that is also because the second quarter, as you said, the demand was destroyed. And that's why the overall guidance has been cut to 16 to 18%. Okay. Fair call, sir. I have one more follow-up question, sir. That is for the next 6 months. Is there any visibility or any slowdown that you see beyond FY25, sir? Do you see after March or April or the new financial year, is business activity looking strong or are there concerns?
We are more optimistic further going forward. The housing demand is good, infrastructure also will be better, and we are introducing several new SKU, several new systems, and they are very well accepted in the market. We anticipate better growth in the year 2025-26.
Right, sir. Sir, with regard to volume, you've guided for maybe late teens kind of growth for full financial year FY25. How you're also talking about new SKUs. So how will value evolve, sir, if you can talk to us, and therefore how will your top line go for FY25?
FY25, I told you now, our top line may be around 11,500 crore.
Understood, sir. Understood. Okay. Thank you so much, sir. It's been a pleasure chatting.
Thank you very much. Thank you.
Right. 11,000 crore in terms of top line. That's roughly a 10% increase over FY24 in terms of top line growth, Neeraj. That's what they're guiding for. And of course, 16 to 18% kind of growth on volumes. Of course, the stock seeing, of course, 9.5% fall because of the revised guidance from 25% in terms of volumes to 16 to 18%. Let me bring in Aditya here if I can. Aditya, just in terms of the way markets are treating numbers, most companies or a majority of them, let me not say most, are not meeting the expectations which have been set. And any company not meeting it is seeing a bit of pressure in terms of not just trade today, but even in general over the last 15 days as numbers have come out. Your take, do you feel the economy is slowing down, or do you just believe expectations are running far ahead? Aditya Shah?
Yeah, so Harsh, expectations are far running ahead of fundamentals. And that's why whenever the market used to go up, I used to get really worried because the numbers would not turn out as the market was really expecting. And now that is clearly being felt on the market. We've straight away, within a couple of sessions, drawn out from about 25,900 to about 24,400. The market needs to correct. It needs to cool down. Small caps need to cool down. They need to have a little bit of time correction, and from there on, the market needs to move on. The market cannot go up in a straight line. Earnings do not go up in a straight line. And today, the economy is showing signs of a little bit of slowdown. You are seeing the lenders seeing the microfinance side of it, you are having huge NPAs and people not paying up. You've seen the FMCG companies coming and saying that our volume growth is starting to slow down. You're seeing the auto companies shutting down their factories up because there's huge inventory and that inventory is not going out. So in my opinion, if you're buying any stock where P multiples are extremely exaggerated of about 40, 50, 60 multiple and saying that growth will come about, that growth is not going to come about. Classic case being DMart, where on DMart at extremely aggressive valuations, the company has just reported no volume growth at all. So my perspective would be very selective, buy very high quality company and try not to pay too high multiple for the company that you are trying to buy. And there's no need to panic as such. Indian economy continues to remain one of the strongest economies across the world. And these corrections are part and parcels of how markets really behave. A one-way up move will make everybody arrogant and everybody will start to make money. Markets are tough and that's how it is supposed to be.
Okay, time to slip into a very short break. On the other side, we get you top buy today, sell tomorrow ideas, as well as what's happening in the derivative space. So stay tuned, more on the other side.
I think it's a brilliant session because if India doesn't start disrupting the rest of the world and showing the Indian way to innovate, I think we've lost an opportunity. And with the world in a crisis in terms of what's happening with geopolitics, with what's happening with health, I think this is the right time for us to come together with disruptive innovation, and I think that healthcare has a major role to play there.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries, shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
Well, pain in the broader markets for sure. Nishchal Maheshwari Johnson to talk about that as well. Nishchal, thanks for joining in. What's your sense, Nishchal? Does this continue or has the sharp end of the correction happened? Because hitherto, dips have gotten bought into at all times in the last 6 to 12 odd months. Is this the lower end of the dip or is it difficult to say currently?
Afternoon, Neeraj. I think I think the way the market is almost to the bottom of the day and we are in the last half an hour, I think there is some more way to go. So I don't think so this is the end of it basically. I think some more correction is obviously due and it should happen over the next 2-3 days.
Okay, next 2-3 days. So you expect it to be a bit swift even if painful, and could the corrective move be larger at the small cap end? I mean, there has been a bit of a correction that has happened. You reckon this will continue in the, what's the percentage quantum fall, Nishchal, that you anticipate? I mean, people usually say, right, that they would probably want to see another 3-5%. Are you in the same camp?
So I think on a broader index, I agree with you. It is around 3 to 5% is what I expect. But obviously, individual stocks may correct by much more. And depends upon the stocks have gone up 3-5 times in the last 1 year. Obviously, the corrections are going to be steeper. And so on an average, I believe if you really look at it, Neeraj, still the mid-cap is at 33 times. So obviously, I think there is a lot of froth out there. I think some of that needs to come out of this market basically. And I expect a more severe correction as far as mid-caps and small caps are concerned.
Nishal, Harsh also joining in. I want to try and understand from you, what would you be buying in this fall? What are you keeping your eye out on? What's looking interesting to you?
So I think one thing is basically one needs to be very, very careful at this moment, basically that whatever you are buying should be backed up with strong earnings. And one of the sector where I think the earnings have been pretty decent is IT. Though only the large caps have come out, but I think all of them have actually said that the major sector where they get their business, BFSI, seems to be doing better in the US. So I think that is one sector basically. It's also going to be a beneficiary of rate cuts in the US. So I think IT is one sector basically which people can put on their radar and start evaluating what to buy. But I think that is one sector, and I think large cap banks. Again, 2-3 of them have come out with results. I think pretty decent set of numbers. So I think these are two sectors basically one should look at it. And the other thing I have said basically all stocks where you have seen strong earnings basically already declared, I think one should definitely evaluate.
And Nishal, do you believe that there's some kind of pain, especially when it comes to numbers? We've seen a good flow through in terms of numbers over the last 15 odd days. And on most counts, numbers have been weaker than expectations. Is that the trend, or is that expectations were elevated and numbers have therefore fallen short? What is it in your view?
So I think, Neeraj, there are 2 or 3 things actually I would want to put why this kind of a correction we are seeing in the market. I think one is obviously the foremost is the resurgence in China. There the stimuluses are pretty strong, market was pretty cheap, and that's why we're seeing this kind of almost $10 billion that got withdrawn in October itself. So this what we've seen last, I think, in COVID. $8 billion got withdrawn in a month. So I think that's a pretty steep number. Now we should be happy saying that in this kind of a market, basically, given that the domestics are up there and the flows are very strong, you have not seen any steeper correction with a $10 billion getting withdrawn in a month. And I'm saying basically October is still not over. This is the number I'm giving you of October. So that is one thing. Secondly, I think domestic issuances have been very, very steep. If you look at it, any day you are seeing basically at least 2,000-3,000 crores getting done either through a QIP, IPO or anything like that. So I think these two, and obviously the valuation. These are 2 or 3 things basically which have actually put market on a, I wouldn't say basically steeper corrections, but I think some amount of correction was needed, and I think it's happened.
Okay. Nishal, appreciate you taking the time out and being with us. Thanks for giving us your thoughts. All right, SRF numbers out as well. One more set of numbers that looks wobbly in trade and or looks wobbly. EBITDA margin correction move, essentially 400 basis points downtick. And remember, part of this was anticipated. It was anticipated that SRF will come out with a weak quarter. It has delivered a very wobbly quarter. The stock, as is the case with everything else that has delivered bad numbers, down 5%. Aditya, any thoughts here? For some time now, people are saying that this is the last of the quarters of the pain for some of these companies, including SRF. That last quarter doesn't seem to be ending. So, what do you make of these numbers? Aditya, you may not have the numbers, so I'll just read it out for you. EBITDA margin is 15.7 versus 19.7%. Net profit is down 33%. 201 crores versus 301 crores. Revenues are up about 7%.
Neeraj, this is not the last quarter for SRF per se particularly. We understand that the refrigerants business, which is a particularly strong business for SRF, that is undergoing a tremendous slowdown in US and Europe. So my perspective is that this will continue at least until the second half of next year per se. The numbers are really very poor, and commensurately the stock price is also getting hammered up. So I'm not too much surprised by the numbers. We will need to hear the management commentary, but I don't expect at least 2 more quarters of good numbers from SRF per se. The refrigerants fluorination business continues to undergo a massive slowdown first.
Okay, but Aditya, curiously, you suggested that you like one pocket you're liking is chemicals. What within chemicals are you liking? And you're not anticipating a recovery. So what's the thesis there?
So many of the chemical companies have gotten beaten down sharply, and valuation there with respect to the entire markets seem to be really fairly okay. Time and again, I have said companies like Deepak Nitrite, companies like Naveen Fluorine, they will continue to do extremely well over a period of next 3 years per se, where the demand is going to recover for these companies, and slowly and steadily the capacity expansion that many of these companies have done will start to come up. I've also recommended companies like Apcotex, where they are at the bottom of the cycle, and from here on the cycle will continue to pick up. So chemicals in itself is a heterogeneous industry. You need to look at company by company and then take a call. Companies like Deepak Nitrite, Naveen Fluorine, Vinity Organics, or companies like Neogen Chemicals who are into the battery EV space, they will also do extremely well over a period of next 3 to 5 years. But selectively, you need to be very careful. These stocks may not give you return over the period of next 1 year.
Okay, so with that caveat, let me also mark out one more stock on the back of earnings, and this one is off the day's lows, frankly. So some bit of relief on Adani Energy Solutions. Now, in terms of revenue, the numbers are sharply higher, 68% higher on a year-on-year basis. EBITDA up just about 19%, margins at 29% versus the 41% number same time last year, and profit is up 172%. From the 284 crore mark, profits are now at 773 crore. The reaction on the stock evident. Stock has flattened for the day. We're off the day's lows on this one. But sticking with the same group, Ambuja Cement acquired Orient Cement for 8,100 crore to expand Pan-India share, 2% expansion in their Pan-India share. The acquisition will add around 16.5 million tons to Ambuja's annual capacity and will actually be funded only through internal accruals. My colleague Mihika joins in with all of the details on the acquisition.
So the update came in this morning, and Ambuja Cement will acquire 46.8% in Orient Cement, and the acquisition value is at 8,100 crores. Now the transaction will be funded entirely via internal accruals of the company, and they'll be making an open offer at 295 rupees per share, which is at a premium of Orient's yesterday's close, and this will trigger 26% acquisition of public shareholding, and it will this acquisition will add 16.6 MTPA of capacity for Ambuja, and acquisition will help Adani Cement as a whole to take its operational capacity to 97.4 MTPA. A little bit about the deal valuations. Well, if you take it at operational cement, just the 8.5 million tons which is currently on stream, the valuations come around $114 per ton. But when you talk about even the planned capacity, that's at $58 per ton, and both these values are lower than the greenfield setup cost of $110 to $120 per ton. A little bit about Orient Cement. Well, current cement capacity is at 8.5 MTPA. They have also ready to implement capacity at 8.1 MTPA, which was taken in the deal valuation calculations. Clinker capacity is at 5.6 MTPA, and the potential cement and clinker new capacity stands at 6 and 4 respectively, and they have presence across Telangana, Karnataka and Maharashtra. Now, when you talk about the benefits for Ambuja Cement, well, the acquisition will help Ambuja Cement increase its presence in South and West India. It will increase its pan-India market share by 2% additionally. And Orient also has large size, high quality limestone deposits at Chittorgarh to support capacity in northern India, which is around 6 MTPA. And the acquisition will improve the overall return on capital employed for Ambuja. When you look at it from Orient Cement's perspective, well, the opportunity will improve operational efficiency via a higher green power mix and domestic coal linkages. It will also help in clinker cost reduction potential of around 150 rupees per ton, which is positive for the company's margins, and it also helps them achieve their target EBITDA per ton of 1,500 rupees by FY28.
Okay, thanks for that, Mihika. consolidation in cement, but before I take that up, Mazgon Doc flashing at the bottom of your screen, 23 rupees interim dividend, no respite on the stock though, plus a stock split, both of those announced, all the details there, 1:2. Now in terms of the stock, 11% lower, but in going back to consolidation in cement, Aditya Shah, before I take more questions from Aditya Agarwala as well as Kush and their picks for this afternoon, BTST, STBT. Aditya Shah, this consolidation in cement, is this in your view constructive, positive in terms of valuations as well? Do you believe it's a good development for someone like an Ambuja?
So Harsh, it's been 10 years since cement prices have not seen a meaningful hike. And now we are entering into a stage where consolidation is the name of the game. And now Ambuja has come up and taken over Orient Cement. Per se, from an expansion perspective, from a company perspective for Ambuja, this is positive for Ambuja, and this is positive for the entire industry per se. Mind you, Ultratech did not report very good set of numbers, neither did Dalmia Bharat. They say that the next 2 to 4 quarters will be really good on the back of cement price hike, but I don't think that at least next 2 quarters are good for the cement sector per se. So in this entire sector, if I were to invest somewhere, I would stick to Ultratech for the time being, because Ultratech is the only company who has the pricing power and will decide when the prices really move up. But per se for Ambuja, this is really very good news and positive for the shareholders.
Okay, let me quickly go across to Aditya Agarwala. Your picks, STBT, BTST, it's 320.
I got a STBT, Harsh, because still markets are closing almost at the low point of the day. So Polycab is a sell for a target of 6,200 with a stop loss at 6,800 on the upside.
Okay, and Kush, let me come to you on your STBT, BTST ideas.
Likewise, an STBT idea. This time it's Biocon. We did discuss this during the day as well for targets of about 334 and 328. The first target was breached, so the second target, I think now you could look at a target of 320 on the downside, and your stop loss comes in at 333. So Biocon is a sell.
Okay, switching focus to new listing. My colleague Tushar was present in the post-listing press conference of Hyundai India, and he asked the MD CEO about the company's EV manufacturing plans. Here's what he had to say.
We are seeing the huge demand from the domestic and export, and currently we have the around the 8 lakh capacity in Chennai plant. So as with the demand, so we acquired the Pune plant. So our Pune plant has a 2.5 lakh capacity. After operation of this plant, we will reach the 1.1 million capacity. It will meet the demand from the domestic and the export. In terms of the EV, we have a very flexible line, so it depends on the customer demand. We will fully meet the EV demand from the market side.
All right, so that's of course the management, but the largest IPO, and it's obviously landed on D Street with a subdued kind of a debut. Shares have listed at a 1% odd discount, and of course now trading 7% lower. What's the upside potential here? What are views coming through? Puneet is here with all of those details. Puneet, brokerages views, just give us that context.
Definitely, it's a positive thumbs up from most brokerages. Let's start with Nomura first. They've initiated a buy on Hyundai India with a target price of roughly about 2,470 rupees per share. That's about a 20% upside from the current market levels. And there are 3 key things that they're highlighting in this report. They mentioned that Hyundai has been consistently able to predict shifts within the industry, and this first one was SUVification of the industry back in 2015. They did that with the launch of the Creta, and the SUV share has moved up from 13% to 67% of the total sales now, and they've been positively been able to capture this. That's one of the main things that they're seeing in this particular report. They've also said that long-term growth of the PV industry it will help help the company to improve average selling prices, will in turn aid margins as well. And they finally feel that the company is best positioned to be in the PV OEM space, which is a pure play company in the passenger vehicle space, and they prefer someone like a Hyundai over Maruti Suzuki, and that's reflected in their estimates as well. They estimate that the company will deliver an 8% volume CAGR over the next 3 years and estimate margins to come in at 14% versus 13.1% that came in FY24. So they're estimating a 100 basis point improvement in margins in the next 3 years. They are also estimating a 17% earnings CAGR in the same time frame as well. This has been echoed by Macquarie as well. They have a target price of 2,235, a 15% upside from the current market levels. And another, just 3 key points highlighted in this report. The first one's Hyundai has been able to, maintain market share in the compact and mid SUV space, which has had intense competition from Mahindra and Tata. So going forward with new launches, they are aiming to get some of the market share back. Over FY19 to 24, Hyundai has had higher realization and EBIT per unit sold compared to that of Maruti, and that's another positive. And the third thing is they believe that Hyundai deserves to trade at a premium compared to Maruti Suzuki because of better positioning in terms of models as well as margins. They are estimating 12% PAT CAGR and estimate that the company should trade at 25 times price to earnings for FY27. So overall, big positive view and preference for Hyundai over Maruti, which is the only 2 pure play PV companies. Back to you.
Okay, thanks for that, Puneet, for summing that up. Aditya, let me come to you, Aditya Shah, with regard to Hyundai Motor. Now, at 1.6 lakh crore in terms of market cap, rough P of around 25 times. Constructive on this one? Does it look attractive for someone who's probably unlikely that any retail participant has not got the IPO, but would you buy at this point?
Definitely not, Harsh. What we are seeing across the PV segment is that inventory of 7,70,000 vehicles is already lying up, and companies are really struggling to get them off. In fact, yesterday Tata was offering a whopping 1.5 lakh discount on their 2023 Nexon model. So in the shorter term, the auto industry cyclicality has started to play out, and it will not be great news for all of these PV makers per se. So I will tend to not be an investor if I am a short-term investor per se. But if you are a long-term investor, then of course the company looks exciting. They have EV products back in Korea as well, which when translated into India could do really well on. I would be more interested in India into Mahindra and Mahindra because of their whole host of tractor lineup and farm space exposure as well. So right now, a clear avoid. The valuations for Hyundai is not too cheap per se, but a longer term investor can look at it on dips.
Right. Aditya Agarwal, let me come to you. 2.5% on Hindustan Zinc when the Nifty metal is down nearly 4%. Looks interesting on a day like this?
Harsh, I think this is something which is interesting because stock had seen a bit of a correction, in fact, a sharp correction from the peak. Yes, on the downside, with the stop loss at 490, I would not shy away from going long on this stock, probably one of those stocks which looks interesting to me. On the upside, can easily test levels of 465 to about 600. So Hindustan Zinc looks interesting to me on the chart setup.
And Kush, defense as a pack, your sense, because lot of pain seen. How should one trade this one now?
With caution, and a lot of these names haven't really become a very attractive pick just yet, and we are seeing some of them, reel under pressure, end to the low point of the day. I think the only one that perhaps stands out and from a medium-term perspective is BEL. But other than that, a lot of these names haven't really seen the last of the dips or the corrections. So you might just want to wait out before you go ahead and buy. BEL is one that hasn't really seen that big a dip and might just turn out to be a decent pick from a medium-term perspective.
Okay, we're 2 minutes from close, and I'd like to thank all three of our guests, Aditya Shah, Aditya Agarwala, as well as Kush. Thank you so much for joining us and giving us all of that perspective over the last hour or so. Of course, the pain is steep and deep. Let's pull up the Nifty 50 intraday, and we'll see exactly that. 300 points lower on the Nifty 50, just about maybe less than 5 counters in the green, and 1.2%. We're just off the day's lows of almost 1.4 odd %. Let's pull up the contributors on the Nifty, and there you go. Just about 3 in the positive: ICICI, Infi and Nestle. Reliance and HDFC Bank, on most days when they're sitting on this side, on the red side, you generally will see the Nifty go lower, but today their contributions not as significant given their weightages. Let's pull up the heat map as well, broadly see what's really playing out. There you go. And the pain is real. The advanced decline, if we can, there you go, gaping, absolutely gaping, nearly 15:1, nearly 12-13:1 in terms of the ratio in favor of the declines. The Nifty Midcap, if we can have the intraday chart, and we'll see exactly that. We're at the low point, just off the lows of the day on the Nifty Midcap as well as the Nifty Smallcap. That's how it's really playing out today. 3.5% on the Nifty Smallcap now, and really the pain just getting worse as the day has progressed. Let's pull up the BSE 500 if we can as well, in terms of there you go. Those are some names for you. Something like a City Union Bank, of course, doing very, very well. Varun Beverages on the back of good numbers. Hindustan Zinc also has done fairly well for itself. But you look at some of the losers, 7 to 13% among the top and among the bottom 8 on the BSE 500. Last off, I just want to pull up the sectoral heat map if we can before we close and we wrap this up. There you go. That's all of the sectors that you're getting to see. The realty taking a real plunge, 3% lower, but PSU Bank with the maximum damage. With that, complete wrap on this edition. Of course, you'll see us back tomorrow, give you better perspective on all that's happening in markets. Stay tuned to NDTV Profit. More action on the other side.
It's been more than a decade since I was on the ground here in India. I follow from a distance, but on the ground, what I see is the remarkable progress that India has made, and in particular, the success of the government in leading the nation into a better future. So it's very encouraging at a time when you see many other governments that are struggling to do anything right, to see a government that's really succeeding.
We're going to look forward to hearing this and a lot more from you. I'm not going to give most of it away, so stay tuned for that conversation with Paul Romer. Thank you so much.
Thank you.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries, shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen
listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries, shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators.
We're speaking today with Lalit Kechre. He's co-founder and CEO of Groww. And for those of you who don't know or are living under the rock, Groww is one of the fastest growing platforms for financial inclusion, for trading, giving quite a bit of challenge to other big players out there. Lalit, we're very excited to speak with you at the NDTV World Summit because in this conversation, we not only get an opportunity to capture what disruptive technology can do, but talk about, I think, the biggest talking point in living rooms right now, which is, aaj market mein kya ho raha hai?
No, first of all, thank you so much for inviting. Do you want me to answer that question? Market mein kya ho raha hai?
Before we start, do people randomly come up to you and ask you, quick tip hai kya? Kya stock kharide? Because you run Groww?
People used to a lot, but then they got just so bored of our answers that now they have stopped asking those questions.
Okay, let's start with the story of Groww. Tell us, of course, you started in 2016. That was a time, markets have been in a bull run for a while, undoubtedly, but that was a time when I think online trading had not become as prevalent perhaps as today. Yes. What was the idea behind it, the thought process?
Got it. So we were working with Flipkart, and personally I started investing like when I was in second year of my college here in Bombay around 2000, 2001, right? So was really passionate about investing and found a good set of folks, three awesome co-founders. All were passionate about financial services and so on. And we saw that we were also lucky to see how e-commerce grew in India, right? Everything becoming online and so on. And then we looked at the penetration of, how many people are investing in India, mutual funds, stocks, and so on. And then we saw like on Nifty 50, the constituents of financial services is like very large part of everything. And in the hindsight, if I see a lot of dots connected, right? And there was this opportunity to kind of create a crazy big impact leveraging our technology to reach out to like millions of customers, millions of people across India. So that was the starting point.
Did you expect this kind of a trajectory, or that there would be this huge quantum of Indians across, it's not just middle class Indians, everyone now has some equity exposure or the other. The boom has been immense. Did you expect that to happen, or do you think that that's something which came about in a post-COVID era? You were in the right place, right time to ride the wave.
So we were definitely lucky. And by the way, we are still like penetration-wise, we are still very, very low compared to...
Agreed. Relatively, relatively, I would say. We're celebrating today at the World Summit, the India Century. But let me begin by saying, even though the topic of the conversation is women in business redefining the workplace, in a sense, it's a bit passé, because women in the workplace is no longer new. When I speak to Dipali Goenka today, I see a powerhouse, a business leader in her right, like any other member of the business community. So let me start by asking you a question about how you, as a business leader, look at the Indian economy today in the context of our conversation of Indian companies dominating what we hope will be India's century.
First of all, thank you, Tamanna. Thank you, NDTV World, for inviting me today. For one of the most, I love this conversation about women and in leadership. So when we talk about India, let me give you a perspective. When we launched first of our plants in 1993, I remember the time when India was just opening up the license Raj. They couldn't even imagine that we could make towels. They said, oh, you must have changed the label. It's not made in India by an Indian company. Now today, when we talk about India, India has become an integral part of the supply chain for all the global retailers. Everybody is thinking about India. When you talk about Walmart, they're talking about $10 billion, kind of outsourcing from India. There's Uniqlo talking about India. So, India is in a very sweet spot. Not only because it is becoming an integral part of the supply chain, one of the most stable democracy that you see here, Tamanna. You see the leadership in the terms of infrastructure, the growth. You see the neighboring countries still struggling, and that's where India really holds its own. And apart from that, when we talk about India as a country, the consumption, 1.4 billion people, it's not about the consumption for India itself, it is also about the workforce, which is going to be the youngest for the next 30 years. So for me, that's where I feel really, I said like India is in where, it's the Indian era right now. And let me be very proud of that and say that, we'll talk about, saying that, we'll be the third largest or maybe the second largest economy very soon. And I think that's what just keeps me going as a leader as well.
Yeah. You talked about India's space or position in the global supply chain. And you work, Welspun of course works with some of the biggest retail brands. I want to understand the distance that has been traveled for the longest time for India in many sectors to compete. There was the cost question vis-a-vis China, the quality question. Do you think that we've surpassed some of those barriers? And today, in a China plus one world, India stands stronger?
We are reaching there. With China, China has been the factory of the world for the longest time. And to get India there, we're reaching there. I'll give an example for Welspun today. Our plants are one of the best plants, I could say, in the world in the terms of textiles. And it is not just about the machines, automation, Industry 4.0 that we can talk about, but about our people. Our people are trained in Industry 4.0. They are upskilled. We are talking about women, in diversity. We are talking about the entire supply chain with complete traceability, blockchain, and innovation. I think as India, as a country, as we evolve, we are absolutely there to offer the best in class. I'll give a small anecdote here and share that with you. Our flooring plant, which is in Telangana, you see these kind of wall-to-wall carpets today here. You see the wooden flooring. They were all made in China and the other countries, not in India. The entire supply chain was dependent to China. We completely indigenized the supply chain, and now 70% is outsourced from India. So there's this ecosystem. And Tamanna, let's not forget, when I talk about ourselves as textile industry as well, or the other industries, the MSMEs is the bedrock. And the kind of support that the government has opened up for the MSMEs, I think that again is a great opportunity for India as a story and being an integral part of that supply chain as well.
Right now, as a business leader, what in your view are the biggest headwinds and tailwinds? Let me start with the tailwinds. Of course, we are an economy growing at 7 to 8%. That's the easy bit. So let me come to you on the headwinds. Do you think the biggest concern right now is what's happening geopolitically in the space you are in especially?
Absolutely, Tamanna. And I think a lot of people will agree that when you are in this scenario where I think the disruptions that can happen are going to be more than anything but geopolitical. I mean, today, I always say when people ask me about my business and they talk about what do you think about business? What do you think about the demand? I say while India is growing and India has a great opportunity, and for us as well as an opportunity, I think it is humongous. But I must tell you that the Red Sea has been the biggest challenge today. And that again is an aftermath of the geopolitical situation that we are in. So the entire supply chain is in chaos. So your supply chain, actually where it could have been 4 months or 6 months, had gone to 12 months. Because you're planning in advance, your working capital is over-leveraged. You have to really plan when it is going to reach the shores of America. I mean, and how do you work backwards? So it is very, very chaotic. So let me tell you, while there are opportunities for India, because India is in that sweet spot, for us more so because, when I talk about textiles, the Xinjiang cotton is something which is now, people are absolutely looking at, that as a kind of, a starter for any business. So Indian cotton is again into prime here. Everything is good. But again, the supply chain, leveraging the entire, the whole ecosystem in the terms of timelines has been the biggest challenge, Tamanna, today for me.
We're speaking, Dipali, ahead of the festive season. For a lot of business and sectors, it's one of the prime seasons of the entire calendar year. A good idea and time to also do a consumption check.
Yeah.
What are the kind of wins you are getting in terms of consumption? Are you looking forward to a robust festive season this time?
So I will say that it could be something where I will keep it. I remember, like when I saw the Q1 opening up for us this year, it was pretty slow. Q2 starts picking up. But when I see now we're right in the festive season, still it is just warmish. And you know that the shopping will happen in the last 1 week of the season. More so, I'll tell you, with the whole quick commerce that's come into play, the opportunities to buy 24/7, and there are a lot of great deals, the consumer is getting more savvier of what she's picking up, So I think now the season is about being 12 months. It's not just about the Diwali season.
Okay.
So I think that's something that you're seeing as a differentiation. The interesting thing I must also add on here is the digitization. When we talked about COVID and, where India was at 10% in the terms of commerce, e-commerce, today it is at 25%. And you see this economy in India taking it up more so rapidly. Whether it's quick commerce, it's a neighborhood, you're ordering your food, your best food, or you want anything. You can now order a dal, you can order your sargi. Karwa Chauth's just gone by. You could have ordered your sargi, just 5 hours ahead of what you want. So I think now this has become convenience. So either we call it, buy online, pay in store in America, where you can, order either online or go to the store to pick up, or, you order there or go, they can be delivered home. So this is the kind of convenience that the consumers are seeking, and more so the Gen Z and the millennials.
Okay, so festive season, you're hoping will pick up, consumption will pick up, but we've been seeing a trend of premiumization. Are you seeing that sustaining? In a lot of spaces, you're seeing premium products get more attention, customers seeing more growth there. Are you looking at that trend?
You know, I'll tell you one thing. When economies globally are uncertain, the economies are in turmoil, there are two things, the two segments that do well. Either the cheap, the economic segment, or the luxury. And this is a trend worldwide. You would have seen last year as well, all the luxury brands, they did tremendously well.
Yes.
And so that's where the discretionary spends started kicking in. Or otherwise, it's the mass market that starts, the brands there, they start doing well, because this is where, it works. The middle segment tends to suffer there.
Okay.
Yeah.
So you're still seeing that premiumization trend continue?
Yes.
Okay.
Yes.
Dipali, we've done a sort of a temp check of industry and where you see Indian business going. I want to come now to your story, because it's just fascinating. We're talking about women leadership here. And I'm really curious to know what your journey was like.
So you know what? I tell my daughters, Tamanna, always. I tell them, you know what? You have an opportunity to have, learned, gone to college, have had, the way you wanted to. For me, I got married at the age of 18. I had children early, and I started working at the age of 30. I was a homemaker. And I have 2 daughters. So my journey began not only for myself, because I always believe as a human being, you have to constantly evolve. And I think that's the way I've always believed in, constantly learn. But it was also important for me to set an example for my daughters. Because it is about that if I can do it, my daughters can do it. And that's where I'll open doors for many women, many girls. And that's where the journey of struggle began in 2003. Learning on the ground, learning from scratch wasn't easy for me, Tamanna. But I think I've always believed in that if you believe in it, you can do it. And if you have the commitment, you can definitely look at and never give up. I mean, these are a couple of things that I always believe in. And that's the spirit I've maintained till today. 2010, when I got on board of Textiles as well, from $400 million to today, we are at $1.2 billion as a revenue at Welspun Living Limited. I think it's been a very interesting journey because I didn't know anything about textiles. I didn't know how the cotton was bought, what is spinning, what is weaving, and what is processing, Tamanna. I learned everything on the ground, but I played on my strengths. And what were my strengths? Because I know as a consumer what a woman needs in a home product. And that was as simple as that. Then again, creating a company, creating an organization which not only does have, men, but women. Because in a manufacturing facility, primarily, they were just men. And from 8% to today, around 28% women. I think it's been an interesting journey towards diversity, towards innovation, and towards sustainability, and keeping the consumer at the core, and looking at analytics about what the consumer will buy. So I think it's been a very interesting journey for me so far.
That's so inspiring. I think a round of applause here for Dipali's journey and for you coming today and saying that when I started out, I did not know XYZ and I learned it. लेकिन दीपाली जी इसमें एक चीज़ है, चूँकि आप महिलाएं हैं, तो मल्टीटास्किंग एक तरफ और एक अलग एनालिसिस लाना बिजनेस के लिए, ये आपके सामने वाले कितने जल्दी समझ पाए?
थोड़ा मुश्किल रहा because कई बार लोग यही समझते हैं. I mean, it would be like if I would go with my work colleague for a meeting, they would talk to him and not to me. तो वो रहा. But मैंने हमेशा यही विश्वास रखा है कि अगर आप अपने आप पे विश्वास रखते हैं तो सबको बाद में आप पे विश्वास करना ही पड़ेगा. Because by the end of it, it's about the work that you do and the impact that you make. आपने अभी तमन्ना एक बहुत इम्पॉर्टेंट चीज़ बोली, एंड ये सबके लिए एक बहुत, हम जब डिवर्सिटी की भी बात करते हैं, मैं ये बोलना चाहूँगी आपसे कि मैंने अपनी जर्नी तो आपके सामने रखी, बट अगर मेरे को ज़्यादा बहनें और ज़्यादा more women coming into workforce, it's not an easy journey, and there are a lot of women who will agree to that as well here. Now, when I talk about textiles, I mean, it is absolutely labor intensive. At Wellspun Living, we have around 15,000 people working with us. Now, getting that around 20 to 30% women in that workforce, बहुत काम करना पड़ा. Because family को बताना पड़ा कि आप अगर workload share करेंगे तो ये काम कर पाएंगी और contribute कर पाएंगी घर के खर्चे के अंदर. So it's been a you sensitize the family. Then have a roadmap for her. Give her the convenience. And the important thing is, अब rural में तो कर लेंगे, पर आपके जो white collar पे आप आते हैं, वहाँ पे सबसे ज़्यादा struggle रहती है.
Oh, is it?
Yeah. And you know why I'm saying this? Because being a woman, I've faced it. So I had to see that how could I make a path easier for women working in my offices as well.
Well, it's an inspiration to see a woman at the helm in India Inc. And thank you for that, Dipali. That's an amazing story. But I want to also come to the point of what you bring in as a leader, and an important part in your sector, which is a question of sustainability, especially in textiles. It's become the need of the hour. How do you tackle a challenge like that? Because we are a cost-sensitive country. You have to keep your margins intact as well. Totally. And you need to move to sustainability.
Totally. So Tamanna, first of all, I always say that sustainability is not expensive. And it is the impact. I'll tell you in Anjar, हमारी factory है कच्छ में. It is in a desert area, जहाँ पर अगर मैं बताऊँ अंजार वो area है जहाँ पर भूकंप आया था 2002 में. There's not a drop of fresh water there. And सारा पानी नर्मदा से आता था. We actually use around 30 million liters of water, to be precise. और कई बार पानी सूखा पड़ जाता है. Then if we would have used that water for textiles, हम पानी use करते तो ना तो farmers के पास पानी रहता, ना communities के पास रहता. Today, with our STP program, sewage treatment plant that we have, we don't use a drop of fresh water. And सारा हम communities से सारा sewage का पानी लेते हैं, वहाँ उनको royalty देते हैं. So that we could use that fresh water, that sewage water and recycle it and use it in our operations. So farmers get water for irrigation, and there's potable water for the villages as well.
And villagers actually get paid for the usage
royalties
of their
given to the
sewage water.
villages.
That's amazing.
So I'm saying sustainability is such an important aspect. So for us at Wellspun, we have another 3 years of a roadmap that we've made. How much water? So fresh, zero fresh water, landfill zero, being green by 2027 and 2030 is a roadmap that we have made for ourselves. And we report back to the board every quarter about our performances in sustainability and the social impact that we do in our communities as well. One of the interesting programs that I have is the upcycling of rags, where जो चिंदियाँ निकलती हैं हमारे ऑपरेशन से, हम कम्युनिटीज़ में पिटलूम पे हमारी जो बहनें हैं वो कम्युनिटी सेंटर्स में आके जब भी उनको टाइम होता है कुशन्स बनाएंगी, रैग्स बनाएंगी, मतलब उसके रग्स बनाएंगी, एंड दे अपना बैंक अकाउंट खुद ऑपरेट करती हैं, एंड दे आर अर्निंग 20,000 rupees per month. Because I believe that if a woman is independent and empowered, the child will definitely go to school. And sitting in Delhi or sitting in Bombay is easy to think and envision, okay, my child has to do his, education complete. But think about India. That India where the literacy still is at 60 to 70%. Look at China, which is at 100% literacy rate. If a mother is empowered, definitely the child is going to go to school. Otherwise, the father would say, to abhi kaam pe lag ja, because I don't have money to support you. So I think these are very important aspects, and as corporates, I think we need to start thinking from the grassroots. So when I say sustainability, I think to create a sustainable future for India, sustainable future for the world, sustainability is not expensive.
Amazing. Do you think corporate India is doing enough of its part for sustainability beyond the marketing bit of it, or beyond CSR, or beyond what looks good or sounds good? Do you think enough is being done?
You know, we have a long way to cover, but I think the journey is still begun. Journey is still begun in the terms of that 1% that, you know, the companies have to give for the, you know, the CSR as well. I think these are small steps. But like corporates, if they start looking at India and not just contributing, you know, and not just doing businesses, but becoming the agents of change, is where that, you know, we'll start making a difference.
Amazing. Dipali, you know, as we wrap, one message for you, from you, for women leaders in all fields, may not just be in corporate, maybe in any field, maybe in their lives. How do you take charge?
By believing in yourself and never giving up. The road is not easy. The journey is not going to be easy. And there'll be a lot of times you'll feel that I can just, you know, hang my boots and I don't want to do it. But then that's the time you give that extra effort and move ahead. I think that's what it is. And believe in yourself.
Amazing. Thank you, sir. Amazing words there from Dipali Goenka. Thank you so much for joining us today.
I would like to congratulate NDTV on its World Summit 2024. This morning, the Honorable Prime Minister inaugurated the session, and it was a very inspirational talk by our Prime Minister, talking about not just India's role on the world stage, but also how India can play a role in the entire humanity across the globe. How India's aspirations can be the global or the world's aspiration. I think Indians have taken a lot of pride in seeing how India has been built in the last 10 years. Watching Prime Minister extol the virtues of what has been achieved and what lays ahead for India and the world was truly inspirational.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries, shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any...
Nifty Sensex extend losses to end at a 2-month low. VIX rises to highest level since October 19. All sectors ended in the red, with PSU Bank declining nearly 4.5%. Muted start for India's biggest IPO despite the buzz. Hyundai Motors India debuts at 1,934 rupees on Dalal Street at a discount of 1.3% over issue price. Adani Energy posts strong set of Q2 earnings. Net profit is up by 172% at 773 crore rupees. EBITDA also up. Adani's Ambuja Cement acquires Orient Cement for 8,100 crore. Acquisition adds 16.6 million tons to Ambuja's annual capacity to be funded via internal accruals. At the NDTV World Summit, Prime Minister Modi acknowledges investor Mark Mobius's vision for India. Mobius talks of his deep affection for India, praises PM's foresight on Digital India. After F&O crackdown, market regulator SEBI turns its focus towards SME IPOs. As concerns over retail investors' overexposure grow, looks to come up with proposals. Agricultural gold loans under the RBI scanner as agri-gold loans see a sharp rise in contrast to regulator gold loans. Prime Minister Modi touches down in Kazan for the 16th BRICS summit, set to hold bilateral talks with Russian President Vladimir Putin later today. Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Himakshi Bahuguna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. So, well, it's not a good day for the markets as benchmark extended losses to end at a 2-month low. My colleague Harsh Saita is joining us with a quick market wrap.
Well, markets clearly under pressure, 1.2% lower on the Nifty 50, but that's not reflective of just the breadth of the market, which was very, very weak in trade today. Let's pull up the advanced decline. We'll show the kind of breadth that was there, the kind of weakness that was there, the secularity of that weakness across the board. Let's pull up just in terms of contributors, and what you'll see is no one or two major stocks contributing to a bulk of the losses on the Nifty 50 as well. Just about 3 stocks in the green on the Nifty versus the 47 stocks in the red. And what you're overall seeing also is the heavyweights also not dragging the index in a big fashion. But nonetheless, we've closed 1.2% lower on the Nifty. The broader market seeing more of a sell-off. The Nifty Midcap, let's pull that one up. There you go. And the Nifty Smallcap was down 3+%. So real pain seen on the broader end of the spectrum. 150 advances to 2,000 declines. That's very, very steep and sharp, right? So that's one part of it. The other part, there were certain pockets where the pain was more pronounced. Let's pull up something like a Nifty Realty. Let's talk about that, 3+% lower. The Nifty PSU Bank, 4+% lower. So some serious pain, serious selling seen in some patches and some sectors. The Nifty FMCG, a relative area of ease, but otherwise you're seeing a sea of red across sectors as well. So a tough day of trade, a second consecutive tough day of trade. Of course, have to wait and watch how the week plays out. Could this lead to a deeper correction or not is essentially the question now.
Earlier, we spoke with Ajay Srivastava of Dimensions Consulting, who shared his views on how the impending US elections could influence markets in India and China. Here's what he had to say.
Everybody is wary of China at this point of time, and everybody is wary of the results which are going to come out after November 5th US elections. If Trump wins, it's going to be war with China on the economic front. And I think all the FIs, by and large, at this point of time, as I talk to them in the US, are going to wait out to see what happens on November 5th. If Trump wins, China trade is off the table, immediately off the table, and you see a pull out, in fact, of funds coming out of China.
Hyundai India stock listed at a steep discount after its IPO. The country's largest in history was subscribed 2.37 times. The management, however, is confident of long-term wealth creation for its investors. My colleague Tushar has more on what the management had to say after the listing.
So essentially, the Hyundai India management is not so cognizant on the stock's performance on listing day. Remember, it's down about 6% as of close today. But the company is more focused on what comes next. First of all, the company was speaking on electrification. Hyundai India wants to build the entire EV ecosystem in India. Remember, the company has invested in a unit of Exide Industries to manufacture batteries, lithium-ion batteries in India. That's on the battery side. On the product side, the company aims to launch the Creta EV in the fourth quarter of fiscal 2025, and 3 more electric cars will actually follow in quick sequence. After that, the company is earmarked about 32,000 crore in capex. Of this, about 6,000 crore will go in Maharashtra. Remember, the company has acquired GM's Talegaon plant near Pune, and about 26,000 crore rupees will go into its existing plant in Chennai, which includes an investment towards building an EV ecosystem. What the company also said, that the Chennai plant is flexible enough to set up EV assembly lines at the get-go, but it didn't comment on how many Creta EVs will be produced in the first year itself. Hyundai is the exports hub for the emerging markets where Hyundai operates, but the company is not willing to comment on whether it will be the EV manufacturing hub across the world. Remember, Ford has come back into India, and Tamil Nadu has said that the company is focused on making the country and making the Chennai plant the EV manufacturing hub across the world. The company also spoke on the SUVification of the Indian market. It said that it wants to be where the customer is, actually refusing comments on whether the country is moving towards SUVs only and a slow death of small cars. The company said that it will make small cars, it will make sedans, it will make SUVs, because that allows them to put in different powertrains as the customer demands. So while a Exter or a Neos or a Aura has petrol and CNG powertrains, the sedans, the SUVs in Creta and the Alcazar have petrol and diesel powertrains. The Verna has a petrol and turbo powertrain. So all of this contributes towards the top line of the company, as well as allows the company to deliver higher margins given the higher average selling price of SUVs. The company, however, declined to comment on what is its margin goals. The company currently stands at about 13.5% margins, but is not willing to get too close to about 15% as of now. How the rest of how the stock performance tomorrow, we have to wait and watch.
Yeah, right, Tushar. So following the Hyundai IPO listing, Tarun Garg spoke on the booming SUV market in India and how Hyundai is driving this growth.
When we introduced Creta in 2015, SUVs used to contribute only 13% to the overall market. And Creta changed it all, and today SUVs are contributing 50 to 52% of the overall market. As far as Hyundai is concerned, we ended last year, 23, with 60% SUV contribution. It has been continuously going up. It has reached 68%. And like you mentioned, in September, it already reached 70%. So the volumes are continuously growing. We introduced the Exter last year, which gave us great volumes. This year, in last two months back, we introduced a dual-cylinder CNG in Exter, which is receiving some great response. Last month, we introduced Alcazar facelift, which is again receiving some great response. So we believe that there is still a lot of upside to the SUV space.
Adani Energy posted a strong set of Q2 earnings. The net profit of the company is up 172% at 773 crore rupees versus 2,084 rupees. The revenue of the company is up 68% at 6,184 crore rupees. The EBITDA is up 19% and the EBITDA margin is down 1,200 basis points. So Adani-owned Ambuja Cement has acquired Orient Cement for 8,100 crore rupees to expand its pan-India footprint. The acquisition will add 16.6 million tons to Ambuja's annual capacity and will be funded via internal accruals. My colleague Mihika joins in with all the details.
So the update came in this morning, and Ambuja Cement will acquire 46.8% in Orient Cement, and the acquisition value is at 8,100 crores. Now the transaction will be funded entirely via internal accruals of the company, and they'll be making an open offer at 295 rupees per share, which is at a premium of Orient's yesterday's close, and this will trigger 26% acquisition of public shareholding, and it will this acquisition will add 16.6 MTPA of capacity for Ambuja, and acquisition will help Adani Cement as a whole to take its operational capacity to 97.4 MTPA. A little bit about the deal valuations. Well, if you take it at operational cement, just the 8.5 million tons which is currently on stream, the valuations come around $114 per ton. But when you talk about even the planned capacity, that's at $58 per ton, and both these values are lower than the greenfield setup cost of $110 to $120 per ton. A little bit about Orient Cement. Well, current cement capacity is at 8.5 MTPA. They have also ready to implement capacity at 8.1 MTPA, which was taken in the deal valuation calculations. Clinker capacity is at 5.6 MTPA, and the potential cement and clinker new capacity stands at 6 and 4 respectively, and they have presence across Telangana, Karnataka and Maharashtra. Now, when you talk about the benefits for Ambuja Cement, well, the acquisition will help Ambuja Cement increase its presence in South and West India. It will increase its pan-India market share by 2% additionally. And Orient also has large-size, high-quality limestone deposits at Chittorgarh to support capacity in northern India, which is around 6 MTPA. And the acquisition will improve the overall return on capital employed for Ambuja. When you look at it from Orient Cement's perspective, well, the opportunity will improve operational efficiency via a higher green power mix and domestic coal linkages. It will also help in clinker cost reduction potential of around 150 rupees per ton, which is positive for the company's margins, and it also helps them achieve their target EBITDA per ton of 1,500 rupees by FY28.
Right, Mihika. Market regulator SEBI could come up with proposals on SME IPO oversight this month. Earlier, whole-time member Ashwini Bhatia reiterated concerns over increasing participation of retail investors in SME IPOs. So specifically highlighting the risk involved, Charu Singh joins us with more details.
The Security and Exchange Board of India, the market regulator's stance on SME IPO seems to be very clear, as they want to bring in more stringent and stricter rules to deal with the risks and volatility associated with the same. Now, the whole-time member Ashwini Bhatia was speaking at the Morningstar Investors event, where he mentioned that a consultation paper with stricter rules could be up on the website very soon, and if they are able to do it soon enough, it could be out this month itself. Now, this is not the first time that the market regulator has said anything about SME IPOs or a consultation paper about the same. The conversation regarding the same has been continuing for months now, and there have been several advisories and warnings also given by the market regulator to the investors and the investment bankers associated with the SMEs as well, saying that there are several risks and volatilities and issues associated with SME IPOs, and these need to be addressed, and caution needs to be practiced while being associated with these IPOs.
Yes, absolutely, Charu. So F&O should not be a national pastime was also the word coming in from Ashwini Bhatia. He hit out at the irresponsible F&O trading, citing that 93% of investors lose in such trading practices.
India accounts for the largest volume of F&O globally. We are #1, and globally also, more than 50% of the F&O volume happens in India. This is a crown we do not wish to wear. F&O cannot be and should not be a national pastime, which actually means that savings of retail participants move into the pockets of institutional hands.
Agricultural gold loans could soon fall under the RBI's radar, as there has been a rapid rise in these loans against regulator gold loans. Subhana Sheikh brings the details.
So after the RBI actually increased scrutiny on personal loans, MFI, top-up loans, gold loans, agricultural gold loans could be next on the central bank's radar. Now this is because agricultural gold loans, have been growing rapidly in the banking system. Mainly public sector banks, regional banks, and non-banking finance companies are said to have been major lenders in this space. Now agricultural gold loans are basically crop loans or loans given for agriculture or allied purposes against the pledge of gold jewelry that falls under the PSL category of banks. Now, according to the circular, and sources are also telling us that actually the regulator is actually concerned about the misuse of funds, the misuse of loans by these borrowers, in this space because the outstanding dues of agricultural loans are far higher than crop loans. Now, in the circular that it had issued last month, they basically advised lenders to follow these practices and processes and adhere to these norms. And also, RBI's warning on gold loans is also being considered. That agricultural gold loans the growth of agricultural gold loans could actually taper down going forward. So, yes.
During the address at NDTV World Summit, Prime Minister Narendra Modi acknowledged market guru Mark Mobius's call for substantial investment in Indian stocks. Later, Mobius articulated his love for India, attributing its success to Modi's initiatives in digital infrastructure and economic liberalization.
यहाँ जो भारत को सबसे ज़्यादा प्यार करते हैं, ऐसे श्रीमान मार्क मोबियस जैसे पार्टी एक्सपर्ट यहाँ मौजूद है। वो जिस प्रकार भारत में होने वाले इन्वेस्टमेंट को लेकर उत्साहित है, उसका बहुत महत्व है। जब वो ग्लोबल फंड्स को कहते हैं कि अपना कम से कम 50% फंड भारत के शेयर मार्केट में इन्वेस्ट करे, तो इसका एक बड़ा मतलब है, बहुत बड़ा मैसेज है।
What he got right was trying to be all-encompassing to all the people of India through digitization.
The first thing is digitization.
That, I think, was a revolutionary idea and concept that included everybody. He was inclusive, and it accelerated what was happening in the market.
Loss of over 500 crore rupees has been incurred so far due to continuous bomb threats on flights. This is according to sources in the Civil Aviation Ministry. So far, around 200 flights have received these bomb threats. Aditya joins in. Aditya, what else have the sources said?
Yes, you're right. So basically the sources are telling NDTV that around 500 crores rupees of losses have been incurred by the airlines due to these hoax bomb threats. Now, these hoax bomb threats have been continuing for last few days, because of which over 200 flights have been either diverted, cancelled or delayed. Now, when a flight is diverted or makes an emergency landing, there is a due process involved in it. And this under this due process, basically the airline has to conduct the security checks. When an emergency landing is made, the airport charges are incurred, the landing charges are incurred, parking charges are incurred, the passengers in some cases have to be transferred to hotels, the transfer charges are incurred, hotel charges are there. Apart from that, the food has to be provided to the passengers. So all in all, there are multiple factors that get involved when an emergency landing is made, and due to these multiple factors, right now what we are gathering from the sources that are telling NDTV that around 500 crore rupees of losses have been made in these few days. Now, if these hoax bomb threats do not stop, the financial turbulence for the aviation sector is surely going to move ahead and create a lot of chaos for the sector. And remember, this is the festive season. The prices also might go higher.
Right, Aditya. So, moving on, Mark Mobius was on a visit to Yashobhoomi in Dwarka, India's biggest convention center, where NDTV Profit's Rishabh Bhatnagar caught up to gauge what the market guru had to say about it.
Well, the first thought that comes to mind is that I can see that you've learned from the past and you're building for the future. And the reason why I say that is I visited many conventions around the world. And one of the biggest problems, of course, the single most biggest problem is access. Getting to the convention center, wherever you may be, in whatever city. Traffic problems and all sorts of things like that. So one of the nice things about this venue is that it's going to be easy to get to. You have a subway going directly into the convention center. You got a highway nearby. You got the airport nearby. So that's number one, I think, for a great convention center. You've got to have easy access. The second thing I've noticed in going around the world is that most of these conventions don't have enough room to accommodate the size of the conventions, which, by the way, are getting bigger and bigger as we go. And here again, you have an incredible amount of space to so that you can habitat a great number of visitors and a great number of exhibitionists. The third thing is that you're planning for the future because you've got a vast amount of land in the area where you will be able to expand the exhibition space when and if that becomes necessary, because you already have big space. But also you're going to have hotels, apartment buildings, and so forth, which again will make it so convenient for people to come here. So I would say that this is probably now becoming the preeminent exhibition space in the world because of those features.
Awesome. Mark, now as investments pick up in India, right, more foreign companies come in, set up, do you think India needs more Yashobhumis?
Yes, of course. But I think this will be able to accommodate most of the exhibitions for the time being, because you've got an incredible amount of space. And of course, New Delhi is the capital, so you have an incredible political influence, and as well as the fact that so many of the states in India have representatives here. So it's an ideal space to be, a place to be as well for a convention center.
Zomato co-founder and CEO Deepinder Goyal has officially launched his new health venture called Continue. In a statement on social media, he clarified that this project is a personal initiative focused on health and wellness. Continue was registered in April 2024 under the name UPS Love Advisors, with Goyal holding a 99.9% stake in the company. The remaining shares are held by Ashish Goyal, and the venture has been seeded with an initial capital of 50 lakh rupees. As of now, Continue serve as Goyal's personal wellness team, but this could be a glimpse into a bigger plan in the health and wellness industry. With the winter season approaching, the air quality in Delhi has dipped once again. AQI in the capital was recorded at 300, placing it in the very poor category. At the same time, AQI in NCR, including Ghaziabad and Noida, was recorded at 246 and 228 respectively. A thick layer of smog has engulfed Delhi and its neighboring regions. River Yamuna is also seen covered in a thick layer of toxic white foam, a condition which arises every year around this time and has been persistent concern for years now. Prime Minister Narendra Modi is in Russia for a two-day visit to attend the 16th BRICS Summit, which is being held in Kazan from the 22nd of October. This gathering of emerging economies will see PM Modi engaging in a series of high-level meetings, including bilateral talks with Russian President Vladimir Putin and other global leaders, including Chinese President Xi Jinping. PM Modi said that India values close cooperation with BRICS, which has emerged as an important platform for dialogue and discussion on a range of key issues concerning global developmental agenda. Well, that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
At the NDTV World Summit, and looking forward to a conversation between two amazing investors, Mark Mobius, Ramesh Damani. Gentlemen, what are you planning to talk today? I would love to not be the fly on the wall, but be in the audience as well. Ramesh, you want to start? What are you looking forward to?
Sure. Thank you, Neeraj. Lovely to be here, of course, and it's such a great honor to be interviewing Mark. He's been variously called the Indiana Jones of emerging markets because he's always traveling, living out of a suitcase, but always discovering very exciting companies. So I want to ask him about two things, basically. First, what did John Templeton teach him? Because that was his first boss. And secondly, what does he feel about India? A few years ago, he was very bullish on India. Does he continue remaining bullish, or does he feel a bit let down now? I want to get his opinion on what is going on in India.
Yeah, we'll hear that in the interview, Mark, but quick 20 seconds. How do you feel about India? How do you feel about this summit?
I feel very bullish on India and continue to be bullish. As you know, it's been the last 5 years or more I've been bullish on India.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future,
as we've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
If you want to be in the money.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
We're speaking today with Lalit Kejre. He's co-founder and CEO of Groww. And for those of you who don't know or are living under the rock, Groww is one of the fastest growing platforms for financial inclusion, for trading, giving quite a bit of challenge to other big players out there. Lalit, we're very excited to speak with you at the NDTV World Summit because in this conversation, we not only get an opportunity to capture what disruptive technology can do, but talk about, I think, the biggest talking point in living rooms right now, which is, aaj market mein kya ho raha hai?
No, first of all, thank you so much for inviting. Do you want me to answer that question? Market mein kya ho raha hai?
Before we start, do people randomly come up to you and ask you, quick tip hai kya? Kya stock kharide? Because you run Groww?
People used to a lot, but then they got just so bored of our answers that now they have stopped asking those questions.
Okay, let's start with the story of Groww. Tell us, of course, you started in 2016. That was a time, markets have been in a bull run for a while, undoubtedly, but that was a time when I think online trading had not become as prevalent perhaps as today. Yes. What was the idea behind it, the thought process?
Got it. So we were working with Flipkart, and personally I started investing like when I was in second year of my college here in Bombay around 2000, 2001, right? So was really passionate about investing and found a good set of folks, three awesome co-founders. All were passionate about financial services and so on. And we saw that we were also lucky to see how e-commerce grew in India, right? Everything becoming online and so on. And then we looked at the penetration of, how many people are investing in India, mutual funds, stocks, and so on. And then we saw, like on Nifty 50, the constituents of financial services is like very large part of everything. And in the hindsight, if I see a lot of dots connected, right? And there was this opportunity to kind of create a crazy big impact, leveraging our technology to reach out to like millions of customers, millions of people across India. So that was the starting point.
Did you expect this kind of a trajectory, or that there would be this huge quantum of Indians across, it's not just middle class Indians, everyone now has some equity exposure or the other. The boom has been immense. Did you expect that to happen, or do you think that that's something which came about in a post-COVID era? You were in the right place, right time to ride the wave.
So we were definitely lucky. And by the way, we are still like penetration-wise, we are still very, very low compared to...
Agreed. Relatively, relatively, I would say.
Yeah. So if we compare with 2016, right? Bunch of things played a very big role. Like, as you said, markets have been kind of very, very good. And then a lot of fundamental changes happened in India. And especially on the digital India side, like, Aadhaar KYC happened, and UPI came, and a lot of education started happening, a lot of campaign, mutual funds and all, right? So there were some signals that, this wave, like this is a very, very kind of long-term wave, and this is India's time and so on. Did we expect this much? I'm not sure, because we did not think too much, like, where will we in 8 hours? I mean, of course, there were plans and so on, but I think we were lucky, yeah.
Yeah, so right time, right place. Right now, there are also concerns, Lalit, about, so for example, futures and options or derivatives trading. All the regulators recently trying to clamp down a bit on the kind of retail participation. I just want to understand what is the kind of volumes you see on a platform like Groww? Have you seen a lot of interest or excitement about weekly futures and options, for example, and the impact that you see of that coming down?
You see, Groww is a kind of very broad-based platform. It has like number of products.
Sure.
We have mutual funds, stocks, and then of course derivatives. There are like 15 to 20% of our customers who do derivatives as well. And as you rightly said, like over last few years, the interest kind of is high, and regulator, as you again said, that regulator thinks about the customers, thinks about the investors, and kind of more or less aligned with our kind of thought process also, because what matters is the long term. How are people making money in the longer term and so on. And yeah, so
Will you have an impact on volumes, or do you see those customers moving somewhere else? And do you think that retail investors needed to have been protected from things like weekly options?
I think, there are certain things where customer protection is very, very important. So from that perspective, I think we are in the right direction. So your first question about will it impact? Of course it will impact, but how much? What will be the degree? I mean, your guess would be as good as mine or anybody, because there are a lot of second order, third order effects of any rule that comes into picture and any kind of change that happens, right? So we don't know about that, but of course there would be some impact. Yeah.
Give us a sense of the kind of growth we have seen in equity investment across India, and because you're at a position where you can get that expanse. It's not typically, it used to be maybe Mumbai, Gujarat, some pockets of the country where there were avid equity investors. That's not the case anymore, is it?
Yeah. So internet plus Aadhaar, UPI, like they have like lowered the kind of barriers like anything. And then folks like us came who made it very easy, very transparent, and a lot of education campaigns and so on. So earlier, as you are saying, like investing was limited to cities like Bombay, Bangalore, or some cities of Gujarat and so on, right? But now You go to any like tier 2, tier 3 town, a lot of customers today are coming from like smaller cities. Why? Because all the information arbitrage that was missing, like now it's available to everybody at their fingertips. You can open Groww app and see, what is a mutual fund, what is a stock, what are the related parameters about them, what is their fundamentals, what are technicals, like anything, whatever you want is available. So that's a big fundamental change that has happened, and I think it's not like relatively new. I think the long-term trend started around that 2015-16, and again, we were lucky to kind of start at the same time.
Yeah. Lalit, recently, I think you've had a big move. Our conversation and our context today is about the India century. And we have seen in the last few years, a lot of startups and young companies choosing to headquarter outside India for tax reasons, etc. We are seeing right now a trend of a ghar vapsi, in a sense. And your company is one of them that has now decided to move your headquarters out of US to India. So first of all, congratulations on that.
Thank you.
And tell us why.
You see, Groww is an Indian company. Customers are in India, management is in India, all operations are in India. So it did not make sense to kind of be outside India. We had to go, we were a YC company, so we had to register in the US, but now there is no reason why we should not be in India.
You had to pay more taxes to come back though.
Yeah, I think in long term, that's a price you pay. But in long term, I think it would be very good for us.
It's also paving the way to tap the equity markets, just setting up for an IPO by coming back?
Maybe in some time, yeah. But yeah.
It's on the cards.
It's somewhere down the line, but we don't know when.
Okay. I'm trying to fish a headline out of you, Lalit, which you're attempting to avoid. But nevertheless, I'll go with somewhere down the line. So yes, the Indian equity investor is the center of all attention. IPOs are making, a huge inroad to investors, mutual funds as well. What do you think is the next big phase of growth? Will it continue to be mutual funds? Will it be IPOs? And will this confidence of investors sustain? Because we've seen in the cycle of equity markets in India that a bull run comes, one bad phase, and investors flee. Yeah. This time, do you think the things are different?
See, again, very hard to predict the future. We will come to know on the next products. I think mutual fund is the most beautiful product for retail investors, at least, right? And then there's a lot of innovation that is going to happen there as well. Penetration is still very low. Like we compare ourselves with, let's say, 2016 or 2020 and so on. But if we compare with other countries, then it's still like very low. Like people are still kind of not beating inflation. Right, and retirement problem is still not solved, and so on. So there's like still long way to go, and I don't know whether there will be new products or not. But with existing products itself, I think there's kind of a lot of penetration. And that's where like companies like Fintech, where the cost of serving customer is very low because of tech and everything, right? Where you can penetrate into kind of deeper sections of the country. Like that's the big kind of innovation that is going to happen.
Yeah, but you're also in a very competitive space because the moat is low, right? Because the digital infrastructure exists. You have a fair number of platforms that make it very easy for you to invest at a click of a button on your phone while you're traveling. How does Groww aim to remain head and shoulders above or have a competitive edge?
See, the biggest thing about financial services is trust, right? You're compounding trust. And if you continue serving customer really well, if you continue kind of being on the side of the customer all the time and keep compounding that trust, I think that's the brand that you create. Or like if you look at all the financial services, large companies in India, why do we kind of go to them? Because they are trustworthy and they have very, very good service and so on, right? So, and it's very hard to do that, like continuously understanding customers' need. like there is a saying in our product world where, customer need is always ahead of you and you are just running to kind of meet it. And my strong belief is that if you continue doing that, and other thing is like there's a big playground here. Like India is a big playground right now. Like India growth story is like multi-decade story is what like you have to believe, right? And and continue kind of building for the customer.
So what is the next big exciting announcement we're going to be hearing from Groww, or the next innovation that you're working on, Lalit?
See, I would be very happy to tell if we kind of work that way. But so the way we work is like we work on bunch of things, right? There are a lot of customer feedback that we keep getting. So we go out and meet customers. Like I personally travel across the country, meet customers in all the cities and so on. And then we invite customers and we come with like hundreds of ideas from those, and then we kind of keep churning them. So it's like more like an innovation factory than one big idea that I can announce here and tell this is going to happen. So it's kind of very boring under the hood, but then what comes out is like much more exciting for customers.
I think talking about customer feedback, is the daily volume of people complaining that their tech is glitching or their app is glitching, is that your biggest pain point? And not just for you, I think across the industry. Because every once in a while you see this Twitter trend or this X trend coming in. XYZ company glitch, my trade got stuck, I lost so much money, please refund. Is that a big problem that still needs to be sorted, even as 99% of the time, things are working smoothly?
I think more important than is the customer love that we get every day. Like, of course, like when you're building something very kind of, tech-based and very high scale, there would be anomalies. But I think what gives us energy is the kind of positive feedback we keep getting every day. So it's unfortunate that all the negative things are pointed like much more, but like, I get like hundreds of emails per day, build this, or this is very good, and you should get this feature done. And customers are also very vocal. One beauty about building a product where customers care about you is like they are very vocal about what they want. So in general, in consumer product, it's very difficult to find what customers want. Right, you will have to use various tools, but in our business, at least, that is like very, very. So we are grateful to customers in kind of talking about all the things that they want on the platform.
But is the biggest area to work on for the industry as a whole on smoother transactions and more tech-enabled transactions? What is the next leg?
There's a lot of investment that is needed. See, infrastructure is very complicated. So. Like we have almost like 400 engineers working on just that, kind of getting things like very perfect, because it's about customers' hard-earned money. And that's like the promise, like reliability becomes the number one kind of item in your roadmap all the time, right? And rest everything is secondary.
Fantastic. Thank you so much, Lalit. This is truly an example of innovation driving a business that is growing, a hallmark of growing India. Thank you so much.
Thank you so much. Yeah.
Well, Kunal Bahl doesn't need much of an introduction. He's a poster boy for Indian startups, and startups are perhaps the one that defines India's future, the entrepreneurial spirit. But with all that introduction, I was just having a casual chat with Kunal, and he's made me very nervous about being a competitor. He says the one thing he hasn't done and he wants to do in life is to be a newsreader. So I don't know if you're going to put all of us out of jobs. What's the plan on that?
Yeah, I think maybe AI will put the newsreaders.
We'll have an AI Kunal to get down to it. Kunal, but seriously, the topic of the conversation today is about indie-cons. It's a term that you've come up with because a lot of the startup jargon is, business as we used to call it at one time, it became startups, is a very American jargon. And given the kind of presence we've had in India, perhaps time to come up with our own, jargon as well?
Yeah, firstly, thanks for having me here, Veera, and to the NDTV team. This is a great new forum you've set up with the NDTV World Summit. We've been celebrating unicorns for many years, but if you just trace back, to understand why does this exist? Why does this term exist? This term was actually invented by a venture capitalist in the US, in the context of the US, where companies over $1 billion are called a unicorn, right? Which is actually a mythical figure. And as I was reflecting on it over the years, having built a unicorn, having funded many companies which became unicorns, I just realized that why are we celebrating these when actually what our country needs right now is lasting, enduring businesses where startups are built off the back of real revenues and real profits. Right? There was a time 10 years ago, the ecosystem was too small for companies to become profitable relatively quickly. That has changed. 10 years ago, we had 100 million internet users in India or 150 million internet users in India. Now we have over 1 billion. India's income levels have gone up. We are seeing companies who want to be profitable become profitable in 2-3 years from the starting point. So then why is there an obsession with a currency that is not ours, right? An amount which is irrelevant in our context, like why 8,300 crores, right? Why? Because that is what a $1 billion is. Why are we obsessed with 8,300 crores? Why are we obsessed with a currency that is obviously not ours? We generate revenues and profits in Indian rupees, not in dollars. And a mythical figure. If you think about it, like it doesn't make any sense. Rather, isn't it better we build businesses with the intention of making them lasting and enduring and aim for goals which enable us to get there? So a 100 crore revenue business which is profitable. Because the moment a company becomes 100 crores in revenue and is profit making, it is very likely it's not going to go out of business, right? And will keep going from strength to strength. And what India probably needs right now is not 100 or 200 or 300 unicorns or 500 unicorns. We need 10,000 indicorns, because that will form the bedrock of the startup ecosystem. Right. And that will create the steady flow of companies that eventually become listed companies and large businesses.
As you explain that fundamental, and it's a fascinating concept, but it's also an attitudinal expression, right? Like yesterday we had the Prime Minister here speaking about AI is not just for artificial intelligence, but aspirational India as well. When you come up with jargons and terms which are local in nature and something that's homegrown, it also reflects that aspiration.
No, absolutely. I think the Prime Minister has made an indelible contribution to the startup economy. When I started my startup journey, I was 23 years old in 2007. There was nothing known as a startup. There was no nomenclature called a startup, however strange that may seem right now. You either did a business or you did a job, right? And the business was typically the one you inherited or you joined your parents' business. There was nothing sitting in the seemingly twilight zone of this is not your family business and it is also not a job. There was no word for it. Imagine. Startup came into national parlance only around 2015 when the Startup India initiative was evangelized and launched by the Honorable Prime Minister. And because of that, startups gained legitimacy. They gained recognition. Suddenly parents in small towns were not aghast the moment their 23-year-old child who went to IIT after a lot of struggle by the parents saying, I will not join McKinsey or Goldman Sachs or Microsoft or Google, and I'm going to start something and I'm going to make zero money for the next few years, and likely we are going to be in debt during that period. They were no longer aghast at that. And that contribution, I think, significantly goes to the Prime Minister and obviously the role models that have now become available to the younger generation of founders.
And for instance, I was wanting to ask you, when you come up with a term like snap deal, it's again something that's inspired. You studied in the US and it's inspired by that, the American influence. Over the last, let's say 15 years, what's changed at that psychological level? I mean, is it the American influenced or American educated or one who's gone abroad, who's come back here? I come from Bangalore, where you have most in the startup world speaking with an accent. Is that changing really in terms of how Indian homegrown startups are seeing themselves?
What has really changed over the last 15 years, I would say, is until about 2017, before the 4G revolution came about, we had very few internet users in India, relatively. And it's not only the number of internet users were fewer, the usage of internet was a lot fewer in terms of per GB per user or GBs per user per month. That took off after the 4G revolution that happened around 2017. And suddenly the opportunities, which were more domestic in nature, exploded. I always say that India has mouth-watering opportunities, but eye-watering challenges. And that is very evident in the startup economy as well. But the mouth-watering opportunities also didn't really exist as pervasively as they do now prior to 2017, because there weren't just enough connected users in our country who were using the internet enough. Because how will you digitally provide services and products if there aren't enough people to provide them to through the digital medium? And so what has happened post-2017 is increasingly, because I've been investing in companies, while at my heart I'm an entrepreneur, I'm a founder, but I've also been supporting the startup ecosystem by investing my own capital along with my co-founder Rohit. And I would say pre-2017, a lot of the ideas were, Uber for India, X for India, Y for India, etc., where it was business models that were proven and they seem like low-hanging fruit to build in India. Nothing wrong with that. However, what has changed post-2017 is a lot of domestic challenges and domestic issues have been identified by founders and turned into opportunities. And now what we see is mostly like 80% or 90%, if not 95% of the companies we meet who come pitch to us at Titan Capital for funding are solving domestic problems and going after domestic opportunities. That is so encouraging, because if you now fast forward 5 years, 10 years, 20 years, you imagine the kind of companies, products and services that are going to be built by the upcoming generation of founders.
And so would you believe that it's easier to be an entrepreneur today than when you started off? Would you believe that your journey would have been faster if it was now than then?
I don't, some things change for the better, some things change for the worse. I feel that back then, the good thing was that there were fewer companies, so you could take your time to build something. But the bad thing was there weren't enough users, right? So you had to, sort of slog it out for many years. Now it's the inverse of that. The inverse is that there are lots of users, there's disposable income, which is a lot higher. However, there is insane amount of competition. There was very little financing, like venture capital available easily. Now I think in Bangalore, where your city, I think you throw a rock, it'll throw up money from the ground.
It throws back dollars. No, but when you talk...
Well, hopefully rupees.
Hopefully rupees, yes. Yeah. Not in millions, but in crores. Yeah. But, when you say, when you're talking about money, the one way that startups have traditionally raised money is through venture capital, right? Now, you have had a successful IPO as well. How does that change? I mean, post-IPO, how does it change your life? Do you wake up in the mornings at 9:30 and check the Sensex, whether it's red or green? Or, how does that change? And also, what's the learning for the startup, ecosystem itself in terms of raising funds?
Yeah, I think that's a great point you bring up. For the longest time, there was a lot of, I don't want to use the word disdain, but a lot of question marks about the endurance of the startup ecosystem. That is it all very transient and fleeting and opportunistic, or is it something which will be long-term, lasting, and like, are we building forever companies, right? Like a lot of the listed companies are forever companies. I think what the IPOs and successful IPOs of many of the companies that have listed, and we've been fortunate that ours has also been received very well this year, of our software company, Unicommerce, is that it is now, the tide is turning, the tide of perception is turning, that the skepticism is turning into, maybe they are building good companies, or maybe these companies will be lasting companies. Maybe these companies are not fly-by-night operators. Maybe the founders and operators of these businesses didn't get into it just to get rich, but they actually are purpose-driven and are committed to building their companies for 5, 10, 15, 30 years, like the traditional industry promoters have been, right? So I feel the IPOs are really, really helpful in raising the bar, raising the ceiling for the upstarts, the new companies, to say, where do I want to be? Because earlier, it seemed like the bar of performance was, did I become a unicorn or not? Now the bar of performance is, of hyper performance is, did I build a business which was solid enough, profitable enough, and with great governance and great culture, that it has the ability to go public.
So when you are a venture capitalist and you're looking at an investment, would that be a critical question? Look, I know that this can possibly make money in the next 3 years, but is this a resilient idea?
Absolutely. I think you hit the nail on the head. When we meet companies, we are meeting them when it's just like two guys and a PowerPoint and maybe like 2 lakhs of revenue. I remember when we invested in Mamaearth, which was one of our investments, which is now goes by the corporate name of Honasa. They were doing 5 or 6 lakhs of revenue, and really smart founders, small team of 8-10, including the two co-founders Varun and Ghazal. In our head, what was going through our mind was, as it goes through when we meet other companies, in 5-6 years, can we see this becoming a public company, right? 5-6 years is too short a period of time, but to their credit, they became a public company in 7 years. But our first step, we think, is, can this become an Indicon, like 100 crores of revenue and profitable? Because then we know from there it is just projecting out a growth rate till the point they become large enough that the public markets would find them of an acceptable scale and size to come in to list.
Interesting that you make that point, and as you point that out, make that when you were answering that question, there's also the rock bottom that a startup or an entrepreneur hits through, right? In your own personal life, and not from a theoretical point of view, was there a moment when you turned around and said, but you worked with companies before you started off as an entrepreneur. Was there a moment when you said, no, look, I made the wrong choice. I shouldn't have been here. And how do you deal with that moment, and how do you get over it?
Yeah, I think any founder who says that they haven't gone through their low points is lying. Everyone from the outside thinks a successful company started here and came here and it was a straight line. It's actually a zigzag, up and down, twisty-turny journey to get to an eventual, what is perceived as success externally. We've had many, many low points. I think we may have run out of money at least 6 times over a 16, 17-year period. There have been so many near-death situations. But I think at each point, the key is to find the courage to continue. Many times you'll find yourself at the bottom of the abyss. And many people don't know what bottom of the abyss actually feels like. Bottom of the abyss feels like things are so bad, there are no answers. Any advisor, well-wisher you go to, even they can't advise you or what to do. Even they are almost hinting, chalo band kar do. Right? There's nothing you can read, no podcast you can listen to, no interview you can watch that will inspire you or give you ideas of getting out of that rut. That is what bottom of the abyss looks like, and most people have not been there. And it's at that moment where you're at the absolute bottom, finding that little bit of courage to continue is what is needed. And every time we found ourselves at the bottom of the abyss, me and Rohit and our team have found that courage to continue. And we've realized before you know you're out of the hole. But you need to always believe in yourself that we will come out of it this time also.
And that not only makes a strong company, resilient company, but it also makes a resilient individual. And you've been inspired a lot by Mr. Tata. You were sharing as well. That kind of a message that you got, or possibly something that has changed in Kunal when you started your journey to now, what would it be?
Yeah, I think Mr. Tata has left us with an enduring legacy of contributions and wisdom. And I think, at least for me, one of the things which is very, very endearing about my few interactions with him over the last many years that I knew him from 14 when he invested in our company was, just his humility and his memory. So I'll give you an anecdote, right, which is a really interesting anecdote. When I met him for the first time in 2014, I was in his office in South Bombay, and after we had a short discussion about our business, he said, I'd really love to invest if you will have me. So his humility is always like, he didn't assume that I'm Ratan Tata. Of course, if I tell you I want to invest in your company, you will take it. Of course, I would take it, right? But he never assumed that. But as the meeting was ending, he asked me, is there any other question you have? I said, I just have one request. He said, what is the request? He said, at some point, I would love for you to come and meet our team because it will change their life, right? Like they could never imagine meeting Mr. Tata. He said, okay, I will do it. So some time passed, he got really busy with some of his internal Tata responsibilities over the next couple of years. So he was not making that many trips to Delhi. And then COVID came.